June and has since repeatedly accused each other of violating is set to expire today. Dan Murphy joins us now. Dan, it feels like the Memorandum of Understanding isn't so relevant right now. It has been kind of dead for some time, many would say. There's seeming more focus now on what we could get from Scott Bessent when it comes to sanctions and economic pressures on Iran. What are we going to expect this week when it comes to that?
Ritika, good morning. Well, the clock has run out on this 60-day Memorandum of Understanding between the United States and Iran. But even so, as you say, this was a deal that was effectively dead on arrival. The agreement was signed back in June as a framework for de-escalation, but problems arose as soon as it was signed. And what followed was weeks of both Washington and Tehran accusing each other of violating its terms, including over who controls Hormuz. And the prospects of a revival also look very good now, with the US and Iran continuing to fight a narrative war now. This, once again, is a situation where we have no war, but no peace either. On Friday, President Trump said that pretty soon he could declare the Strait a territory. He also later suggested that the US may simply keep control of the waterway even when the war comes to an end. Trump saying the American naval blockade already determines which ships are allowed through. And of course, on the Iranian side, Iran has flatly rejected that claim, saying Trump can't just take Hormuz by tweet. And that confrontation at sea is also becoming increasingly dangerous as well, especially for the UAE. An ADNOC vessel came under attack in the Strait on Friday. This is the latest in a series of strikes targeting the UAE energy company's ships. Saying there were no injuries and the situation was brought under control. The company was previously saying 15 of its vessels have been hit by missiles or drones since the conflict began. Interestingly, the UAE also signaling it's not going to be drawn away from its current course, though. The UAE presidential advisor says these repeated attacks will not deter the UAE from what he called a balanced policy built around deterrence, diplomacy, and international law. Dargash also vowed the UAE will protect its freedom of navigation, you can scrub the walls and change the sheets. So the question now is, the whole damn place brand new. As you say, Treasury Secretary Scott Bessent saying new economic measures against Iran are coming this week, basically putting fresh pressure on Iran just as that 60-day we'll find a way. Expires. So we're watching and waiting to see exactly what could come forward here. I've spoken with analysts this morning who suggested we could see new sanctions measures being enacted here, perhaps more pressure on Iran's remaining oil exports as well. Of course, all eyes are on what the Treasury Secretary will announce, but at the same time, on the diplomatic front, we also have Jared Kushner in the region over the next few days. He's talking not just on Gaza, but also Israel. Jacket from the winter as well, so a lot to keep in focus as still smells like her.
All right, thank you so much, Dan. Let's get more now with Bjarne Shieldrop, who's a chief commodities analyst. My jacket holds it closer now. Thanks for joining us. First, when it comes to what we're seeing in the Strait of Hormuz, shipping data showing a sharp drop in traffic over the weekend.
Funny how the clothes remember
anytime soon. How much disruption are you expecting? What are you seeing right now, the overall state of play?
No, I don't expect it to open anytime soon. I mean, just the fact that the US now reverts to economic sanctions rather than bombs and rockets tells a tale that the US is out of options. So it's hard to envision any sort of near-term reopening, and Oman and Iran is continue to negotiate over how to administer the Strait of Hormuz in the future, but that doesn't mean it's going to reopen, as Iran says that, the US has to comply with the other demands in the Memorandum of Understanding signed in June. So the big question is, of course, how much oil is actually going through the Strait of Hormuz? And, previous estimates were very low, and now increasingly the world and analysts are realizing that it's quite a robust amount of oil that is sneaking out at night with the transponder off. And that is, of course, why the oil price hasn't sort of exploded to $150 per barrel or higher, because oil is flowing out of the Strait of Hormuz, and it's probably going to continue.
So what do you think then would amount to a move higher in oil prices? As you mentioned, I mean, they've kind of trading now, look at Brent just below $89 a barrel. But what happens to get that shift to maybe $120, $150?
Well, I think several elements. One is, of course, that the flow of oil out of strategic reserves in the OECD, in the US and other OECD member states of the International Energy Agency, that flow of oil is now starting to taper and reduce. I mean, it was running at like 2 to 3 million barrels out of these stocks for a while, and that, of course, helped as well. Large decline in Chinese crude imports also was a hugely important factor. So, you know, if China started to import more normally and we don't get more oil from strategic reserves, that would definitely strengthen the oil price. But I think the most important is if Iran were able to hit more of the ships trying to sneak out at night in the Strait of Hormuz, that would definitely be a very bullish element.
Björn, what about the fact that we have now multiple choke points, 2 choke points now, right? At least, like how should traders be thinking about the simultaneous risk you have with the Strait of Hormuz, but also Bab el-Mandab and potentially Suez Canal as well? Do you think the market is adequately pricing that risk right now?
It's hard to say. I mean, I think the bulls are saying that, you know, the market is not pricing the risk correctly, while the bears saying that, you know, there is enough oil in the market. I think if you look at the dynamics in the Strait of Hormuz and the Persian Gulf, you know, the latest estimate or numbers from there is that Iraq is selling its crude at a $30 discount to Dubai marker, but when it arrives in Asia, it's at $8.5 premium. That is almost $40 just to gate it through the Strait of Hormuz at night. So, you know, economics are very forceful if the premium is high enough, and I think that is what is pushing it forward. But definitely, Bab el-Mandab Strait, that's a big additional problem, and you know, it's very hard to know exactly how much oil is actually coming out of this region right now, and I think the oil price is the best gauge of the balance of the market.
What about the impact to infrastructure here as well with the attacks that we're seeing in the Middle East on one front, but also what we're seeing with Russian energy infrastructure being attacked by Ukraine, in terms of that getting intensified as well?
That is, of course, hugely important. And if you look at the crude oil price today, $88.6 per barrel Brent crude, but the diesel price in Europe is $164 per barrel. So it's super tight on products, and you have availability of crude. And what's happening in Russia is, of course, that Ukraine is increasing or continuously destroying its refineries. So run rates of refineries are then down at least 1.5 million barrels per day, to the point where Russia no longer is exporting oil products as it normally does, and instead has started to import gasoline from other countries like India. And I think it's important to remember here that the consumers of crude are the refineries. So when Russian refineries cannot consume oil as usual, they have to export that crude instead. And, you know, it helps to depress the crude oil price while product prices are getting even higher. So, yes, that is where it's felt. It's the product prices, that's where the pain is. And as of yet, not on the crude price.
Exactly. Can you just dig into that a little bit more as well, what we're seeing with some of those refined products, the price of diesel, jet fuel, gasoline, from what we're seeing to the disruption in oil?
Yeah, I mean, so we're heading in towards the northern hemisphere winter, or at least we can see it in the distance. And normally there is a lot of diesel consumption in heating oil in the northern hemisphere. So normally you like to have good stocks of diesel in the run-up to winter. And now we are running extremely low, and we are in a dynamic process where more and more refineries are being damaged in Russia at a higher and higher frequency as Ukraine is getting better at hitting and destroying them on a high frequency, so Russia doesn't have time to repair it. And this is, of course, the pain felt by consumers in Europe and in the US, and that is a trouble for Donald Trump, which is very, very difficult for him to counter, because the strategic reserves in the US and most OECD countries is crude and not products. So it's very little help to float the market with crude in terms of the price fall at the pump of diesel and gasoline.
All right, we'll have to leave it there. Thank you so much, Brianna Shieldrop, the Chief Commodities Analyst at SEB. And coming up on the show, the River Rhine hits another record low, wreaking havoc with German shipping. We'll bring you more right after the break. Stay with us.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange, streaming on CNBC+. The day's top stories driving Wall Street. Up-to-the-minute developments, instant analysis, essential business news at the intersections of power and money. Kelly Evans, Brian Sullivan, Power Lunch, streaming on CNBC+.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What do the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli, Closing Bell Overtime, CNBC.
Stubborn love and broken pride. Either way, a man's gonna lose. I held on tight with both my fists, and still she slipped right through. My mama told me let her go. Said pride will eat you whole. My mama said a stubborn heart the hardest thing to hold. But I kept pulling at the rope until it burned a hole.
You're watching Europe Early Edition. I'm Ritika Gupta. Let's get into your headlines. European benchmarks poised to open higher after snapping a 4-week winning streak. Investors eyeing key UK jobs and inflation data, flash PMIs and Fed minutes in the week ahead. President Trump pledges to cut back joint US military drills with South Korea just as the two countries prepare to begin their 11-day exercise. Trump touting his relationship with North Korea's Kim Jong-un. The US-Iran Memorandum of Understanding expires today with talks to end the war deadlocked. President Trump concedes Americans will need to live with higher fuel prices.
For you to pay a tiny little bit more for your gasoline, just remember you're doing it so that a very evil country cannot have. A country really is the #1 state sponsor of terror in the world.
Europe continues to reel from heat waves. Wildfires ravage Belgium, forcing hundreds to flee, while water levels in Germany's Rhine River fall to a further record low.
She asked me for the simplest thing. The easiest kind of door.
And let's get a check of your markets now. Over here in Europe, we're seeing Stocks 50 futures moving to the upside, about 0.3% higher. This is after snapping what was a 4-week winning streak last week. Let's flip up the board and take a look at how Asian markets are currently trading. You can see it's mostly green across your screen there. We do have the Kospi, that is closed for a holiday. The Nikkei 225 index over in Japan up some 0.4% higher. This is even as Japanese GDP growth came in weaker than expected in the second quarter. Still, nonetheless, we are seeing most traders still expecting a rate hike by the BOJ next month. China, we're also going to be getting some data, a slew of Chinese data that we're expecting, including industrial production and retail sales later today. Let's take a look at how the US market gets set to open. You're seeing futures there mixed on your screen there. This is after the S&P 500 climbed for a third straight week, even though it did close down lower on Friday. We also saw the S&P 500 notching a fresh record high last week. This is after we've had a particularly strong earnings weekend in the US, but also both sides of the Atlantic, the European Europe having its strongest earnings season in years as well. Now, firefighters have been battling Belgium's largest wildfire on record across the weekend. The blaze has destroyed more than 30 square kilometers of land since it began in the High Fens Nature Reserve on Friday near the German border. Germany's Rhine River has hit another record low, falling to just 6 centimeters at the Korb choke point late on Friday. The river usually lies 1 meter below the gorge and is a key indicator. The low levels have halted shipping, moving most transport to ships and trains. Annetta joins us now for more on this. Annetta, how serious is the situation right now when it comes to those low levels on the Rhine right now and the implications this could have to Germany's economy?
Well, it has actually already quite serious implications when it comes to certain production sites, especially the chemical industry is affected. So just to make you understand, it's just 7% of goods that are transported over waterways in Germany, but those 7% are crucial for the economy, and they can't just be change to the road because they're very heavy, especially mineral products, oil products are shipped in Germany, but we also have chemicals, construction goods. They all normally are shipped because it's much cheaper to ship them than to bring them on a lorry and to transport them on the road. Having said that, the recent Rhine levels have fallen to unprecedented levels. There is an early forecast that this actually was the record low and now water levels should come back somewhat, but it's not clear how quickly they can come back. There are different forecasts, and of course everything depends on whether it rains enough or not, but even if it will rain, because the situation is very dry all over the place, it will take some time until the Rhine level will come back to levels which means normal transportation on the waterway. Because what was said before, that just at 40 centimeter, the Rhine is literally not shippable anymore. Of course, there are certain ships which are still crossing, but at very, very low levels. Because what happens if the water is so low, they cannot load the ships as they did it before, and so the costs are also escalating, and that is what will hurt essentially as well the economy, because what will happen is that construction costs are on the rise. We already see a north-south divide when it comes to petrol prices. Interestingly, it's not huge, but it starts to actually spread, because clearly the south depends on oil products or petrol as well being shipped from north to south, and so in the north the petrol prices are cheaper already. What will happen as well is, at least according to economists, that food prices might be on the rise, and that will also have implications not just for the companies but in the end as well for monetary policy. Interestingly, we had Isabel Schnabel already before the summer break stepping out and saying they look at what happens to those river levels very carefully, because that could have serious implications also for the inflation forecast going forward. So overall, different economic institutes already stepped out, said that the economy might actually take a hit up to 0.4% of GDP by those low levels of the River Rhine, but of course also other waterways are affected.
Right, Annetta, do stay with us. Let's bring in now Mark Schattenberg for more on this. He's a chief economist at Deutsche Bank Research, and joining us now, Annette, as I mentioned, sticking in with this conversation. Thank you so much for joining us. First of all, how are you looking at the situation with the Rhine water levels right now, when in terms of your economic models for Germany and the hit that you could see it taking for GDP? I mean, it's a lot of industries being impacted there. Nettie was talking about chemicals as well as everything from metals to manufacturing to energy. How are you looking at this?
Yeah, the low water levels on the River Rhine that have persisted since mid-July with no end in sight mean estimates of a drag on GDP of 0.1 to 0.2% percentage points are becoming increasingly plausible. Yeah, and it's the chemicals industry, it's the iron industry, and it's also about inflation, because a lot of heating oil and diesel shipping is on the Rhine. And the critical point cow is the actual bottleneck. Now, shipping is uneconomically costly at the moment, and in case water levels will drop lower, it becomes a choke point.
So some freight has been moved to road as well as to rail, but so do you think that Germany's kind of alternate transport links, do they have enough capacity to kind of absorb these volumes?
I would say it spikes, so transportation spikes, but the volumes usually transported via inland navigation are so huge that transportation by lorries it's no option, and the railways are used until capacity constraints. So at the moment it's really difficult to shift freight volumes from inland navigation to railway or even to the streets.
Hi Mark, it's Annette in Frankfurt. I have a question of what do you think about recent reports as well that Germany is actually lacking infrastructure spending on those waterways, because it could be one way as also to deepen the Rhine, for example, at certain choke points as the River Kalb. Do you have a view on that?
Yeah, in the medium term. In the short term, this is no real solution. It will take time, and as particularly well-known Kalb bottleneck, however, it's planned for several years, but not yet done, and so there will be a package of solutions. At the moment, weekend transportation ban for trucks is lifted, and Deutsche Bahn will provide more capacity, but at the moment there's a renovation of the critical railway on right Rhine bank. So options are limited in the short run, but in the medium term, I think there will be an option to deepen the shipping channel at the choke point Kalb and provide a little more railway capacity. Yeah, but I think it will take several years.
Yeah, let's look at the current situation again, because clearly before that situation now, we were told that at the level of 40 centimeters at that choke point in Kalb, there's no passing of ships anymore. So this seems not to be really true, because currently there's still ships passing, but at what level do you look at where things actually could normalize? Is it 80, is it 100? What do you think?
I think that levels about 50 to 60 centimeters, the situation will normalize. Compared to 2018, the industrial landscape along the Rhine River has changed. So at the moment, from a purely economical perspective, capacity utilization in the chemical industry is about 10 percentage points lower compared to the extreme low water period in 2018. So I think at Rhine levels of 40, 50, 60 centimeters, the situation will normalize. Following the dry spell in 2018, some logistic companies adapted, produced tankers which are able to navigate at these lower water levels.
So Mark, when it comes to the broader implications of this, I mean, how do these higher transport costs, how quickly do they filter through to higher costs for companies and ultimately higher inflation? And how should ECB policymakers be looking at this? Should they be looking at it as short-term supply shock, or is this something that they're going to have to factor into their decisions as well?
Yeah, at first hand, it will filter to the companies quite quickly through higher transportation costs. There are so-called low water surcharges, and they rise quite quickly. The transportation 50 to 70% rise, push the prices up by 50 to 70% for container transportation or heating oil transportation. So companies will feel this already. And for the consumers, it's the diesel price at the pump. It's the heating oil price. And our inflation strategists estimate for August an upside to the inflation rate by 0.4%. And as this dry spell continues, it's likely an upward pressure to consumer price inflation. And as we heard before, Isabel Schnabel, a comment on this, the ECB is watching this very closely.
Bourbon patience and a slow smile.
That would be my follow-up question on that, because clearly the ECB is watching what happens to freight prices, to consumer prices, because of which could be actually elevated because of that the situation on the River Rhine. So what are you expecting in terms of might that have the potential to change the rate trajectory going forward?
Not at the moment. We closely observe the price momentum and price dynamics, but at the moment this is one-off special situation. But who knows how long it will continue? In 2018, it continued until late November. But at the moment, it seems so that there will be rainfalls, and hopefully it will stabilize or even improve the situation in the Rhine. But in case the dry spell will continue until September, it probably will be a problem for inflation too.
All right, we'll have to leave it there. Thank you so much, Mark Schattenberg, the Chief Economist at Deutsche Bank, and of course our very own Annette Wozniak as well. Now, let's get you up to date on some of the other stories and the headlines this morning. At least 53 people have been killed and thousands forced to evacuate after a 7.7 magnitude earthquake struck Indonesia on Saturday. Rescuers are continuing to search for survivors. Hundreds of migrants who entered the Spanish enclave of Puerto have staged a protest calling on authorities not to send back to Morocco and instead grant them asylum. 4 works of art attributed to Renaissance painter Antonello da Messina have been stolen from a museum in Sicily. And Jamie Dimon has reportedly warned UK Chancellor John Healey against another higher bank tax, with sector bracing for the budget in the autumn. Coming up on the show, are premium bikes the answer to boosting European mobility? We'll discuss with the CEO of Austrian bike brand Boom next.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC Plus.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues. dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
My ambition is just to be the best that we can possibly be. If you're watching CNBC, it's because you want to get an edge, you want to get ahead. It's our job to deliver that. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you can possibly have.
It's just a mind at ease. Who's seen enough to know the world? We still find ways to please. A slow smile. Slow fade out. Guitar leaks.
Welcome back, everyone. Let's switch our focus now to e-mobility, which is expected to see growth amid new European policy initiatives such as the Green Deal and the Social Climate Fund. Industry experts see electric bikes and scooters as key parts of European green and digital transitions. Companies such as Woom, which makes premium bikes for children and teenagers, are expected to benefit further, with the Austrian company generating $149 million in revenue last year, having sold over 392,000 bikes. I'm pleased to say the CEO, Bernd Haig, of Woom, joins us now for more. Welcome to the show. Thank you so much for joining us. First of all, talk to me about the European bicycle industry and what you're seeing right now, because, of course, with COVID, we did see a rise in bikes. But what does, I guess, the new normal look like right now for the industry? Now that are you seeing things return to kind of pre-COVID levels?
Yes, no, we definitely see that people are picking up on bikes. As the outdoor experience is getting more important than it has been over the last years. And we see that the health factor is definitely dominating.
And when it comes to the European markets, I mean, how are you looking? Are you seeing any meaningful differences between countries when it comes to the UK, Germany, the Nordics? Of course, each of those countries has their own policies when it comes to bikes and sustainability.
Yes, what we definitely see is that the northern part of Europe is picking up on bikes much more than they have been in the past. In the past, the biking industry was highly related to Germany, to the UK. But we definitely see now that Scandinavia is picking up. We see that in America, that Canada, that riding is getting more important. Also from a city perspective, more and more cities are investing into the opportunities for riders to ride safely. And with this in mind, we definitely see a big momentum for the cycling industry, and Woom is definitely picking up on this trend also.
When it comes to what you're seeing in terms of demand, have you seen with inflation and a cost of living squeeze, and in terms of you dealing with premium bike sales as well, what are you seeing in the market with that? Has that put some pressure on demand?
Yes, absolutely. No, what we definitely see is that the adult bike industry is still facing headwind. It's still much more difficult than it used to be in 2020 and 2021 when COVID started to hit the market. But what we also see is, especially in the kids industry, is that parents are investing more money into better bikes. To understand bikes need to be lightweight, need to release aggregates of children. They need to be not anymore toys, but that they really need to focus on the riding experience. And with this in mind, brands like Early Rider, like Woom, are heavily picking up and seeing growth across many countries.
When it comes to the European policy initiatives that we discussed in the intro there, the Green Deal, for instance, or the Social Climate Fund, I mean, how much of a boost is that for WOOM? Or do you still feel that you have some burdens when it comes to regulation, for instance?
No, but we definitely see that the biking in parents and families are picking up, that more and more people understand that driving their kids to schools is not healthy, and that it's much more fun to sit on a bike with your kids and to cycle to the school or to cycle on a weekend and to have proper discussions instead of being at home and not being mobile.
How exposed to WOOM is it when it comes to higher manufacturing costs right now, shipping, raw materials? Of course, there's a lot of geopolitics in the world. We're seeing a lot of price rises right now.
Yeah, we definitely see a disruption in our supply chain, and this is mainly due to the fact that there is war in many in Iran, for example, also in Ukraine. We also see that our suppliers are facing difficulties in regards to getting the components. With this in mind, we get closer to Europe in regards to the production, in regards to the sourcing. For example, our Wohnbau, our kids bike, which is able to support kids with 9 months to ride bikes. We are producing in Portugal to really fight against the difficulties and the challenges we see in the supply chain from the Far East.
And finally, in terms of your expansion into the UK government wants 60% of children now between the ages of 5 to 16 to walk or cycle to school by 2035. How significant is that policy for the children's bike industry, which you're dealing in, and how are you looking at the UK market overall and the consumer in the UK?
Yeah, first of all, the UK market, I believe, and I live in the UK since 2009, is truly getting cycling. So when we look into the professional market, when you look into Sir Mark Cavendish, when you look into Chris Fromm, when you look into Nicole Cook, they are riding on a very competitive, highly competitive and very successful way. So cycling is in the DNA of the UK. And what we see now is really that also families are picking up on it, that they love to ride. And every kind of support we get from the government in regards to new regulations, but also in regards to cities investing into it, will help the bike industry and will also help the kids industry.
But really quick one now, just because we're short on time, but talking about e-bikes and how that's changing the industry, do you think that's going to be something that really pushes the teenage bike industry forward? I mean, there's still concerns though about safety when it comes to e-bikes.
Yes, absolutely. First of all, bikes, doesn't matter if it's e-bikes or if it's bio-bikes, need to be safe, they need to be lightweight. What we definitely can see is, and we are just launching a new e-bike in February next year, is that there's high demand for safety, there's high demand for lightweights, because what it helps the kids and the teenagers is helps them to pick up with their parents and to go on a ride.
Thank you so much for joining us. We have to leave it there. Thanks for watching. Sportbox Europe is up next.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
From the dead.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime report, weekdays streaming on CNBC Plus.
And the wind dies where you let it.
grew up a news junkie. It's really the only thing I ever wanted to do. I like holding people to account. You can't just show up and say, I like XYZ stock, because I'm going to ask you why. And then if you say you sold it, I'm going to say, well, why'd you sell? Get away from talking your book and tell me the real story. Ambition is a fuel and a fire. They call me the judge for a reason. I'm supposed to make people squirm, as long as I get the goods at the end of the day. We're talking about people's money. I feel the weight of that, the responsibility, and I love it.
We're here in Abu Dhabi, so why is satellite manufacturing considered a strategic priority here?
It's one of the deep tech industries that the UAE is investing in to turn it into a new industry, an export industry, as the UAE diversifies from oil economy. One of the key sectors it wishes to build is the space sector.
Let's also talk about Orbitworks and mass manufacture of satellites. What do you think that will ultimately mean in practice? What's the end goal here?
Would we hope to be able to fulfill all of the domestic needs in the UAE and then in the broader GCC, but then expand from that to supply customers far and wide, Africa, Southeast Asia, all of the places that have satellite needs or spacecraft needs, but they don't have their own capacity to build. And for them, we can be their first stop at their services.
Is the only thing that's true. She warmed it up for 15 years. Now there's nothing left to do. I still sleep on my head.
A very warm welcome to School Box Europe. I'm Steve Sedgwick with Ben Boulos, and these are your headlines. European equity benchmarks poised to open higher after snapping a 4-week winning streak. Investors eyeing key UK jobs and inflation data, flash PMIs and Fed minutes in the week ahead. The US-Iran Memorandum of Understanding expires Monday stateside with the end of the war. Well, still deadlocked. President Trump concedes Americans will need to live with high fuel prices.
For you to pay a tiny little bit more for your gasoline, just remember, you're doing it so that a very evil country cannot have. A country really is the #1 state sponsor of terror in the world.
Meanwhile, Europe continues to reel from heat waves. Wildfires ravage Belgium, forcing hundreds to flee, while water levels in Germany's Rhine River fall to a further record low. Berkshire Hathaway builds up its stake in Alphabet, making it the company's third largest holding, as quarterly filings stateside reveal a big tech tug of war among institutional investors.
Right, everybody, lovely to see you all. I haven't been around for a couple of weeks, so I want to know what I've missed. Steve.Sedgwick at CNBC.com. What have I actually missed? Because as far as I can see, the markets have been on a roller coaster ride. We were dumping quite aggressively when I left for my holes, and now the market's back at virtually record levels on the S&P. The love for the AI trade is back again. The love for the broader technology trade is back again. We're seeing some record levels on a whole host of markets, and yet, I see the same strains in the foreign exchange markets I saw 2 weeks ago that I'm seeing with the dollar yen, and real concern of whether that intervention from the Japanese and the Fed actually had a meaningful effect on the medium term. I'm seeing the same strains in the bond market, with 30-year auctions looking pretty awful in terms of the highest yields we've seen virtually this century as well. And I'm seeing the same concerns in private credit markets. Story, top of the FT today. Have a look at it as well, about some of the big listed players having to take downtick on the valuation of their private assets as well. So what have we got? We've got euphoria in technology. That is back again. We've got concern in the foreign exchange markets, concern in the bond markets as well. Pretty benign inflation story. Let us be brutally honest about it as well. Your data last week was where you wanted it as well. So that has kind of moved the needle just a little bit to slightly more dovish on what the Fed does next as well. But what has changed? What are you actually doing out there? Steve.Sedgwick at CNBC.com if you want to get involved. If not, I'll just hand it back over to Ben. Ben, good morning.
Good morning to you. Yes, let's check in on the picture on equity markets. And this was how the US markets closed the Friday session. All of the three main benchmarks in the red. This was after a week where there was a lot to digest, a week and a bit. We had the softer inflation data the week before, the cooling labour market, which pulled back those bets on the Fed moving higher on interest rates. In fact, there's now a 70% chance of a hold being priced in for the decision next month. On the other hand, on Friday we had weaker than expected consumer spending and sentiment, which again initially led traders to pull back on bets for a Fed rate hike, but then some of that filtered through into the sentiment among equity investors, and we saw that negative close on the three main benchmarks. Of course, in the background, it's easy to forget, isn't it? But they're still grappling with the ongoing conflict in the Middle East. There is no clear resolution or a direction to end the war there. There's also the wobbles around the AI trade. Sometimes we're seeing risk on sentiment, other times we're seeing investors sour on that trade in particular. So a lot for markets to digest. Crucially, this week we get the latest minutes from the Fed's last meeting, which will give us a bit more of an insight into the thinking of the members on the FOMC. So that's the US picture. Worth saying, actually, the markets for the week in the US mostly closing high, with the exception of the Dow, which closed the week around 0.5% down. This is the picture on the Asian markets at the moment. We're saying the South Korean market, the Kospi, closed for a public holiday. It's the only reason it's not on my wall. We haven't forgotten it. And it's mostly positive across the key regional benchmarks. The Nikkei 225 doing not badly at all, up 0.7%, despite some weaker than expected GDP data out of Japan and those moves on the yen, which has given up a substantial chunk of the gains that it had seen after the joint US-Japanese intervention. So we'll keep an eye on that as well. The All Ordinaries in Sydney off by around 0.5%. What's being anticipated when European trading gets underway for the new day and the new week? Well, a positive start to the week. The futures pointing to equity markets here opening on the front foot, all of them up around 1/5% or 1% or more. And what's the picture in the US? Of course, the open on Wall Street a little bit further off. A bit of a mixed picture, markets lacking clear direction, the Dow looking to slide below the flat line, but the S&P 500 and the Nasdaq both being called higher.
Right, let's move on. Look, my next read says this. Investor attention centres on US borrowing costs this morning. Really? Really? Whether any of you lot really cared that much about US borrowing costs to that degree as well. It's only people like me whining in the background about how big it's getting. I'll come to the point in a moment, eventually. Investor attention centering on US borrowing costs, apparently, this morning, after a string of lackluster data-dented sentiment last week. Wednesday's 20-year Treasury auction could well be a watermark for long-term debt appetite. After, what did we see last week? 10, 30-year sales last week saw multi-decade records on auction yields, i.e. the yield was up, the demand was lower, right? Got that? Okay. This as the US national debt clock is on track to hit the $40 trillion mark as soon as... Why do you care about $40 trillion? Just a number. $40 trillion is just a number. Go down the meters way, you know, somewhere between 6th and Times Square, yeah? You've got a debt clock in New York. If any of you are there, just have a look up. Have a look up at the debt clock. It now says $40 trillion. It's got loads more info on there. How much you as Americans are paying per person in debt. Why do you care? Why do you care? Well, I'll tell you why you care. Because all we're seeing at the moment is US defence spending doing this, yeah? It's about $960 billion in 2026. But obviously, as you know, Hexagon wants it much larger than that as well. What do you think your interest payments are? Yeah, just over $1 trillion. You're spending more on your interest payments in America land than you are on your defence, right? And if you think that's bad, give it 10 years. Give it the middle of the next century. You're going to be paying $2.6 trillion roughly on your debt. Anyway, hit the $40 trillion mark as soon as today, just days after July's deficit figure release. A record for the month of $432.3 billion. Bank of America reckons servicing costs that debt is costing nearly $1.5 trillion over the last 12 months. Wow, that's even more than I said. Freya Beamish, Chief Economist, Global Data, TS Lombard. Freya, lovely to see you. I always learn something from speaking to smart people like yourself. Why is it? My read said investor attention's all about the debt. And yet it's not. They're glibly ignoring it. What's going on, Freya?
Yeah, I think there's ways in which it matters and there's ways in which it doesn't matter, and there's a lot of interactions going on. If you take that debt clock number, you divide it by GDP and you plot it against other countries on a scatter chart, you will find no correlation between government debt to GDP and the level of the 10-year. If you take the deficit and you plot that against yields and yields dynamics on a cross-country basis, you will actually find most of the time, and by most of the time I mean going back to the Second World War, that there's actually a negative correlation between that issuance and yields. Apart from when you have big negative supply shocks in the real economy, and that damages the quality of the bond as a hedge for equities. That's one way in which the issuance starts to matter. And then I think the thing that's perennially forgotten is who specifically is it that is buying the debt, and how are they funding it? I think we've moved from a situation in which there was a huge amount of duration, all the way through the 2010s, amount of demand for duration from real money. So that was funds that were there that were trying to buy this debt and they couldn't. And we've flipped to almost the reverse of that, where we're now a lot more reliant on hedge funds to jump in and clear the market, especially out at that 30-year tenor, to clear the market, and they have to fund themselves. So that's where you get all the interactions from, because wherever you have a hawkish central bank, so in the UK, where you have a hawkish central bank and you have already a big stock of duration, so the government debt, but also looking at the average maturity, that's where you start to see significant correlations coming in when you're adjusting for the maturity, and you're looking at what the central bank is doing as well.
Freya, brilliant. Again, how can any of our viewers fail to have learned something from you there? I certainly have. But look, I remember Reinhardt and Rogoff, and I know they make their mistakes on their methodology, and they got punished for that publicly as well. But I'm going back, 15, 16, 17 years about this time it's different paper. And the thing, and you made the key point there, it depends who owns the debt as well. And that was a key point of that. But they had the 90% rule. When it goes over 90%, pretty much things are looking a bit dodgy. So I remember going back to 2007, well, you and I probably chatted this, and the US debt to GDP then was about 55.7%, 55, 60%, there or thereabouts as well. How is it, and you mentioned a scatter chart as well, so I was paying attention to everything you said there. How is it now that we are so wonderfully relaxed now at financing the world's biggest economies? By the way, that includes China's debt now, which wasn't anywhere near as bad 16 years ago. We're so glib about it now compared to then, when yet we had a global financial crisis, which I remember also included a global sovereign debt crisis, on the basis of much smaller numbers.
Yeah, I mean, the sovereign debt crisis to me was more about that kind of structure of like more to do with the Eurozone, and the whatever it takes moment was really important in saying, okay, well, we know we don't have exactly the right structures here and a sort of a central bank backing each of these, but then the ECB sort of stepped in. So that was a specific example of where it does matter, and policymakers sort of did the right thing to sort of calm things down. I think the inflation regime is everything. We know that you can have very, very high levels of government debt to GDP and sustain that for a really long period of time. All you need to do is look at Japan, but only in a deflationary environment where the deficit is the result of the fact that the private sector is continuously trying to save, whether that's to deleverage, as we had in the 2010s, and that's when you get the really big rise in government debt to GDP, and nobody cared. Everyone was lapping that stuff up at that point in time. When you have demand-led inflation, which is great for equities, and that's fine, but also negative supply shock-led inflation in the real economy. So all these shocks from the Strait of Hormuz, tariffs, climate change, all of these things are now creating an environment in which the correlation between bonds and equities has moved from historically negative back into what is actually more normal, where you don't get so much of a hedging quality from bonds into equities. So that affects the long end of the curve. And the fact that we're in this kind of more inflationary regime, the last data point notwithstanding,
Generally now, inflation is expected is surprising to the upside consistently over a period of years, and that's not all bad. I think we fall into the trap of thinking that higher yields are always a sort of a bad sign. Often higher yields can be a sign of a stronger economy. But what we have here is a real mix of things, some of them reflecting a good change in the economy from the 2010s. Let's not all be negative about this, but some of them reflecting that deterioration in the geopolitical order, some of them reflecting that greater dependency on hedge funds to clear the market. And there's a lot that the debt issuance managers can do about that, and central banks can do about that with respect to QT and how they manage the curve. That are all lessons that are sort of starting to kind of come through, but haven't really yet been learned, I think.
Sorry, my poor colleague. I haven't had a question for 2 weeks, so I'm just champing at the bit. But poor Ben, he might get one in about 9:30. But Freya, seriously, you mentioned Japan, and that is the great example of how we can all manage larger debts, because if it's financed by local postal savings and this huge pool of investors locally or savers, it's okay. But they're getting older. I'm getting older. Even you, Freya, but you're nowhere near retirement. You've got decades ahead of you. A lot of people getting older, and they're drawing down, and they're not being replaced by young workers who are going to be saving because there's less people around as well, as we're seeing from China to Japan to the US to the UK as well. So Freya, and given the tensions we've seen over the dollar-yen in the last couple of weeks, are things not just creaking, but beginning to having to put more fingers in more holes to stop the water coming through?
I think things are certainly changing very sharply, and Japan is the best example of that. I think we've gone from a place where the Japanese labour market was just completely incapable of generating wage growth, and now we have Japanese wage growth. Can't believe I'm saying this, but I can believe I'm saying it actually. Japanese wage growth above 3%. And that's because they've hit certain demographic turning points, which, that was always going to be the argument that wage growth would come when the labour market when the labour supply was contracting, and it just didn't for Japan for a whole host of reasons that I think were very just Japan and time specific. So now we all have a situation globally where labour supply is much, much tighter. And there's a structural tightening of the labour market, and that should feed through to global bond markets in terms of higher yields on a sort of a structural basis. And the fact that Japan has gone from being this deflation nation where it's not necessarily a good thing to be able to finance debt in the way that Japan was, because that was just evidence that Japan was stuck in this deflationary mindset and deflationary economy. The fact that they now have wage growth means that they actually have the possibility now of having private consumption-led growth, but they have to manage the curve. The Bank of Japan needs to make that move and back up the intervention with raising rates. And if they do that, I think that there is still a path for them to sort of move into a more private consumption-led growth place where you would be buying equities and you wouldn't be worrying so much about these fiscal problems. I think that is a very good kind of example of what we're facing globally. I think for the US, it's slightly different. We've got a Fed that is kind of questioning its role, questioning whether it is going to be hawkish or not. And I think the 30-year is actually looking at the economy and thinking, well, there is inflation here. There is the earnings growth is spreading out. I know there's been some kind of weak reads on the real economy recently. But the Fed needs to sort of also get its move on and start hiking as well.
Love it. Thank you so much. What a great start to the show. I'm having an economic treatise from a very smart person as well. A, I love the children's art, as ever. Thank you. B, I've got to ask a question. Is that your microphone in front of you or a small Death Star?
Yeah, it's the small Death Star.
Okay, brilliant. Just needed to confirm. Freya, lovely to see you. Thanks very much indeed, as ever. Freya Beamish, who is the Chief Economist at Global Debt TS Lombard. And if you're wondering where Ben is, I have penciled him in for a question at 9:45. I've been away. What do you expect?
No, great start to the morning. I know. It's lovely to have you back, by the way. We've missed you.
Well, you don't get so many syllables in, that's for sure.
I think that's what it says on the script. We have
No, it
missed
says
you
Steve, just carry on. Just carry on. I will. The value of troubled private credit loans has hit its highest level since 2017. Shall I say that again? again, because some of you lot think it's the golden place to be, private credit. So I'll just say it again. The value of troubled private credit loans has hit its highest level since 2017, according to Financial Times analysis. Loans labelled non-accrual status in the top 20 listed funds increased to a median of 2.8% of their costs in the second quarter, up from 2.1% at the end of the first quarter. The director is insisting that Ben gets 4 words in edgeways. All right, fine, it's your show.
I'm going to do some work this morning, shouldn't I? Yes, Anthropic has reportedly told investors its revenue surged by around 14 times on the year in the second quarter to come in at $11.5 billion. That is according to Bloomberg, which cites documents saying the company actually posted positive adjusted operating income last quarter. This as investors count down to its expected IPO, which could come as soon as next month, according to the Wall Street Journal. Reuters says the company is being put under especially heavy scrutiny ahead of its debut, with Wall Street Bank eyeing its revenue projections for 2028, which apparently top out at $200 billion. Nvidia has reportedly scaled back plans to support OpenAI's proposed 10 gigawatt data center project in Ohio, cutting its guarantee to less than $120 billion, down from $250 billion. According to the Wall Street Journal, investors had expressed concern over the chip maker's risk exposure. The paper says the plans currently being discussed would see Nvidia provide a financial backstop for the first phase. It's around 5 gigawatts of power, before deciding whether or not to lend any further investment. SoftBank subsidiary SB Energy is developing the site. Over the weekend, the information reported that Nvidia is in talks to invest as much as $3 billion in that company. Plenty more coming up on the show, including this. President Trump calls on Americans to accept higher fuel prices as a memorandum of understanding between the US and Iran is due to expire. Plus, the River Rhine hits another record low, wreaking havoc with German shipping. And we'll discuss the outlook for the oil markets with Jeff Curry. That conversation at 9:30 London time.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC Plus.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
Every single story that we pick is a tie back to the markets.
Those sort of revenue streams don't trade at a great multiple.
We want to arm people with the information to make great decisions.
Stock got whacked, I get it. People say they overpaid, I get that.
Fast Money is all about the chemistry. We've been successful for this long because we're a team.
Fast Money, CNBC, streaming on CNBC Plus.
I have my own storm, and inside it, I can breathe.
China's National Bureau of Statistics has updated the release time for today's July economic data release to 8 a.m. London time due to a commemoration of former President Jiang Zemin. This is today's industrial output numbers are expected to show slowing growth, but with an uptick in retail sales.
US President Donald Trump's envoy and son-in-law Jared Kushner reportedly met with the political leader of Hamas in Egypt on Sunday, as the White House looks to secure backing for a Gaza peace plan. Kushner also reportedly met with mediators from Egypt, Qatar and Turkey and is due to meet with the Israeli Prime Minister Benjamin Netanyahu today. The President, Donald Trump, has called on Americans to accept higher fuel prices amid the Iran war. The US leader also suggested he could declare the Strait of Hormuz a US territory, a move he said could happen once Iran is defeated. Traffic through the waterway remains largely stalled, with the UAE accusing Iran of attacking another ADNOC tanker on Friday. Speaking on Friday, Mr. Trump insisted he did the right thing regarding Iran.
For you to pay a tiny little bit more for your gasoline, just remember you're doing it so that a very evil country cannot have. A country, really, it's the #1 state sponsor of terror in the world. We don't want to have them have a nuclear weapon. So remember that when you have to pay a little bit more, you're at $4. It's okay. I mean, it's. I'll never apologize. I did the right thing.
This as a memorandum of understanding which both the US and Iran signed in June and have since repeatedly accused each other of violating is set to expire on Monday. Dan joins us with plenty more. Dan, I don't know where to start. This comment about declaring the Strait of Hormuz as American territory. Did you want to say anything on it? I know what I think, but it's probably not fit for air.
Steve, it seems as if there's more of a narrative war unfolding as we kick off a fresh week of no peace and no war as well. At the same time, this 60-day memorandum of understanding between the United States and Iran expires today with little sign of a revival. Washington and Tehran have spent the last few weeks accusing each other of violating the deal, including over control of the Strait of Hormuz. And then, as you say, on Friday, Trump has said the US could declare the strait American territory. Well, no surprises to see that in reply, Iran's deputy foreign minister said Hormuz cannot be seized by tweet. Tensions on the sea also rising. An ADNOC vessel was attacked in the strait on Friday, the latest in a series of strikes on UAE energy and shipping. The UAE presidential advisor Dr. Anwar Gargash weighing in at the weekend, saying the attacks will not shift the UAE from its policy of deterrence, diplomacy and international law. The focus right now is what happens through the course of this week, and the next big move could actually come from Washington this week. Treasury Secretary Scott Bessent saying new economic measures against Iran are coming, measures he has described as something never seen before. So the key question now is what that means in practice, whether Washington now plans to target Iran's oil exports once again, its shipping networks, banking channels, maybe third countries also helping Tehran to move money and energy. It remains to be seen what these new measures look like, but that is the primary focus right now as the US perhaps shifts away from kinetic military action and pulls the lever when it comes to economic leverage over Tehran to bring the regime back to the negotiation table.
Superb work, as ever. Thank you very much indeed for that, Dan.
Firefighters have been battling Belgium's largest wildfire on record across the weekend. The blaze has destroyed more than 30 square kilometres of land since it began in the High Fens Nature Reserve on Friday, close to the German border. Meanwhile, Germany's Rhine River has hit another record low, falling to just 6 centimetres at the Karl choke point late on Friday. The river usually lies 1 metre below the gauge and is a key indicator. The low levels have halted shipping, moving most transport to ships and trains. Annetta joins us now. I mean, Annetta, the implications of this, it's become such a serious, damaging situation. Ships being stranded, production cuts in German factories, even the Sunday truck ban has been suspended. Do we have any clear idea about exactly what extent to which this could hit the German economy?
Well, we have various predictions when it comes to GDP hit. So the Institute of the World Economy is expecting that it could hit German GDP by as much as 0.4%. the International Institute of Research in Kiel is saying that it could actually chop off roughly 0.2% of GDP growth in the third quarter, but the effects are probably not contained to the third quarter. It could have longer ramifications as well going forward, because freight rates and costs are increasing for many companies. Currently, the chemical industry, like on average, is just producing at 90% of their capacity because they don't have all ingredients they need, they wait longer, and it does cost all a lot more. And the fact is, or the reason for that is that the Rhine River, even if it's just responsible for 7% of all goods transported, it's a main waterway for goods from the chemical industry, from the petrol industry. And we're already seeing now an interesting divide between the south, which of course very much depends on the river capacity, and the north when it comes to petrol prices. Petrol is cheaper in the north than in the south, just to give you a very practical example. What goods might be affected? It is, especially as I said, petrol and anything petrol related. Construction goods are normally shipped as well because they're very heavy and not just easily being loaded on a truck instead. Then we also have food and like grains and wheat and all that kind of products are also normally transported on ships because they are also very heavy. Anything which is heavy rather goes on a ship than on a truck because it's much cheaper in normal times. But currently, as you said, the River Rhine has hit a new record low. Now it looks like that river levels are somehow slowly coming back. And Mark Schattenberg from Deutsche Bank just early on told me that at levels of 50 to 80, we can say that the situation is normalizing at that choke point close to Frankfurt, and that goods can be transported in a rather normal fashion again.
Annette, thank you very much for bringing us up to date. Well, let's quickly check in on European futures as we count down to the market open. Just over half an hour to go, and all of the futures pointing to a positive start to the trading week. Don't go away, we're back after a short break.
Interactive Brokers pays up to 3.14% on instantly available US dollars in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 3.14% on uninvested, instantly available US dollars in your brokerage account. The best informed investors choose Interactive Brokers.
The Exchange, streaming on CNBC+.
NVIDIA working with some of the biggest names on Wall Street to secure financing for its customers.
These partnerships are going to pull together independent long-term capital to fund AI infrastructure build-out.
You're starting to see asset-based financing against this infrastructure.
The first few years, there's no income. Once these are yield-based products, then it's easier to sell them in the public markets.
We need to make sure that we're broadening participation in AI.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What do the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli, Closing Bell Overtime, CNBC.
House upon the hill. Yeah, promised her the moon, the stars.
A very warm welcome to Squawk Europe. I'm Steve Sedgwick with Ben Boulos, and these are your headlines. European benchmarks poised to open higher after snapping a 4-week winning streak. Investors eyeing key UK jobs, inflation data, flash PMIs, and Fed minutes in the week ahead. The US-Iran Memorandum of Understanding expires Monday stateside with talk to end the war deadlock. President Trump concedes Americans will need to live with higher fuel prices.
For you to pay a tiny little bit more for your gasoline, just remember, you're doing it so that a very evil country cannot have. A country really is the #1 state sponsor of terror in the world.
Europe continues to reel from heat waves. Wildfires ravaging Belgium, forcing hundreds to flee whilst water levels in Germany's Rhine River fall to a record low. And Berkshire Hathaway building up its stake in Alphabet, making it the company's third largest holding as quarterly filings stateside reveal a big tug of war amongst institutional investors.
We're going to take the quickest canter through markets because coming up shortly is a guest who began as a city temp and now has a business worth $1 billion. It's a remarkable story. We'll get into that. But let's just quickly check in on equity markets. This was the picture across the US markets on Friday, all of them closing the session in negative territory. Although for the most part, those markets finishing the week higher, with the exception of the Dow, which closed the week around 0.5% below where it had begun. Lots of factors pulling markets in different directions. We've got the interest rate expectations and the robust earnings for the second quarter having helped to add some momentum to markets. On the other hand, the conflict in the Middle East still going on. The oil price rising about 5% last week. Weaker than expected retail sales data weighing a little on equities, so investors digesting all of that. In terms of how that's playing out in the Asian equity markets this session, this Monday morning, for the most part in positive territory. The Nikkei shrugging off some weaker than expected GDP data from Japan to rise 0.75% at the moment. The Hang Seng, the Shanghai Composite, both firmly in positive territory as well. Possibly we haven't forgotten it, it's closed for a public holiday, that's why it's not on board this morning. Quick look at European futures, those key benchmarks pointing to a positive start to the trading week across Europe. There's some data out this week, including UK inflation data on Wednesday, and of course stateside we get the latest Fed minutes from the last meeting, gives us a clue about the thinking of those members of the FOMC. Told you it was going to be a quick canter through markets, and that brings us to our next guest, who is the CEO and founder of debt administration services provider Glass. It's Mia Drennan, who won EY's UK Entrepreneur of the Year in 2025, shortly before signing a deal with Oakley Capital that's understood to have put her business's valuation at a minimum of £1 billion. Mia, it's great to have you with us. What a remarkable story. We'll come into the background to it all in a moment, but just firstly, on the situation with markets, as I was saying there's so many factors pulling things in different directions. What is the state, from your perspective, of the private credit market at the moment, and how resilient it's been to so many tariffs, geopolitical conflict, sovereign debt at these new levels? What's your take on things?
Yes, well, thank you very much for having me on today. I mean,
when I was 21,
our business actually manages over 850 billion assets under management, of which 50% of that is private credit globally. And what we've seen is actually still good resilience in the markets. So, certainly there was lots of trading activity in Q1 with all the unrest that was going on around the world. That's trading between collateralized loan obligations, between loans from one vehicle to another, which has been interesting for my activity in my firm. But as I said, issuance was up.
And in terms of, we've had a stonking earnings season, haven't we? It's almost, it's hard to believe, given everything that's going on, that actually, especially when you get the weaker consumer print, the retail sales coming in cooler than expected. What's your take on where things go from here in the rest of the year? Can it be sustained? That's the key question, I suppose.
I don't have a crystal ball, and I'm not quite sure. At the moment we still see, I think people have learned to trade through the uncertainty, and so that's that's what we're seeing. That's what I expect to happen.
Just in terms of what's happening in these debt markets, I see nothing particularly abnormal at the moment that you, who's an expert in this, wouldn't have seen in many other cycles. The thing I have seen that's very different is a load of people who are ill-equipped to be invested in debt and private debt have been encouraged to get in with ridiculous phrases like evergreen and semi-liquid and what have you. Utter nonsense, because as anyone who's been in the business knows, it's either liquid or it's not liquid as well. So, I mean, you must be just kind of, I don't know how you must feel actually about it. Just tell me.
I mean, I think private credit is still a very good asset class, and I still very much, as that firm, still very much believes in why it's there and what it provides. So, you know, ultimately there is a desire for these private credit investments to be pushed down to retail, and ultimately, you know, the returns are good. So I don't think it's, I think it's a good position for the markets to continue to grow.
But Mia, there's a lot of money out there. You know this better than I. Your investment career is stellar. There's a lot of money out there. And actually, there's only a reason why the retail investor who knows nothing about this, quite frankly, or very little, is being pushed these products as well. It's because no one else wants them as well at the price they're being offered. If there's a seller, there's a buyer, and we want to know why the seller wants to sell if it's so good, these returns as well. Don't you think actually the industry's got a lot to answer for selling product to people who actually haven't got a clue what they're doing?
I think it's a good question, right? But ultimately, you have to look over the history of the private credit markets and have to make a determination. You know, and ultimately, it's up to the investors if they want to get involved with that.
True. With perhaps incomplete information as well. All right, well, I made a big assumption that when I did my first question to you, that actually there's nothing abnormal about this current cycle. But more importantly, is there anything abnormal about this current cycle, or we're just going through a normal cycle as you've seen it?
I don't think it's a normal cycle. I think there's been an awful lot of geopolitical shocks in the market, which we've all have seen, and it's been really interesting to sort of see what that's doing to markets globally, right? But we need to get some stability. So there's a lot riding on a number of outcomes in the economy, right? So to create stability, and then we'll see where we go from there. But I mean, you know, business is still operating. People are still, you know, optimistic.
Mia, as I understand it, you started out as a temp in the city. You founded the business with £6,000. It's now...
Can I just add to that? Half of which apparently you put on your credit card. Which I just,
really?
Which I just, for someone who's a debt specialist, I just love that. Is that true?
Yes.
That's amazing.
It is, yes.
That's amazing.
And it's now been valued at something like £1 billion. I suppose two key questions. For anyone out there who is trying to emulate what you have done with your business, what would be the most important bit of advice you'd give? And secondly, the UK could do with more businesses growing like yours has. What does the government need to do to help support founders out there who might be trying to emulate what you've done?
First and foremost, I think if people think they want to start a business, they should go and do it. I think, you know, resilience is key. As you may know, I did 400 meetings around the city to get that first transaction over the line. So, you know, really a good roadmap for getting involved and actually rolling your sleeves up is to get you off the ground. And I could do it. I think anyone could do it. But in terms of the government, I mean, I really hope that our new Prime Minister is listening to the likes of myself and business leaders around the UK, because we need them to be helpful to business, and we need them to recognise we need to grow talent here. You know, we've got excellent, you know, environment to create very successful businesses, and we need growth.
What's the one policy the government could do that would support and boost businesses like yours?
I mean, ultimately, to provide, you know, I'd say, you know, more opportunities for growth, right? And ultimately, that's going to come through investment opportunity.
Mia, lovely to see you. Really, genuinely an inspiring story, and I don't say this lightly. All of you, just go and have a look at your story. If you want to build a business, have a look at Mia's story. Absolutely fascinating. Thank you very much indeed for joining us.
Thank you. Thank you very much.
Mia Drennan, who is founder and CEO of Bryce. Berkshire Hathaway has added $17 billion worth of Alphabet shares in the second quarter, according to the latest 13F filings. The Google parent company has now become the third largest holding of the Omaha-based conglomerate. Meanwhile, Nvidia disclosed a $21 billion stake in SpaceX, its second largest holding, behind its stake in Intel. JP Morgan CEO Jamie Dimon has reportedly just echoed what Mia was just saying, warning the new UK Chancellor John Healey against a bank windfall tax, echoing previous comments. Dimon told Healy in an introductory call last week that higher taxes would hurt jobs and that spurring growth was the only way out of the UK's economic difficulties, according to the Financial Times. Diamond is said to have joined the call at the request of Healy's team, with the Chancellor set to speak to other bank bosses this week. Well, I'm actually going to just put away the floor manager. Sorry, the floor manager was coming to get near him, but I thought, sorry. Do you mind? Thank you, that's very kind. Bless her.
He's back for 5 minutes.
Well, no, because Ben and I can do this conversation. We can do this, or we can ask Mia about it, because, I mean, she's already kind of made a comment about it. So, Mia, what? I don't look at the colour of their rosettes, whether they're blue or red, to see whether they're making good policy. I actually see a lot of the problems that emanated now in the UK as coming from previous administrations under the Conservative rule. What is wrong with our... Do you mind standing around a bit?
No, not at all.
This is your wheelhouse. There was no point in me and him spouting on about it. What is there a major problem with our political class understanding the private sector?
I mean, I genuinely think that we need more business people in government. I mean, ultimately, there is a budget and they have to manage the budget appropriately. But we need more people that understand business, and I don't see that in the current or past government.
I know a lot of brilliant businessmen and women. People who've been in the city, people who've been in business as well. And to a man and to a woman, they roll their eyes at them. I can think of at least 3 major FTSE CEOs and major investors who have just said to me, it's not worth my time, because they don't listen. They talk a good book, whether it's Conservative or Labour, and it's not worth my effort getting involved with people who do not understand business.
I couldn't agree more.
How much is the government actually reaching out to business, the people that you speak to, the people you know? Do they feel that there is a proactive effort to find out what business thinks, what it needs, what the city would like to see? I mean, have you had conversations?
To be honest with you, I was invited actually to go on the government's trip to Davos at the beginning of the year. So it was actually Team GB, and they took a bunch of entrepreneurs to sort of with Rachel Reeves and her team, and it was actually really interesting because we were talking about business opportunities. And Rachel Reeves and her team, Alex DePledge was somebody that she hired, who's in business to help understand that business mindset, and they have been in touch. But obviously it's all changed now, so we'll see what happens.
That's it, isn't it? We've got to go. But Mia, this is exactly the point. Rachel Reeves, very nice person, spoken to her a couple of times herself, seemed to talk a good book before she got into her role as well. First thing she does, bang, slap a couple of % on the national insurance contribution for businesses. Small businesses crying out for support. What's the first big thing she does? She takes away their legs. I mean,
yeah, exactly. We all felt that hurt.
Yeah. Do you want to go, or do you want to kind of hang around for the next chat? I'm doing it. It's utter chaos now. I've been on holiday for 2 weeks. I'm full of energy, and they can't stop me once I've got the microphone. Mia, we'll see you later. Thank you very much indeed. Stay in touch.
No problem.
What's coming up, Ben?
Coming up on the show, more from the force of nature that is Steve after a break, and also this. Jeff Bezos steps into the world of sports investment with a group including the Amazon founder buying a minority stake in Liverpool FC. And also, remember this, you can subscribe to CNBC's The Daily Open EMEA newsletter, giving you a quick and succinct recap of the key markets-related stories from overnight, as well as a look ahead to what's coming up in the trading day. Well worth a look. Don't go away, we're back after this break.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
American soccer legend Landon Donovan. He'll explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
there were definitely a few times when there was no money in the bank.
Before Careem became one of the defining startup stories of the Middle East, Mudassir Sheikha was trying to keep it alive from one funding round to the next. He'd left a safe consulting job, and he and his co-founder had each invested $50,000 of their own money into the company. In the early days, Careem wasn't an app that magically matched riders and drivers. It was the founders calling drivers themselves in the early hours of the morning.
It was radically basic. All we had was a website.
And 7 years later, Uber, the rival Careem spent years fighting, agreed to buy the company in a landmark deal for the region.
To do a deal with our biggest rival, the company that we thought was trying to kill us, was just very, very difficult for the organization.
Welcome back. A group, including Jeff Bezos, has reached a deal with Fenway Sports Group to become minority owners in Liverpool Football Club, with the option to become the controlling owner. Sources familiar with the matter told CNBC the group will buy around a third of the club, with the deal valuing the soccer club at around $7.1 billion. Richard Haig is Global Managing Director at Brand Finance. Good to have you with us, Richard. What do you make of the deal, then? Is it a good one?
Yeah, I mean, we've been tracking over the last 10 years enterprise values of football clubs and putting them out as part of our Football 50 release of the top 50 football brands in the world. It's coming out this Friday, and we placed the value at about $6 billion. So it's a little bit above $6 billion, that is. So it's a little bit above where we think it was based on current multiples in the marketplace, but it's definitely within reason that there might be some other factors at play. Liverpool is one of the biggest clubs in the world, so there's plenty of potential for growth in the US, particularly after the World Cup, and so I think it's probably a very savvy investment.
Savvy investment, but what about for fans? Is there a greater chance, do you think, of ticket prices going up, merchandise prices going up, because these investors are not doing it out of charity, are they? They're looking to make a return.
Yeah, I mean, it's very hard to say. They could very easily continue. I mean, they will continue increasing them. Whether it makes it more likely they will continue increasing them, I don't know. It doesn't necessarily mean that just because there are some minority investors buying in, maybe if the option is triggered and they become majority owners, there might be an increased chance. Who knows? They might decide that they want to go down the commercial route and get bigger and better sponsorships, which then helps fund match day to build a more inclusive environment and a stronger brand that would further propagate growth of the business. So it's impossible to say, really. I think it's probably quite likely that we will see ticket prices and match day continue to go up in line with the various other revenue makers that the club has to offer.
Richard, what am I missing about this business? I spoke to a billionaire 20 odd years ago and I said, do you want to get involved in a certain club? He said, no, I like to hang on to my money. And what's changed? Because as far as I can see, the revenues go up, the TV deals go up, the licensing deals goes up, they have more franchises around the world, etc., etc. They don't make any more money, do they?
Well, I mean, they make considerably more money.
No, Richard, they don't make more money. They make more revenues because, as you well know, up to 80% of the income goes straight to their players.
Yeah, that is true. But when you are valuing the asset as a whole and the money making that it can provide, simply by having higher revenues, there is more money that can be taken away. Yes, the money does go to players. So they're certainly making more money, but the value of the business continues to increase. So even if you're not making profit day in, day out, the value of the asset is still going up, and there are plenty of assets within it that can then be licensed out or merchandise or whatever it might be.
No, Richard, we're confusing something here. I agree with you 125% about what you're saying about the value of the franchise goes up, the revenues go up, the opportunities go up, but the profits. So it almost feels like the perpetual Amazon trade where you're building a business, building a franchise, but you never actually turn that into greater profits.
I understand what you're trying to say. Yeah, it does make sense that if you're not making profits, then where is the value of any business? But it's in the value of the assets. So if you were to break up the business, you would just be looking at the assets that you've got at play. And so you could either do it based on a profit-based assessment, or you could do it on the value of the assets that you've got under management. So you've got the value of the team, you've got the value of the stadiums, you've got the various other intangible assets that you've got under your control. So you can value a business in multiple different ways. And if you're looking at the assets that the business controls, they are growing and they are larger. So yes, it doesn't necessarily mean that you're making profit, but there's the value.
But I mean, I don't know, let me pick the biggest club in the world. Barcelona, I guess, is arguably the biggest club in the world. Their debts are astronomical, so they're not actually making it ever turn around a profit. Isn't this, Richard, I'm sorry, I know I sound a real Luddite, and don't get me wrong, my team was rubbish again this weekend, so I have the bit between my teeth. But isn't this about the greater fool theory, basically waiting for the next billionaire to buy the assets? And because it will always be the same business model, that the players, and I'm pleased, it's almost unionised, the workers make so much money out of it, but the players are the ones who actually take home the money and make vast amounts from it. The businesses themselves never actually turn in greater profits, even though we're growing higher and higher in terms of the asset value.
Yeah, I mean, again, it's what I said. The value of the assets is the value of the business. If you were to sell it, you would still have those assets to sell. So what you're essentially saying is, are those assets overvalued? Maybe they are. Maybe the players are enormously overvalued. But the fact of the matter is, they can currently encourage all those billionaires, as you talked about, to make these emotive, potentially irrational decisions. But that seems to be the case in a lot of different businesses. So right now, I think that this is a fair valuation for the business, and I think they're probably going to see that investment grow, because I think in 5-10 years' time, you will continue to see enthusiasm related to the sport. And particularly if it does grow into the US, which it may well do, there seems to be a lot of interest in monetizing football to a more significant degree. But that sort of attitude of trying to make more profit is certainly going to be damaging to the game, because that will then be just extracting in as extreme a way as possible, or it could lead to that, where you are taking profit away from the game. Right now, not earning that profit is part of the strength. It is part of the beautiful game that people want to see. They want to see the fact that football is reinvesting in itself and reinvesting that in players to make the game more easy to watch and various things like that. So you'd certainly see more of a backlash if you started to see more money being siphoned off to owners in that regard. It's not like the owners aren't making a significant amount of money now by buying and then selling these assets later.
Richard, just a very quick one. You wait for a big sports investment deal and then two massive ones come along at once. We've also had the LA Lakers with Josh Kushner and Bob Iger buying the sports franchise there for more than $12 billion. How does the relative market compare? How attractive is the UK when it comes to these sports assets relative to the behemoths of the US?
Yeah, it's very interesting. I mean, the English Premier League and then supplemented by the Champions League, it really does help UK soft power. It is one of the oldest leagues in the sporting world. It has global reach in terms of a fan base. It is extremely lucrative when it comes to boosting business values to those who sponsor it. You easily see 2-3 times the return on investment that you get for a sponsorship of a UK football team, particularly the English Premier League. So the LA Lakers, according to our fan research, it is the most followed NBA team. So that is also going to be a very good investment as well. Most followed in the US. So whatever sponsorships you get related to that, you'll get lots of eyeballs, even if it's not their favorite team. So I think the English Premier League has the edge, but maybe I'm a bit biased.
Okay, Richard, we're rapidly approaching our half-time whistle, so we'll have to say goodbye. Thank you very much. Richard Haigh from Brand Finance. Thank you for watching. We're counting down to European Market Open. positive start being called. We're back in a moment.
One hour of added insight every morning doesn't just add up, it compounds. One extra hour every morning delivers exponential value and a pure investing advantage. That's the compounding edge. The all-new Morning Call.
I'm Morgan Brennan, and this is your Morning Call.
CNBC.
Never miss a moment. We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box streaming on CNBC Plus.
Sunday night.
I built a legacy on the court, and now it's the moment to build a legacy outside of the court. My main investments are in hospitality, in education, and sports. So I believe that's the future. I see my brand as in a growing perspective, and in some way building this new chapter.
You've been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it is very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. For me, it was a long time ago that I wanted to keep doing things I learned after my tennis career. I have 2 small kids, and that's the most important thing of my life, without a doubt, but I like to work. That's how I understand this life.
From the markets to the courts, kick back and relax while we serve up the highlights.
Still brings my daddy near.
Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
Put it on. That's the honest truth.
Well, there's a whole host of Chinese data just hit the wires. I'll have a quick look at that and tell you what we need to be looking at there as well. But it is 8 a.m. here in London, 9 a.m. Central European time. And markets last week, it was pretty calm stuff, wasn't it, on the major indices. We didn't see any huge move away from the flat line. FTSE giving back a bit of ground though, but we did see the DAX up 0.5% last week. But let's see how we're opening this trading event.
Yes, and let's start with a look at the sector-specific baskets and the outperformers board with basic resources straight out of the gates up more than 1%. Tech not far behind, 0.75% higher in the first few seconds of the Monday session, the first few seconds of the week. Oil and gas there jumping onto the board. No surprise to see that advancing. We have seen the oil price rise last week. Brent crude and US crude up between 5 and 6% on the week. So the oil price there helping to lift some of the oil and gas majors. We have seen further uncertainty over the weekend around the status of efforts to settle the conflict in the Middle East and get the Strait of Hormuz reopened. So that is fueling a bit of concern about supply. Industrial goods also there on the board of outperformers, advancing 0.4%. That's where the biggest gains are to be found in terms of sectors. Where are the biggest losses? Well, so far it's food and beverage that's leading the way lower. Almost 1% off there at the top of the board of laggards. Media stocks down a similar amount, 0.9%. Household goods also giving up ground this Monday morning, and chemicals as well, off by 0.5%. So that's the board of laggards. Let's see how the picture's panning out across the different indices. And we have got a slightly mixed picture here. The CAC unchanged, the London and Italian markets up a similar amount, 0.4%, give or take. Still waiting for print from the Xetra DAX. Various factors pulling markets in different directions. The oil price rising tends to weigh on equities. On the other hand, we've just coming to the end of quite a stonking second quarter earnings season. So let's see how things pan out this week. A lot for the markets to digest, including UK inflation data. Stateside, we get the minutes from the Fed's last meeting, bit of a hint as to the thinking on direction of interest rates and monetary policy there. So we'll keep a watch on all of that for you. And Steve has some details now of the latest data from China, I believe.
Yeah, and it's underwhelming. That is the fact. Jan to July property investment down 19.2% year on year. Property sales in that period down 11.8%. Again, if you want to see a bulwark of China come back, i.e. the consumer, this is not the data for that as well. In fact, I think there was some underwhelming, again, look at the jobless nationwide survey based jobless 5.2%. Jobless rate in major cities down, it's 5.2%. What else have I got? Construction starts down 24% year on year. Property investment down 19.2% year on year in the first 7 months. Private sector fixed asset investment negative 9.4%. And then on a year-on-year basis down 6.7%. I mean, industrial output, it grew, but lower than expected. It was up 4.5%, slowing from 5.3% in June. And the retail sales, again, it's the consumer that the Chinese need and want to come back to get a domestic-based economy up and running again. It only grew 0.6% retail sales after the 1% rise in June, and has had expected 1.5% growth. So a very underwhelming data, I'm afraid to say. Rory McPherson is Chief Market Strategist at Ren Sterling as well. Well, I've got you, Rory, on that. Just anything you guys are looking at on an Asian basis in terms of investment at the moment?
From an investment perspective in Asian markets?
Yeah.
Yeah, I mean, look, we've seen it's a market that we have quite a big exposure to. We've seen our managers rotate quite heavily within that market over the course of the year as we've had those 3 big stocks in the market drive it higher. It's a market that we still like, but we're slightly guarded by the headline fundamentals, which look amazing because it's on a 4P of sub 10 with super high expected earnings growth, but then that is predicated on a few big stocks plugged into AI spending.
I was going to say, I'm pretty sure I came across an FT story this morning talking about China tech stroke AI valuations kind of matching the euphoria we're seeing in South Korea, in Taiwan, and the United States as well. So is the story that I just mentioned, which is, got to be honest, weakish underlying economic conditions domestically, is that something you need to avoid and actually just chase the AI story, or actually flip that trade on its head, say the AI story's gone too far and maybe some of the more domestic plays look interesting?
Oh, I still think you want exposure to the AI story, and within that there's been huge divergence. I think the weaker economic data that we've seen actually in some ways helps propel that forward, keeps that going. I think we've seen that in the US data, which has fallen off a little bit over the last couple of weeks, and you've had the shift in interest rate expectations, which feeds into some of those tech names. I think that helps explain some of the big rally that we've had recently in tech after quite a quiet July, where we had all those strong earnings, but really tech didn't do very much.
I'm asking the same question because as I was on holes and reading sporadically as well, I was looking about the Nvidia getting involved in the financing a lot of their clients and that, and these big groups of people talking about how they're going to finance this. But it doesn't, for me, change anything. The story is exactly the same as when I left. And you just said, thank God I went away because the market rallied. Well, thank you for that. In fact, the market can pay me to go away more often if it likes. But the story's the same. It is still, revenues are growing because the same clients are growing their operations as well. Data centers are still building aggressively as well. But while some profitability is coming through, the linearity of that profit increase is still rather opaque. 1 year, 2 year, 3 years out. So what's changed?
Absolutely, and I think that's been super interesting in the market in the last 3 months, and you've had enormous stock dispersion. As opposed to a few stocks driving it, you've started to have a lot of different stocks moving at different points in time. And I think that there's been question marks about the market, about the continuation of that capex feeding through to profit. And we've seen that with some of the big companies reporting. Perhaps Alphabet would be an example of one which would run extremely hard. And then revenues and operating profit not perhaps growing at the same rate as its capex, versus something like a Microsoft, where you've got the growth in the cloud business and kind of still positive free cash flow for the quarter versus Alphabet. So I think there is big divergence. I think the trade is still very much still on. Actually, the valuations don't look too toppy. You know, you've got tech on 23 times forward, broader US market on 20 times forward. It's actually got cheaper this year. So I do think it's a market that you investors still want exposure to, but I suppose you take a step back and you think, well, look at the US market. You've had 8 out of 11 sectors that have just delivered double-digit earnings growth. You don't need to just plug into the AI trade. You should diversify a little bit across value sectors and these sorts of things.
Fair enough. It's a really good point, that, about the earnings season. I mean, I think it was FactSet. Their calculations were that the earnings growth rate for the S&P 500 was at about 50% for the second quarter. That's in spite of all the challenges that haven't gone away. You know, there's still tariffs, conflict in the Middle East, oil prices fluctuating. Is there anything that's on the horizon in the coming months, coming half year, that poses a risk to that, given how resilient we've seen these companies in terms of their performance?
I think the interest rate outlook definitely poses a risk, and I think we've seen that in some of the shifts, the pause for breath in the tech stock performance that we had in July, when expectations for US interest rate hikes were quite high. I think running at some 70% end of July for a hike in September. You had tech stocks pause for breath in spite of those super strong earnings. As you've got rate hike expectations move down, I think we're now running at about 30% chance for rate hike in September. So if you like pushed out, you've had tech stocks do well, and I think that for me is the big swing factor in the rally at the moment. Earnings have been super strong, as you mentioned. I think even if you strip out some of the cross investment that Steve referenced, they're still running at sort of 25% year over year.
Do you think, in terms of geographical differences, I mean, the European Pan-European Index Stock 600 can often feel underloved compared to the US markets, where there's the excitement and the buzz and the hyperscalers and all that investment going on there. But actually, I think so far this year, Stock 600 up about 10%, the S&P 500 up about 13%. It's not that far behind. Is this the moment when Europe starts to become loved once again?
Yeah, well, look, yes, the earnings growth has been particularly strong in Europe, which is great. Valuations aren't super cheap in continental Europe. We would prefer a market like the UK versus continental Europe, and perhaps you can wrap that up in pan-Europe. But a big reason for that is, I mean, yes, it's cheaper, but also the sector difference. Within the European market, you've still got quite a lot of tech. Within the UK market, there's next to no tech, so it offsets the broad global market, the broad US market, and you've still had the earning growth, and you've got the energy sector. So when you get push up in oil price, you get a little bit of defensiveness and diversification within your portfolio.
Speaking of the UK, we get the inflation print on Wednesday. What any thoughts, expectations?
Yeah, I think it'll tick higher this Wednesday. Because there's some low numbers dropping out of the series. I suppose when we look at the numbers for the last few months, they haven't been particularly high. We haven't had a very high energy pass-through. So yes, it will probably come in at sort of around 3%, maybe a little less, so ticking up from sort of 2.6. But I think as you get towards the end of the year, that will continue to move up because you get low numbers dropping on the series back into the 12-month print. But then I think it'll start to come down as we don't see the wages pressure.
Why is your concern, or your dislike, or your disdain, or whatever you want to call it, for the longer end of the bond market not a bigger problem for everyone? Because a lot of people like the short end because you're getting a large bang for your buck compared to history. It's okay compared to inflation. It's not perfect, but it's okay. People just don't feel the need to go involved in the longer end, where they see all kinds of wobble, whether it be auctions, whether it be longer-term fiscal deficit, sustainability. Why isn't that mild nagging that's keeping you out the longer end? Why isn't that a bigger problem potentially down the line, or is it?
I think it is. It's just
It's
when
tomorrow's
it's tomorrow's worry. It's when it comes through. Some investors that can hold a 30-year bond, 10-year bond to maturity, getting a positive real yield. So there's something there, but it's not enough to draw investors en masse to stem the tide that is long-dated yields rising. There was a chart on your show earlier this morning I saw with the US debt approaching 40 trillion.
Yeah.
I mean, I know it's like the numbers aren't quite so big, but it's a similar picture in the UK as opposed to debt service costs as a percentage of GDP. So at some point, those will come to bite, but that really, I think, is tomorrow's problem. At the moment, it still is being financed.
But I can keep asking the same question because one day it will matter. Then obviously not today. Why isn't that concern a bigger problem compared to the size of the concern we all had about it when the problem was much smaller 19 years ago. No, 19 years ago. 2007.
Yep.
The debt levels were much smaller and we all got really freaked out by it. So why isn't the much bigger debt levels, the much bigger debt to GDP levels, the bigger numbers, why aren't we more scared about it than we were in 2007?
I suppose
Are we just complacent?
We believe.
Have we forgotten?
I don't know if we've forgotten. I think that markets believe that central banks will step in, and that they will support the market, which perhaps wasn't accepted in the pre-GFC.
Including the fact that we've got a guy in charge of the Fed now, or the numero uno at the Fed, who said he wants a smaller balance sheet. That would be quite a test, wouldn't it, for someone who wants a smaller balance sheet stepping in to defend? Because the biggest way they can come in and defend, apart from hiking rates, which they're not allowed to do because the political masters wouldn't let them, is to buy more bonds.
Absolutely.
So what can they do?
Well, look, I mean, I can't get inside Kevin Walsh's head, but I actually think he's done quite a decent job in that you've had the tightening come through, you haven't had rate increases. So perhaps they can, at some point...
Mark's done his job for it. Yeah. Rory, lovely to see you. Thank you very much indeed. Nice to see you. And did you say you are going to pay me to go away more often because the market rallies? Or do you want to just get a collective group of investors together?
Steve, it's lovely having you back.
I'm like a reverse indicator, aren't I? Rory McPherson, lovely to see you. That's a very political answer. Lovely to see you back. Chief Market Strategist at Ren Sterling. Coming up on the show, Trump calls on Americans to accept higher fuel price, little small increase. That's what the president said, as a memorandum of understanding between the US and Iran is set to expire.
Listen to CNBC on the move with the CNBC app.
I check on how you're set to open the trading day.
Real-time market updates, strong number this morning. Listen wherever in the world you are. Download the CNBC app now.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC Plus.
President Donald Trump's envoy and son-in-law Jared Kushner reportedly met with the political leader of Hamas in Egypt on Sunday. The White House looks to secure backing for a Gaza peace plan. Kushner also reportedly met with mediators from Qatar, Egypt and Turkey, and is due to meet with the Israeli Prime Minister Benjamin Netanyahu today. The president, Mr. Trump, has called on Americans to accept higher fuel prices amid the Iran war. The US leader also suggested he could declare the Strait of Hormuz a US territory. A move, he said, could happen once Iran is defeated. Traffic through the waterway remains largely stalled, with the UAE accusing Iran of attacking another ADNOC tanker on Friday. Speaking on Friday, Mr. Trump insisted he did the right thing regarding Iran.
For you to pay a tiny little bit more for your gasoline, just remember you're doing it so that a very evil country cannot have a country. Really, it's the #1 state sponsor of terror in the world. We don't want to have them have a nuclear weapon. So remember that when you have to pay a little bit more, you're at $4. It's okay. I mean, it's I'll never apologize. I did the right thing.
This as a memorandum of understanding which both the US and Iran signed in June and have since repeatedly accused each other of violating, is set to expire on Monday. Joining us now is Dan. Dan, there's so many areas you could pick up on there and what the president has said and what has happened in the last couple of hours or so. Just fill us in with where we're at in terms of this MOU, I guess.
Well, let's talk about what could happen next. And the next phase of this US pressure campaign on Iran could come as soon as this week. And this time, the focus is on the economy. Treasury Secretary Scott Bessent says Washington is preparing new measures against Tehran, measures he has described as something never seen before. So the big question now is what that package looks like and how much further the US can actually go against an economy already under heavy sanction and strain. Washington could potentially look to tighten pressure on Iran's oil exports, on its shipping networks and its financial channels, including the companies and the countries still helping Tehran to move energy and money. Of course, the timing of this is also very significant. The 60-day Memorandum of Understanding between the US and Iran expires today, and there's little sign either side is ready to revive it. So the White House might consider this an opportune moment to tighten the screws. Of course, one of the biggest flashpoints remains the Strait of Hormuz. President Trump saying on Friday the US could soon declare the Strait American territory, while Iran has of course rejected that claim, saying Hormuz cannot be seized by tweet. So what we're seeing here is tensions at sea continuing to rise, and in fact just this past weekend an ADNOC vessel was attacked in the strait on Friday, the latest in a series of strikes targeting UAE energy and shipping. The UAE presidential advisor Dr. Anwar Gargash saying those attacks will not change the UAE's approach, which he describes as a balance of deterrence, diplomacy and international law. So as I mentioned, the focus now shifts back to Washington and whether the Treasury Secretary's next round of economic pressure can force some kind of change in Tehran's calculus, where the diplomatic track so far has not. It's back over to you.
Dan, with the expiry of this MOU, presumably that would mean the return to a state of war, or certainly heavy military activity between the two nations. Now, we know that the Defense Secretary or Secretary of War, the Pentagon's under a lot of pressure because of the concern about munitions and the depletion thereof, those munitions. What happens? Is it just going to just come and go, this deadline, because actually there isn't enough capacity potentially from the US to carry out the same kind of activity it had previously?
Well, that's one potential issue, and I really do think the UAE diplomatic advisor to the president, Dr. Anwar Gargash, said it best last week when he said, we're now in a state of not necessarily war, but not necessarily peace either. And it does appear as if the diplomacy has failed. So now, instead of taking a military track, the United States is attempting to pull the lever of economics on Iran, ratcheting up the economic pressure in a bid to try and get that regime back to the negotiation table. Now, how successful this new strategy will be is going to be very closely watched. The regime has already shown quite a strong resilience in the face of heavy international economic pressure over the last few decades. And of course, what the United United States can actually do now to try and bring about some kind of diplomatic resolution is unclear. So all eyes are going to be on what the Treasury Secretary has to say later on this week. As for the MOU itself, this is really just a deadline on paper. The MOU was already considered essentially a non-starter, a failure in the weeks after it began, as we saw the United States and Tehran exchanging differences of opinion over how it should be interpreted and enacted. So the MOU is effectively dead. Long live the next MOU if it comes forward, but of course whether or not that happens will be ultimately determined by how soon these two sides can get back to some kind of negotiation framework.
Good man, Mr. Murphy. Thank you very much indeed, as ever. Right, and we're going to have plenty more on that story and what it means for oil markets. Later this morning, Jeff Curry, former global head of commodities research at Goldman Sachs, now of course at Altis Partners, will join us in just over an hour's time. The value of troubled private credit loans has hit its highest level since 2017, according to new Financial Times analysis. Loans labelled with non-accrual status in the top 20 listed funds increased to a median of 2.8% of their costs in the second quarter, up from 2% at the end of Q1.
Nvidia has reportedly scaled back plans to support OpenAI's proposed 10-gigawatt data center project in Ohio, cutting its guarantee to less than $120 billion, down from $250 billion. According to the Wall Street Journal, investors had expressed concern over the chip maker's risk exposure. The paper says that plans currently being discussed would see Nvidia provide a financial backstop in the first phase, around 5 gigawatts of power, before deciding whether or not to lend any further investment. SoftBank's subsidiary SB Energy is developing the site. Over the weekend, the information reported that Nvidia is in talks to invest as much as $3 billion in that company. Anthropic has reportedly told investors its revenue surged by around 14 times on the year in the second quarter, coming in at $11.5 billion. It's according to Bloomberg, which cites documents that say the company actually posted positive adjusted operating income last quarter. This as investors count down to its expected IPO, which could come as soon as next month, according to the Wall Street Journal. Reuters says the company is being put under especially heavy scrutiny ahead of its debut, with Wall Street banks eyeing its revenue projections for 2028, which apparently top out at $200 billion.
Right, look, let's talk about these valuations. And people think I'm anti-technology and I'm not. I love it. I love the stuff. Love it. Put as much in my home as possible. But I'm a student of history, right? You were around in the 80s, just a bit, kind of, ish. Sort of, of course you were. Do you remember how much microwave ovens were when they first came out? Everyone's got to have a microwave. Do you know how much they were?
I was aged in single digits, so I wasn't aware.
Did you not ask your dad how much his microwave was? It wasn't the first question you asked when you were in single. Right, okay, I'll tell you how much they were. They were up to $1,000. Yeah. They were roughly $450 to $750 was how much a microwave was. In the UK, £500 to £800 was not uncommon because it was an amazing new technology. Still is. We've all got one. They're amazing pieces of technology. And before the Gen X's amongst us had air fryers, before you had air fryers, a lot of people had microwaves. Just explain that to people. So they were very, very expensive. Now you can pick up a perfectly acceptable cheap-end microwave for about $50, $60, $70. They're cheap. So all technology prices go down like this as well. Why am I saying this as well? Because it is a race for these developers of the product to sell as much of it at the higher premium price before the prices, quite frankly, crash. The prices will come down aggressively of all these products. And we're seeing it already, and that's my point. It's a race. Now, someone like Anthropic and the valuation, it was $1 trillion, it went go away a couple of weeks, it's come back, it's $2 trillion. People are talking about their 2028 valuations and saying, actually, by 2028, they can get their revenues to a couple $100 billion, and they are moving up aggressively. That's great. That's fantastic. Then they're going to justify this kind of $2 trillion valuation level. But if the price of the technology that they are selling to punters goes down too aggressively and too quickly in the meantime because of vicious competition amongst themselves and amongst the Chinese and others as well, then they've got a problem. That is why when I was where I was on holiday last Friday and I saw a piece on the FT, it was Jamie John and Clara Murray. great piece talking about OpenAI and Anthropic in price war as Chinese AI rivals gain ground. I'll do one paragraph. OpenAI, this is the FT copy from Friday. OpenAI recently said it was slashing the prices of GPT 5.6 Luna, its fastest and most affordable model yet, by 80%. That's more than the microwaves in the 80s. 80%. Anthropic has launched Claude Opus 5, touting the system as the frontier intelligence at half the price. I don't need to read anymore, that's my point. The cost of the technology is going down aggressively, the amount of revenues that people are generating are going up aggressively, and at the same time the valuations of the stocks are going up aggressively. This is a race. It's a race to sell as much kit as possible before it becomes a ubiquitous, diffuse and commoditized product.
I mean, the analogy that I drew when we were talking about the new fund that will allow people to trade compute power as a tradable asset was that we've seen even more recently where people piled into electric vehicles, and the rapid rate of technological development meant that very suddenly on the market were vehicles with a longer range, with better batteries, and actually the investment they had made in the EVs in the early stages, the value of those EVs dropped, because who wants to buy one that has a range that's nowhere near what you can currently get the latest cutting edge on the market? The same thing could happen with the chips. We're seeing the speed of development and the power and the evolution of them going at breakneck speed. And actually, if these, in some cases, these loans are secured against the chips, if they need to then call that in, if there's any sort of default on it, and they need to call that in that collateral, how can they say for sure that it's going to be valued anywhere near what it currently is today, when we've seen China, as you say, it's China coming up with chips that can do pretty much most of the processes you need just as quickly, just as efficiently, and for a fraction of the cost.
Not also. Final point I'll make is it's not about China buying Chinese stuff and America buying American kit. It's about who owns the ecosystem. The history of technology is who owns the ecosystem. If the Americans win, then they're going to have a greater market. If the Chinese win, then there are consequences. Cool. Good. Okay, coming up on the show, the River Rhine hits another record low, wreaking havoc with German shipping.
American soccer legend Landon Donovan. He'll explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
China is the world's second largest consumer market behind the US. In 2025, the country's total retail sales of consumer goods exceeded about 50 trillion yuan, or about $7.2 trillion, up by 3.7% year-on-year. With a population of 1.4 billion people, the market has long been a cash cow for global brands. But today, success is no longer a given, with some Western brands struggling and even scaling back operations in the country.
When you think about live streaming and social media, the hottest new thing is going to bubble up overnight, and you have to have it the next day.
The number one thing that you will see is how little loyalty Chinese consumers are because of the brands and how fast they innovate and how quickly they push things out. Consumers are very used to being hit by new concepts, new designs.
So what does it take to win in China?
Breaking news, market moves. Scott Wapner from the NYSE. Closing Bell. Weekdays streaming on CNBC Plus.
I found a bottle in the bathroom. Heaven into amber lips. I found a bottle where she kept.
Hello, welcome to Sport Box Europe. I'm Ben Boulos with Steve Sedgwick, and these are your headlines. Investors eye a Treasury auction on Wednesday as national debt looks set to cross the $40 trillion mark as soon as today. While China's economy takes a bruising in July, retail sales, urban investment and industrial output all missing expectations as the country's Stats Bureau cites external uncertainties and extreme weather. The US-Iran Memorandum of Understanding expires Monday, US time, with talks to end the war deadlocked. President Trump concedes Americans will need to live with higher fuel prices.
For you to pay a tiny little bit more for your gasoline, just remember you're doing it so that a very evil country cannot have a country. Really, it's the #1 state sponsor of terror in the world.
Europe continues to reel from heat waves. Wildfires ravage Belgium, forcing hundreds to flee, while water levels in Germany's Rhine River fall to a further record low. Berkshire Hathaway builds up its stake in Alphabet, making it the company's third largest holding, as quarterly filings stateside reveal a big tech tug of war among institutional investors.
Still smells like her.
A quick check on equities half an hour into the trading week. Pan-European Stock 600 currently up about 0.1%. And this is how the picture plays out across the various regional bourses. Lacking clear direction, to be honest. We've got the DAX and the CAC are on below the flat line. Not much, but just a shade below the flat line. Meanwhile, the FTSE 100 and the Italian mid up there, both in positive territory. We'll have a quick look at the best sectors as well while we're here. Might as well. Basic resources up 1.3%. Tech advancing as well. We've got healthcare and telecoms also on the board of best performers. There's always a downside though. Let's check in on the sectors where we're seeing the biggest falls. Food and beverage off by 0.8%. Retail down as well. Household goods off by a similar amount. And media stocks giving up some ground this morning. We are several hours off Wall Street Open, but this is what the futures are indicating. Again, a bit of a mixed picture there. The S&P 500 and the Nasdaq are both looking to open higher. The futures calling a negative start to the trading week on the Dow. Steve.
Thank you very much. Firefighters have been battling Belgium's largest wildfire on record across the weekend. The blaze has destroyed more than 30 square kilometres of land since it began in the High Fens Nature Reserve on Friday near the German border. Germany's Rhine River has hit another record low, falling to just 6 centimetres at the Kalb choke point late on Friday. The river usually lies 1 metre below the gauge and is a key indicator. The low levels have halted shipping, moving most transport to ships and trains. Annetta joins in Frankfurt. Annetta, it's tragic on so many levels, these stories on a daily basis about what is happening across Europe. But I want to ask you a little bit about the inevitability of lower levels of the Rhine on a yearly basis. I'm pretty sure you and I talk about this every single year. Why hasn't Germany invested in alternative routes or actually improving the irrigation systems, the flow of water systems, the conservation of water, just actually invested in alternatives when you and I seem to be talking about this on an annual basis?
Well, you're completely right, and this is one of the many infrastructure projects in Germany which has never been touched during the last 2 decades, one has to say, because it's not every year, to be fair, that the River Rhine drops to very low levels, but it is more frequent in recent years, where the latest record or the last record low was hit in 2018, but last year as well it was low. So the warmer the summer, of course, the more frequent we are seeing those lower water levels. But little things have changed, but more on the corporate side. So they have adjusted their production setup in order to sort of plan for that potential low level of water during the summer period. But of course, the chemical industry cannot change how they get their stuff to their production sites, because much of the chemicals need to be shipped throughout Germany. So having said that, probably that the deepening of the River Rhine, the change of the water flow is part of the huge infrastructure projects now sitting with the government, and it will again probably take years until we see changes here. What currently the situation is that today in the morning we at that very important choke point Kauf, which is close to Frankfurt, the water level has hit another low with 6 centimeters above the general water level gauge. But the predictions are that this is now going to recover slightly, but it will take probably weeks until we'll see another, or until we'll see the water level coming back to levels where goods can be transported just normally throughout Germany. We're already seeing or witnessing a first north and south divide, which I think is very interesting. Even petrol prices in the south are more expensive than in the north, because clearly the Rhine is no longer navigable with like fully loaded ships. And of course the Rhine is the lifeline between the north and the south when it comes to transporting heavy goods. Just to give you some statistics, just 7% of goods in Germany are transported on the water, but there's a big but, because it's mainly heavy goods such as petrol, chemicals, construction, but also food like wheat and grains normally go on a ship because it's much cheaper to transport them via a vessel than on a truck. And of course you can't just put everything on a truck, which would make things of course easier in a situation as it is now. What will happen is that what we're already seeing, that freight rates are very much expensive, and of course that will also trigger down on certain goods, and we're going to see an impact on consumer prices, which again will be a reason why the ECB is watching those low water levels.
Okay, Annette, thank you very much. As ever, we look forward to speaking again later. Let's bring in Paresh Jain, who is Global Head of Transport and Logistics Research at HSBC. Paresh, good to have you with us. Given what Annette was talking about there, the disruption to shipping in the Rhine, we've got the ongoing disruption in the Strait of Hormuz, Red Sea routes affected by the Houthi rebels. One might conclude this is a really tough time for shipping, and yet, a quick glance at Hapag-Lloyd and Maersk, their share prices are up. They seem to be doing pretty well. But is this a short-term bounce given the jump in prices, and what's the medium-term outlook?
Sure, and pleasure is mine. So far as these disruptions are concerned, ironically, actually, it works well for shipping lines because it dislocates the capacity temporarily, and which pushes the freight rate higher. And you talked about Rhine River, you talked about Panama Canal. I'm based in Hong Kong. In this part of the world, you are seeing congestion because of various typhoons. I mean, the ships have to queue up over weeks in Shanghai, which is world's one of the largest terminal where a lot of the export activities had held on. So you are seeing chaos across, partly because of geopolitics, partly because of environmental reasons. And if you see in the last 6 years, seems like this has become more of a norm than an exception. And shipping lines results over the last few years speaks about that. So in a shorter term, probably these things are difficult to resolve, and therefore you will see somewhat elevated freight rates, and which is reflected into Maersk and Hapag's earnings and into their share price as well.
You talk about chaos in global shipping, the risk of putting you on the spot. Is there an estimate of what percentage of global shipping is currently disrupted by all of these various factors?
No, absolutely, and we put out a lot of research paper on that. But if I have to put into context, let's take 2019 as the base year, where we were pre-COVID, there was not much disruption, and take 2025 or part of 2026 as a base case. And you will see that disruption was across different commodities. If you take crude for an example, there is a 0% demand growth in the crude in 2025 versus 2019. But we have seen 14% increase in the nominal supply. And still, 2025 was a phenomenally profitable year. Similarly, if you look at the container trade growth over the last 5 to 6 years cumulatively is in high teens, whereas the nominal supply has grown up close to 40%. So if you see on the last 5-6 years, if you're particularly talking about container, close to 20% of the capacity has been absorbed because of the lack of port infrastructure, trade imbalance, longer routes, and the disruptions that we have seen along the way.
Parash, absolutely fascinating conversation between you and Ben there. We're talking about a confluence of geopolitical issues and, of course, climate issues as well. Are we still treating all of these issues, though, as they are cyclical, they come and go, rather than looking at the longer-term picture and what needs to be done from an investment point of view, and indeed, dare I say it, from an infrastructure point of view, on a medium to longer-term basis, because things have changed for good?
No, and you are right. I mean, we have seen an underinvestment, whether it's the port sector, whether it's on the land side infrastructure, and some regions are more acute than the other. And there has been an acknowledgement, in fact, as early as the latest analyst briefing by Vincent at Maersk. So in our conversation to the investors, what we are saying is that to make money in investing into the shipping stocks, you have to unlearn two things of the past, which is that chaos is an exception and 3% demand can be met by 3% supply. What they need to relearn is that chaos is a norm in your base assumption, and probably you need significantly much more supply to handle the 3% of demand growth. And that essentially changed how you look at some of these shipping stocks, how investors worry about the overcapacity in this space, and in a shorter term, they continues to defy.
That is a huge answer, Parash. I'm going to reiterate, I made a note of it. You have to unlearn that chaos is the exception, and you have to learn that chaos is the norm. That is an extraordinary and I think very prescient comment. Just expand it a bit more.
Yeah, so what we're essentially saying is that if you see, particularly when we talk about container shipping, we are as good as the weakest link supply chain, right? Whereas there is enormous amount of focus on the ship capacity. You can blame it to the analysts like us, because we analyze till we get paralyzed the ship capacity data. But there's not much research gone into, do we have a physical infrastructure to handle those ships? Ship size has kept going bigger. See, it's a lot easier for ships to move as and where the demand flows, but you can't move the physical port infrastructure. So as the China-US trade slows down, China's trade to the rest of the world grow exponentially. Do we have enough port infrastructure in Africa? Do we have enough port infrastructure in ASEAN or Latin America? And that is ensuring that a lot of the ships spend enormous amount of time in ports. And then when we talk on the environmental side, you have seen the El Nino has been talked about by a lot of the economists in the past few weeks. It will be talked pretty much till going into early next year. And you are seeing a drier weather in some part of the world, and you are seeing typhoons becoming super typhoons in some part of the world. Rhine River is an example of drought. We are seeing the similar issue may arise in Brazil. On the other hand, you are seeing wet North Asia. And all of these means that while it's difficult to predict when, where, what will go wrong, but as an investor looking from outside, the base case should be that something somewhere perhaps will keep going wrong. And that's how we will navigate our investment decisions.
Parash, again, you keep saying fascinating things I want to come back to, which is great. It's the whole point of the show. Is China-US trade slowing down meaningfully? I've kind of tried to have a look at the actual trade rather than the hyperbola, and it still looks pretty robust to me.
No, absolutely. In fact, what we are trying to say, one of the themes that we were running is that the world has benefited from China plus one since the global financial crisis, and we are seeing emergence of ASEAN countries, Mexico as a secondary trade hub, and probably in the last 18 months we are seeing US plus one as a theme playing out, i.e. a diversification of consumer base. So China's export is hitting record high. China's export to US perhaps have plateaued, but you are seeing the China's trade to Africa, China's trade to Latin America, China's trade to ASEAN, all of them are going records. And more importantly, bear it in mind, even if these countries pick up the low-end manufacturing, a lot of the machineries that we need will still need to be imported from countries like China. And therefore, you are seeing a divergence in trade rather than slowing down in trade growth. So global trade growth is going further, going wider and deeper. On the contrary of a lot of thoughts about nearshoring, reshoring, friendshoring, global trade is here, live and kicking.
Fascinating. Fact, rather than rhetoric, is that the bringing product closer to home, whether you're doing it, you're Chinese, or whether you're American, or whether you're European, is actually creating no difference to the over level of trade, or actually creating more trade, but it's not creating less trade.
Absolutely, and because it's pretty much an extension of supply chain, right? So because what China achieved in the last 30 years is they started with a low-end manufacturing, but then they built the entire supply chain in their backyard. So if a US company places an order to China, everything is in their backyard. So there is not much to and from of raw material or a semi-finished goods. But as the low-end manufacturing moves further away from China, those countries still need to rely on China for a lot of their semi-finished goods, a lot of their machineries. And then it gets manufactured and then being exported. So it is creating actually more layer of trade rather than less.
Loved every minute of that interview. Thank you, Parash. I learned a lot. Nice to see you, sir. Parash Jain, who is Global Head of Transport and Logistics Research at HSBC. Coming up on the show, 13F filings are here. Find out which tech company Berkshire Hathaway has loaded up on in the second quarter.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime report, weekdays streaming on CNBC Plus.
The AI boom is usually told as a Silicon Valley story, but some of the biggest winners are thousands of miles away in South Korea. And their windfall is now spilling into an unexpected place, the housing market.
Before we saw this massive rally this year, people just like to invest in the housing market because there is no alternative for savings and investment.
From January to April 2026, home buyers used about 3.7 trillion won, or roughly $2.4 billion from stocks and bond sales to fund purchases.
The government wanted to boost the stock market so that people could move away from homes into the stock market, but people are coming back to the property market with the money that they earned in the stock market, and it's also sort of this vicious cycle.
The danger is not that one stock market sell-off will immediately crash home prices, it's that the same wealth channel pushing stock gains into housing depends on confidence.
JP Morgan's CEO Jamie Dimon has reportedly warned the new UK Chancellor John Healey against a bank windfall tax, echoing previous comments. Dimon told Healey in an introductory call last week that higher taxes would hurt jobs and that spurring growth was the only way out of UK's economic difficulties. This is according to the Financial Times, which said that Dimon is said to have joined the call at the request of Healey's team, with the Chancellor due to speak to other bank bosses this week. Berkshire Hathaway has added $17 billion worth of Alphabet shares in the second quarter, according to the latest 13F filings. Google parent company has now become the third largest holding in the Omaha-based conglomerate. Meanwhile, Nvidia disclosed a $21 billion stake in SpaceX, its second largest holding, behind its stake in Intel. I suppose this underscores the huge sums that are being placed on the bet around the hyperscalers, big tech companies, and the anticipated demand for the AI compute that they are investing in at the moment. I suppose the question is whether that demand is going to hold up and meet the expectations. We're hearing companies talk about their token cost adding up and increasingly doing calculations as to whether they feel they're getting the right sort of return on the amount their employees are costing them in AI compute.
Couple of points. One, the Google story I think fascinating. Of course, it is no longer Warren Buffett leading the fray there as well. Greg Abbott now looking at various assets. Interesting at this stage of the cycle, given what we heard from Rory McPherson earlier on, that a lot of these technology companies do not look that expensive to him, and neither do they appear to Berkshire as well, making it, as I say, one of their biggest holdings next to Amex, Coca-Cola, and Apple as well. In terms of the other point you're making as well, look, it's a sensible. I invest in you, you get a higher valuation, regardless of the traditional economic metrics as well. The fact of the matter is, it is very, very, very difficult, even for the biggest fans out there of Elon Musk, to justify current valuations of SpaceX. And yet, smart investors such as Nvidia believe that actually it's going to grow into those valuations. It's going to grow into that as well. And good luck to them as well. It is hard for me to escape the circularity of a lot of these trades as well, where Nvidia and SpaceX have a lot of transactions in terms of products going back and forth, and yet now they are also investors as well in that as well. So I find that very interesting that SpaceX uses a lot of Nvidia products as well, and Nvidia is a big investor as well. And of course, that's the third leg of this story as well, that we're seeing a lot of the vendor financing, which we talked a lot on this show as well, a traditional form of propping up your clients and sort of making it affordable for your product as well. It is all very circular. That's not necessarily a bad thing, it is just how it is.
There's a full write-up on the CNBC website about this latest filing for Berkshire Hathaway. One of the other interesting shifts is how it has continued. The fund has been selling down its financial holdings in recent quarters, and it continues with that trend. I mean, not the sort of dramatic percentage changes, but its holding in Bank of America was reduced. It's that sort of direction of travel. It does look like the others. It is placing itself very much on the optimism and hopes around AI.
Let's just look at this on a very basic. Let's say that you're employed by CNBC. You buy in our parent company, Versant. Let's say you own shares in Versant as well. Let's say that the company came to us and said, by the way, we'd like you to, all of the employees, lend us money at a decent amount, 5%, 6%, 7%. And you might think, okay, it's a decent return. Well, maybe I'll lend money to Versant. Well, not that Versant's going to borrow money off any of us. I'm just making the point. So let's just say you own shares in Versant. You're paid by Versant. The show is based on one of the Versant products. And then you lend money to Versant as well. Wouldn't your financial advisor turn around to you and say, what else you got going on, Ben? What else you got that's less Versant-like, less CNBC-like? And I think your financial advisor would be very justified saying, maybe you want to diversify a little bit. Maybe you want to have a look at other products. There are other things out there you might want to invest in. Maybe other lesser interest rates you might want to achieve by just diversifying where your exposure is as well. That's all I'm saying, is that it seems incredibly reliant on the same story and the same customers and the same people, this trade at the moment. I'm lending money to the people who are buying my product as well, and we're all relying on the same proliferation of the product as well. All I'm saying is there doesn't appear to be a vast amount of diversification in the relationship that these companies have with some of their clients.
Yeah, and I think, I was just quickly checking, I think I'm right in saying that Greg Abel's first major purchase was in
that's different.
House builder.
Well, I think that's with respect, I think that's 100% the opposite of what I'm talking about. I'm talking about the tech AI trade as well. I think the Berkshire story is completely different, and it's a very different way of investing.
I mean, I was just going to make the point that actually, with all the shifts and the twists and turns of what happens with the fund, people were looking as to what direction. Yeah, the point you made that it is obviously no longer Warren Buffett leading it, but were looking to the direction his successor would take, and they thought initially he was going to stick with the strategy of the sort of long-established traditional sectors. But this is sort of really signals an appetite for the tech investments as well. I suppose how it plays out over the next few months and the coming quarters will give more of a clue as to his thinking and how it will go under his leadership.
Well, yeah, and you're interested in the history of the company as well. Have a look at what Mr. Munger, the late great Charlie Munger, had to say about Elon Musk as well. Very interesting comments. I'll leave that for our viewers to do their homework. Jane Street posted its first down month in a decade in July, with multiple outlets reporting the trading firm lost $15 billion due to its exposure at AI-focused hedge fund situational awareness. Now, the FT reports that the figure was revealed to lenders as part of Jane Street's deal to move its $11 billion public debt pile to private investors. Despite the loss in July, Jane Street has generated, wait for it, trading revenue of over $40 billion so far this year, according to multiple reports. Coming up on the show, Trump calls on Americans to accept higher fuel prices as a memorandum of understanding between the US and Iran is set to expire.
The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Power Lunch, Greening on CNBC+.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Listen to CNBC on the move with the CNBC app.
A lot of strong numbers this morning.
Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
A check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection, Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
A very warm welcome to Squawk Box Europe. I'm Steve Sedgwick with Ben Boulos, and these are your headlines. Investors eyeing a Treasury auction on Wednesday as national debt looks set to cross the $40 trillion mark as soon as today. Whilst China's economy takes a bruising in July, retail sales, urban investment and industrial output all missing expectations as the country's stats bureau cites external uncertainties and extreme weather. The US-Iran Memorandum of Understanding expires Monday stateside with talks to end the war deadlocked. President Trump concedes Americans will need to live with higher fuel prices.
For you to pay a tiny little bit more for your gasoline, just remember, you're doing it so that a very evil country cannot have a country. Really, it's the #1 state sponsor of terror in the world.
Europe continues to reel from heat waves. Wildfires ravage Belgium, forcing hundreds to flee, while water levels in Germany's Rhine River fall to a further record low. Berkshire Hathaway builds up its stake in Alphabet, making it the company's third largest holding as quarterly filings stateside reveal a big tech tug of war among institutional investors.
Watching how it turns. Wondering why the wind won't carry me.
So 1 hour into the new trading day, the new trading week, and European equities moving in an upward direction. The Dow still just below the flat line, with the other key regional bourses in positive territory, with the Italian market leading the way higher. The FTSE 100 benefiting from the oil and gas majors seeing a bit of upward drive from the rise in the oil price. We saw oil last week advance around 5 to 6% on the week, and that is helping lift some of the oil and gas stocks. Let's have a look at which sectors are performing best, though, this Monday morning. And basic resources leading the way higher, 1.25%. Tech, very much risk on there in that basket of stocks, 1% or so higher. Healthcare and travel and leisure also outperforming on the Pan-European Stock 600. In terms of the sharpest falls, they're to be found in these sectors: food and beverage, down about 1.25%, household goods off 0.8% as well, retail down, and real estate rounding off the wall of underperformers. That's the picture in Europe as things currently stand an hour into the trading day. Let's have a look at what is being anticipated when Wall Street trading starts. Bit of a mixed picture there. This is what futures are indicating, the S&P 500 being called higher, save for the Nasdaq. Dow, though, looking to start the week on the back foot. Steve.
Right, let us move on. The Chinese economy activity cooled off in July, with industrial production rising 4.5% compared to a year earlier, slowing from 5.3% in June and missing expectations. Retail sales absolutely pivotal, aren't they, for getting this domestic pool of money galvanized. Well, retail sales were really disappointing. It's a key metric for Chinese consumption. It rose only 0.6% in July. The forecast was something over 1%. Right, let us take a look at where the US Treasuries are trading as we speak after last week's concerns about the long end and the appetite for paper in the auctions. 5.25 is where the 30-year paper is trading. Investor attention centering on US borrowing costs this morning after a string of lackluster data-dented sentiment last week. Wednesday's 20-year Treasury auction could well be a watermark for long-term debt appetite after 10 and 30-year sales, as I mentioned last week, saw multi-decade records on auction yields. Now, this is the US national debt clock is on track to hit the $40 trillion mark as soon as today, just days after July's deficit figure release. A record for the month at $432.3 billion. Bank of America reckons servicing of that debt has cost the US nearly $1.5 trillion over the past 12 months. Matt Orton is chief market strategist at Raymond James. Matt, I'm bemused, always have been a bit about debt. Nice to see you, my friend. Why don't the markets beyond the bond markets care a jot about these debt levels, these deficit levels, and the vast amount of money that America is having to pay to service its debt?
Hey, good morning, Steve. It's always great to join. And I think the answer is multifold. I think one of the key reasons the market doesn't seem to care that much is that it tends to be the only game in town, and most of the other relative options that you have also don't have their fiscal houses in order. So when you look at the US relative to other markets, it's still the most deep, the most liquid market in the world, and I think that provides some advantages to maybe look past some of the challenges you have with respect to debt. But also at the end of the day, it's supported by continued growth. So I think there's hope that the US will achieve this plan of having stronger GDP growth to grow its way out of this deficit. But it's a challenge nonetheless. You're seeing that reflected in the yields at the back end of the curve. But the good news, at least for the equity market for right now, is that these yields have not impacted the ability of companies to earn, the abilities of companies to add debt to their balance sheets, and that has really supported the strength that we've seen across the equity complex, where I continue to remain very optimistic heading into the end of the year.
Okay, so that was a multi-pronged answer. The second part I can't argue with, Matt. Absolutely, the companies are knocking the ball out of the park. I'll leave that for the moment. But the first bit, were you basically making the point that because everyone else's ship has got a leak in it, it doesn't matter about the leak in your ship?
I mean, unfortunately, I think that's part of the answer. We know that there's a massive challenge with respect to national debts and deficits. But at least for right now, we're not at the point where it matters enough to markets to break things. Now, there will come a point in which that matters. I just don't think we're anywhere near close to that point, and we're not seeing any sort of, real bond vigilantes coming into the market to really force the fiscal house in order. And until you start to see that pushback, Steve, it's going to be really hard to have any sort of change from politicians because, again, being elected, we're heading into a midterm year in the US, it doesn't help to be elected to say, I'm going to cut spending for my constituents.
Matt, just to pick up on that point, we know that Kevin Walsh, when he took over the job as the new chair at the Fed, had this ambition of reducing the balance sheet. Realistically, can he do that, given what we've seen in terms of the moves on Treasury yields and what a shrinking balance sheet could do further on that front?
It's a great point, Ben, and I think it's going to take a lot of time. I think the market really had a lot of expectations that Walsh would be able to come in and immediately make some significant institutional changes to the Fed. That was never a reasonable assumption to have coming in. I think we're gradually going to see Walsh take action with respect to the balance sheet. But again, as he said at the very, very beginning, there's a committee for that. We're going to have to go through and I think see the findings of the committee with respect to the various changes he's looking at, and then explore the options of what reducing the balance sheet might do relative to potentially using interest rates for Fed policy. I think ultimately during his tenure, we're going to see a combination of both interest rate policy and balance sheet reduction. But I do think the market really has gotten things wrong with respect to the level of hawkishness that they've been pricing in for the Fed. I've been pretty consistent in saying I don't expect to see rate hikes this year. The market, I think, is coming around to that because we've seen data that's just not supportive of needing to hike rates. And again, that's a good thing for the overall market, and that's part of the reason why we continue to see the market rally. We're seeing a little bit of easing at the back end of the curve. That's very helpful for the setup of risk assets heading into this month where seasonality does remain strong.
Here we sit on a Monday morning looking ahead at the coming week. I just wonder how much risk you feel there is coming towards us, where we've got potentially new tariffs on Canadian imports into the US up to 50% or so. We've got the Fed minutes coming out from the last meeting. No sign of any resolution to the conflict in the Middle East. Oil was up 5% last week. How do you sort of gauge this coming week in terms of the risks that those various factors and others that you may have in mind present to the markets?
There's definitely risks, but I think the one index that I'm going to throw out to show that there is willingness to continue to take on risk, Ben, is look at the Russell 2000. The Russell 2000 and S&P 600, both small cap indices in the US that you would think tend to be correlated with rising rates, or I should say they tend to go down when rates rise. They're at record highs, and the Russell 2000 is actually the strongest performing index across all of the US indices. So that indicates to me that investors are willing to take on risk. What really matters most right now is our company fundamentals supporting the risk that you specifically are taking in your portfolio. And what we have seen is that there's a lot of areas within technology that are not that sensitive to what's happening with respect to interest rates or a lot of these macro challenges that we continue to see around the world. There's also parts of financials which tend to be a little bit more domestically levered. U.S. growth is tracking to be, I think, over 5%, at least according to the Atlanta GDP Now tracker. So there's strength and resiliency within the U.S. economy, and I think that is giving investors the confidence to continue to take on risk, especially because they de-risked portfolios pretty significantly during the month of July.
It's really interesting that point you highlight, the Russell 2K up around 24% year to date. And yet we got those retail sales figures out from the US on Friday, which were weaker than expected. I also know we've got some key reads on the US consumer coming up this week. We get the results from Walmart, Target, and Home Depot. How closely will those be watched? How much is riding on what we see from the numbers from those reporting results this week?
Very closely. So, Ben, while this is a slower week with respect to overall earnings, it's a big week, like you noted, with respect to retailers. And so we kick off the week pretty quickly with respect to hearing from a number of different companies. I think you're going to want to pay attention to Walmart very, very closely later in the week, because that tends to be a very strong barometer, not only for the lower end of the K consumer, but also looking at what upper end consumers are doing with respect to switching, what their strength is with respect to spending. And if we see good results from a company like Walmart, I think that's going to be an indication that while retail sales may have slowed, that the consumer itself remains healthy. And I think that would corroborate a lot of what we're seeing from the financial companies that kicked off earnings season last month, is that there are not real challenges that they're seeing in aggregate across the consumer. And I think that is why we've seen such strength across the rest of the earnings complex that we've already received so far this quarter.
Yeah, but I mean, look, at Walmart, Matt, is a brilliant, brilliant company, and I've followed it for a long, long time. But most of our viewers probably still aren't aware, but they're all canny, they do know, that it's trading at such a massive, massive premium to something like Amazon. I mean, yeah, and I've got numbers in front of me. Amazon trades at 23 times forward. Great company, no one's going to argue with that. But Walmart trades at 37 times forward now. What am I having to pay for these companies? Am I having to pay too much?
Yeah, it's a great question, Steve, that my team and I ask ourselves, because we really wish the retail business of Amazon would be valued like Walmart's business. That would really, I think, help a number of different tech investors out, or at least, Amazon and consumer discretionary. But nonetheless, I think the challenge with Amazon is that there's a number of businesses that are put together relative to Walmart, which is a pure play. I think it's an operational, it continues to be an operational turnaround growth of online business. And so you continue to see Walmart and Costco both richly valued with respect to the rest of the sector. And as long as you continue to see the investments that they're making grow, and their balance sheet remains rock solid, I think they can command a premium. Because again, consumer staples, where both of them sit, tends to be a richly valued sector. And you're paying up with respect to a multiple because you're getting that sort of consistency with respect to the business, which is different from how Amazon's consumer business might be related. But nonetheless, outside of the consumer space, which is an okay place to be, I think where investors still really want to be focused is going to be in the higher growth parts of this market, because that's where we had the deepest sell-off during the month of July. That's where you have valuations across a number of tech companies, depending on what you own in memory, single forward PE multiples, relative to even some of the mega caps that are trading cheaper than the S&P 500. So there's definitely opportunities across the market. I encourage investors to be leaning into growth right now, because that's where I see the most compelling opportunities, at least in the short term.
Well, somewhere in growth anyway, Matt. Let's just disagree on that one. But hey, look, here's the thing. People are looking at Greg Abel now and trying to work out, what he's up to. Well, how different he is from Warren Buffett, how different he is from Charlie Munger. And people say, well, he's going for tech. Look, he's at 13, they're filing. He's gone for Google. It's like changing the platform. But actually, I think it's very Warren Buffett, because, again, I'll play the same game as I played with you on Walmart and Amazon. Coke, which, historically the great Warren Buffett, stock. Coke's trading at 25 times forward. Google, Alphabet, trading at 20 times forward. He is being very Warren Buffett by buying something that is a great cash-generating company at a discount to something like Coke.
He is. I think that's a great point, Steve. It's crazy to me that a company like an Alphabet is trading at a multiple that's less than the S&P 500 and significantly a number of turns lower than a consumer staple company because they're growing earnings at multiples of what a company like Coca-Cola is doing. I think the challenge with Google, at least that the market has right now, is question marks with respect to taking on debt. Their capital structure is starting to change. It's becoming a more CapEx-intensive business. But I think just like Berkshire Hathaway sees, when you look at a company like Google, you do see a vertically integrated company making its own chips, operating in the cloud with very significant growth, $500+ billion backlog over the next 2 years with respect to its cloud services business that it expects to recognize as revenue over the next 24 months. That seems pretty attractive to me. And that's indicative, I think, of other opportunities that exist across the tech stack. And that's why when you look at the broader 13F filings that we got to look at the end of last week, technology was the biggest increase across sectors when you look at all of the aggregated 13F filings.
Love it. Love the conversation, Matt. Thank you so much indeed for getting up early and looking so smart at such an early time. What are you, 4:15 and you're suited and booted? Looking great, my friend. Thank you very much indeed for that. Matt Orton, Chief Market Strategist at Raymond James.
Anthropic has reportedly told investors its revenue surged by around 14 times on the year in the second quarter, coming in at $11.5 billion. This is according to Bloomberg, which cites documents saying the company actually posted positive adjusted operating income last quarter. This as investors count down to its expected IPO, which could come as soon as next month, according to the Wall Street Journal. Reuters says the company is being put under especially heavy scrutiny ahead of its debut, with Wall Street banks eyeing its revenue projections for 2028, which apparently top out at $200 billion. NVIDIA has reportedly scaled back plans to support OpenAI's proposed 10-gigawatt data center project in Ohio, cutting its guarantee to less than $120 billion, down from $250 billion. According to the Wall Street Journal, investors had expressed concern over the chipmaker's risk exposure. The paper says that plans currently being discussed would see NVIDIA provide a financial backstop for the first phase, around 5 gigawatts of power, before deciding whether or not to lend any further investment. SoftBank subsidiary SB Energy is developing the site. Over the weekend, The Information reported NVIDIA's in talks to invest as much as $3 billion in that company.
The value of troubled private credit loans has hit its highest level since 2017, according to new FT data. Loans labelled with non-accrual status in the top 20 listed funds increased to a median of 2.8% of their cost in the second quarter. That is up from 2% at the end of the first quarter. Right. What's that? That is, believe it or not, the level of the Rhine at its tightest choke point. That is 6 centimetres. Amazing. That is the level of the Rhine at its choke point in Frankfurt. Wow. Coming up on the show, the River Rhine hits another record low, wreaking havoc with German shipping. We'll discuss whether I was accurate on that is exactly 6 centimetres or not after a short break.
You can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170-plus global markets. The best informed investors choose Interactive Brokers.
Squawk Box streaming on CNBC Plus.
on market shaping industries. We are watching the sixth little dragon, the first to be listing in the Hong Kong markets, supply chains, and global momentum.
Do you feel pressure to create the next Labubu soon?
This really is a business-first pivot despite the geopolitical strains. The China Connection, weekdays.
The trade heads are gathering against the backdrop of the global energy crisis.
CNBC.com and the app anytime. Let's get to your headlines. Only on CNBC, connecting you with China.
In this CNBC Explained, we explore why Asia is leading the global IPO market.
We have a really big year for IPOs with SpaceX, OpenAI, and Anthropic, but analysts are pointing out that there's much more volume here in Asia.
And we look at how South Korea's AI chip boom is spilling into the housing market.
In Korea is a reflection of what people consider as their safety net, as well as a symbol of success.
The show that explains the why behind the headlines. Only on CNBC.
Hey baby, and it brings me to my knees. She called to say she's running late. Be home by 9:30. She called to say she's running late.
Welcome back. Firefighters have been battling Belgium's largest wildfire on record across the weekend. The blaze has destroyed more than 30 square kilometres of land since it began in the High Fens Nature Reserve on Friday, close to the German border. Meanwhile, in Germany, the Rhine River has hit another record low, falling to just 6 centimetres at the Kalb choke point late on Friday. The river usually lies 1 metre below the gauge and is a key indicator. The low levels have halted shipping, moving most transport to trucks and trains. Annetta joins us now. Annetta, I suppose there are some goods that can easily be transported by road and by rail, but some, it's simply not practical or cost efficient.
Yes, exactly. I mean, if it's only 7% of all goods in Germany which are transported that go on ships, but those are not so easily transferred to the road because they are very heavy, and especially it's mineral oil, it's petrol, it's chemical ingredients, construction material, but also grains, wheat, food-related stuff which is heavy, normally is shipped because it's much cheaper and sometimes also less dangerous than to have it on a truck on the road. So, but this channel, or the River Rhine, is currently witnessing record low water levels, never seen before. It's 50% of the last drought back in 2018, which of course is preventing the ships to flow with a full load. And that means that, for example, the chemical industry is not getting all of its supply it's needed. It just runs at 90% of capacity. But also, interestingly, I've been telling that story before, there is a growing divide between petrol prices in the south of Germany versus the north of Germany, because it's cheaper in the north, easy access to petrol, and it's not so cheap it's more expensive, I should say, in the south of Germany. Overall, economists do expect that this current water level and the implications it has on transportation costs, especially because transportation costs are rising the lower the tides, it's having a material effect on German GDP. The Institute for the World Economy is expecting that this situation is chopping off roughly 0.4% of German GDP. The Kiel Institute for the World Economy thinks that it means that the third quarter will actually see a lower GDP by 0.2%. So it's quite a substantial effect. And of course, the key question is, when will it get better? Current projections do see water levels rising, but it needs a certain time until the water level goes back to 80 centimeters or so, when most of the ships can pass that choke point once again at the River Rhine, close to Frankfurt, in a tiny village called Kalb.
Yeah, it sounds fascinating and terrifying at the same time. Thank you very much indeed. Now, there's a lot of stories we do on a daily basis. I don't know how many you do on a show, maybe 30, 40 stories a show. And some of them are shocking, some of them are blatantly obvious. This next one falls into the latter bracket. JP Morgan CEO Jamie Dimon has reportedly warned the new UK Chancellor John Healey against a bank windfall tax. I'll get the words out in a minute. Echoing his previous comments. Dimon told Healey in an introductory call last week that higher taxes would hurt jobs and that spurring growth was the only way out of the UK's economic difficulties. According to the Financial Times, Dimon is said to have joined the call at the request of Healey's team, with the Chancellor set to speak to other bank bosses this week. I don't have much to say to this story, apart from man who is a very big banker doesn't want higher banking taxes. Shocking headline.
Coming up next, turkeys don't vote for Christmas.
Turkeys don't vote. I know, it's like, and I read this, and I love the FT. I think it's a brilliant institution, and it's got brilliant journalists. I kind of don't see this as the story. It's just as you say, man who makes money for his shareholders and for himself and for his employees from having a good regulatory and lower tax environment in a key jurisdiction is going to say that.
But, I mean, in fairness to the FT, I have asked, when we've had CEOs from banks reporting their results and talking to us on the programme, CFOs, I have asked them, you know, will this affect your plans for growing the business in the UK if this were to happen? They're all very cautious in terms of how they answer. But, you know, I suppose that is... reading between the lines, that is the concern. That it was a big new Canary Wharf HQ that Jamie Dimon had agreed with the previous Chancellor Rachel Reeves, and so maybe it is just signalling that actually.
With respect, he didn't agree it with Rachel Reeves. He agreed it with Shobi Khan, who's the boss of CWG. He didn't agree. He didn't have a deal to say, well, I'll see what I'll see what the Chancellor thinks about me building a building down at Canary Wharf. He agreed it because it's the best place for JP Morgan to have their new headquarters. It's £1 billion, X million square foot building. He didn't agree it. He basically thought, when they decided to go ahead with it, that actually the UK politicians wouldn't scupper the whole thing by having too high taxes.
Yeah, but he made that announcement, that decision, while the previous Chancellor was in post.
But we don't ask permission. The political class work for us, OK? Just remind everyone out there, we are the punters who pay them. We are the ones who pay taxes. JP Morgan is paying a surcharge and a windfall, a higher tax anyway, to do business in this country as well. We don't ask them for a favour. They actually should ask us for a favour because it's our money that they're spending.
That's the exact point I'm making. That he wouldn't have committed to that if he didn't feel.
Rachel, can I build this building? What?
I'm not saying he asked her like, can I build a building? What he has done is he made a decision based on the policies of the then Chancellor that he felt would be conducive to having a big HQ in London rather than anywhere else that he could have chosen to go. And so I suppose the signalling is that if you want more such investment from one of the world's major banks, you need to make sure that you don't come after them where, yes, they've had big profits and stonking results because of the volatility we've seen in trading. But that may not necessarily last indefinitely. And so, actually, when they have a good season, don't punish them because that can be reinvested, help grow the economy, help grow jobs, help build new HQs and that sort of thing.
Very good.
Yeah, I'm not saying that he went and said, please, Rachel, can I have a piece of land? Sorry, that's not meant to be an impression of him because that is absolutely not.
No,
it was more of the idea of someone going, Rachel. Anyway, you've sent me down a cul-de-sac here and
I've sent you nowhere. You take yourself down the cul-de-sac.
3-point turn in the narrowest of streets.
Coming up on the show, would you like to just talk, yes? Coming up on the show, Trump, for the first time, Trump calls on Americans to accept higher fuel prices as a memorandum of understanding between the US and Iran is set to expire.
Breaking news, market moves. Scott Wapner from the NYSE. Closing bell. Weekdays streaming on CNBC Plus.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
lost its last good pride. Slow fade out. I found the eye of my own storm and decided to stay.
Welcome to Squawk Box Europe. I'm Ben Boulos with Steve Sedgwick, and these are your Monday headlines. Investors eye a Treasury auction on Wednesday as national debt looks set to cross the $40 trillion mark as soon as today. While China's economy takes a bruising in July, retail sales, urban investment, industrial output, all missing expectations as the country's Stats Bureau cites external uncertainties and extreme weather. The US-Iran Memorandum of Understanding expires on Monday, US time, with talks to end the war deadlocked. President Trump concedes that Americans will need to live with higher fuel prices.
For you to pay a tiny little bit more for your gasoline, just remember you're doing it so that a very evil country cannot have. A country really is the #1 state sponsor of terror in the world.
Europe continues to reel from heat waves. Wildfires ravage Belgium, forcing hundreds to flee. Meanwhile, water levels in Germany's Rhine River fall to a further record low. Berkshire Hathaway builds up its stake in Alphabet, making it the company's third largest holding, as quarterly filings stateside reveal a big tech tug-of-war among institutional investors.
US President Donald Trump's envoy and son-in-law Jared Kushner reportedly met with the political leader of Hamas in Egypt on Sunday as the White House looks to secure backing for a Gaza peace plan. Kushner's also reportedly met with the mediators from Egypt, Qatar and Turkey and is due to meet with Israeli Prime Minister Benjamin Netanyahu today. US President Donald Trump has called on Americans to accept higher fuel prices amid the war with Iran. The US leader also suggested he could declare the Strait of Hormuz a US territory and in a move he said could happen once Iran is defeated. Traffic through the waterway remains largely stalled, with the UAE accusing Iran of attacking another ADNOC tanker on Friday. Speaking on Friday, Trump insisted he did the right thing regarding Iran.
For you to pay a tiny little bit more for your gasoline, just remember you're doing it so that a very evil country cannot have. A country really is the #1 state sponsor of terror in the world. We don't want to have them have a nuclear weapon. So remember that when you have to pay a little bit more, you're at $4. It's okay. I mean, I'll never apologize. I did the right thing.
$4 national. It's $6 in California, but that's their issue. Okay, this as a memorandum of understanding which both the US and Iran signed in June and have since repeatedly accused each other of violating is set to expire on Monday. Dan joins us more. Dan, there's a lot of news flow. Take it where you want.
Well, Steve, Washington now preparing to turn up the economic pressure on Iran, and I think this is the main thing to watch in the next days ahead. Treasury Secretary Scott Bessent signaling a new package of measures could come as soon as this week, Bessent saying the US is preparing steps that have never been seen before, raising questions over just how far Washington is prepared to go. Now, the focus here could fall on Iran's oil revenues, its shipping and financial networks, or the channels that, of course, Tehran relies on to keep money and energy flowing. This push also coming at a really critical moment. Of course, as you mentioned, the US 60-day Memorandum of Understanding expires today. There's no clear path to a new deal, and both sides are still accusing each other of breaking that agreement. And at the center of the standoff is, of course, what's happening inside the Strait of Hormuz. President Trump also stepping up his claims over the waterway at the weekend, saying the US could now declare Hormuz American territory. Exactly how that might happen remains to be seen at this point. Of course, Tehran jumping in and dismissing that straight away, saying Hormuz cannot be taken by tweet. And it would also seem the risks for commercial shipping are growing as well. An ADNOC vessel was attacked in the Strait on Friday, adding to a series of strikes on UAE energy shipping since the conflict began. In the meantime, oil prices seem to be taking all of this escalation in their stride here. You can see the major markets, Brent and WTI, still holding relatively steady despite that escalation and the war of words between both sides. Back over to you.
Thanks, buddy. Okay, let's get to Jeff Curry, Chief Strategy Officer at Altus Partners. Jeff, really nice to see you, my friend. I'm looking at one of your most recent comments. The abundance illusion is alive and well with us as well. Tell our viewers about the abundance illusion and your concerns about it.
Well, it goes back to something that every president has learned since Jimmy Carter made a fatal mistake in 1977. He went on TV and he's wearing this sweater and you could see the thermostat in the back, and he made the comment to the American public that there is an energy shortage. And so what do you think happened? Commodity prices exploded the next day. Moral of the story is never admit to the scarcity. And from that point forward, starting with George Bush Sr., they would always release the SPR if there was any type of disruption globally, and hope by talking down the market, releasing reserves, they could bridge the gap until the shortage resolved itself and prices remain low. And it has worked. And by the way, everybody wants to accuse the Trump administration of acting differently. It acted no different than Biden, no different than Bush Jr., Bush Sr. All of them do the exact same thing. They create that illusion of abundance. What makes this one different is the magnitude and the length of the disruption. And I want to emphasize, in the product markets, that illusion of abundance is likely well behind us at this point in time. But that's really the idea here. The question is, how long can they keep that illusion going? The SPR is getting at critically low levels, and it does not have an end in sight, as you just pointed out, this morning. There's no continuation of the MOU. There's a lot of uncertainty when the oil's going to flow again.
Jeff, but I've listened to people, really smart people like yourselves and Fatih Birol and others, and have been real concerned about the underlying products going up, which you just pointed out. The products have got that illusion behind them. But the oil price that I'm showing on the screen as we speak is still really tame, Jeff, compared to what you and I and others have seen historically. Are you saying that actually that we are now on the cusp of that illusion, that bubble being burst, and actually people are going to realize that the price of the underlying commodity has to go up?
Yeah, but I want to emphasize, nobody consumes oil but refineries. To everybody else on the planet Earth, investors alike, and everybody out there, that what matters are the product prices. It just happens that historically, that spread between product prices and crude oil was relatively stable. So every macro model, every investor, all the consumers are failing to realize, look at your screen. Diesel this morning on European exchange is $170 a barrel. We repeat that, $170 a barrel. Brent is what, 87, some 88, somewhere around there. So it's nearly half the price of the products. So those relationships, those econometric models, everybody that's been making that assumption that the spread between oil and products is a relatively stable, constant relationship have missed out. Now, so I think your bigger question is what has caused that? But I want to emphasize before I answer that, does it matter? I want to emphasize nobody on the planet Earth consumes crude oil. They consume diesel, gasoline, and the products. So from a macro perspective, from an investor perspective, you really need to be looking at the products. So what's caused it? I think one of the key issues really is that when they did the MOU late June and early July, it created a surge in oil supplies that were trapped inside the Straits of Hormuz, to the tune of 100 to 120 million barrels. The other factor that you had was Chinese cut the runs. If they cut the runs, they're making products tighter and they're making oil softer. But again, everybody goes, oh, China solved this problem. No, they didn't. They just shifted the products and kept the oil price more at bay. And I think the problem is that everybody's looking at this. But I want to emphasize, this is all temporary. You're going to run the course on that surge in crude. You're going to have refineries around the world kick up in places like China because they're going to chase those margins. Because those margins are unprecedented and it provides great economic value to refineries. They're not going to sit there and just look at them. They're going to go after those types of profits. So I would view this as being a temporary dislocation in the crude price. But I want to emphasize to everybody there, does it matter? Only to a refinery or an investor in crude oil. But for the rest of the people, I think to focus on those product prices.
And picking up on that point, Jeff, I'm going to try and just join the dots here between different movements that we're seeing. The point you make about diesel, yes, a gallon of gas is up about 30% compared to last year. A gallon of diesel is up 46% compared with last year. Diesel is the one that's used industrially for shipping, for trucking in industry. And so potentially the inflationary effects of the diesel price spike are going to be far more serious. I'm interested to get your thoughts on that. And has that contributed to the gold rally we've seen where investors start to worry about the inflationary effects on, say, their cash holdings?
Well, before I talk about gold, let's just talk about the inflationary impact of this. Part of the reason why gold rallied was the weak labor data in the United States, concerns around a slowdown in the U.S. or potentially recession, plus the benign inflation data. But that benign inflation data, it's usually surveyed around the 13th to 15th of each month. That's not the August report, that was the July report. Remember I said that big surge of supply that came out late June, early July, that was when the market tanked, and that's when they did that measurement of the CPI. So that's part of what was driving the gold price lower. That's going to prove to be transitory. But I want to emphasize what I would argue why I was short gold going back, I think last time I was on your program, which was about 2 months ago, and why I want to be long gold now, is if we go back to when the situation in the Straits began, you saw the inability of the Middle East countries to be able to export oil or raise cash from that. So if you can't raise cash from that, what are you going to raise cash from? Selling your gold. And so you sell what you can, not what you want to. And as a result, that combined with emerging markets who had the opposite problem. They had to raise cash to buy oil, defense, and other types of activities on affordability. They had to sell the gold to raise that. Both of those dynamics are transient. They're likely behind us. So what is the longer-term outlook for gold? There is always going to be a constant bid from central banks, particularly the emerging markets, for gold right now to diversify their reserves. That has not stopped. It's going to continue. Again, it's like to say, as everybody goes, oh, I want to be long the dollar has got a great outlook relative to the pound sterling. Yeah, I'm going to give that to you. Yeah. Fiat currencies do not have a good outlook relative to gold and hard assets. And that story, I think, is going to continue. So I got a lot of upside here from gold from right now. And the big question is, what does Warsh do in September? I think the consensus view is, he'll be flat. So
yeah, I'm sure. But just to put the counterpoint with that argument on gold, if there are central banks worried about the weakness of their currencies and relative to the dollar, of course, oil priced in dollars, they're worried about the inflationary effects on their economies. If they wanted to prop up their strength of their currencies, they would presumably sell some of their gold holdings, wouldn't they? Which would put some downward pressure on the price.
Yep, and that's what was the core behind why I wanted to be bearish on gold earlier. But when we think about, there's that context, but you also want to diversify away from dollars, away from euros, away from pound sterling, away from yen, away from everything out there. If you're one of these other emerging markets in some place like China, you have sanction risk in places like Russia, Iran, and all over the rest of the world. You want to get away from dollars as fast as you can, or fiat currencies, because it poses a risk to you that gold will not pose. And I want to emphasize, the crypto doesn't have that same benefit as gold, because you leave a footprint to get into currency or into cryptocurrency, and then you got to get out. The fact of the matter is you can move gold around the world and nobody will ever know you did it. And as a result, if you're looking at a way to protect yourself from any type of sanction risk or somebody messing with your reserves, gold is your safest bet.
Jeff, one thing I have noticed, and it's very obvious, is that the volatility was quite extraordinary on that run-up, not only in gold, but in silver and other products as well. It felt like it was a different kind of investor, different kind of way of buying it compared to what we might have seen in previous cycles as well. Is it set to be more volatile going forward, owning the price, owning gold and perhaps owning silver as well?
Yeah, I mean, you got to be prepared for that. But I think the message here is the trend is the same. You're going to see spikes in all of these commodities. It's up spike. But, each high is higher and each low is higher. And that's what we're seeing across the board. I mean, your starting point on silver, was somewhere around $60 an ounce. We're around, 64, 65 this morning. We could go back and see the highs of 120 and probably much higher. I don't want to get in on price targets of these commodities, but numbers are thinking about where silver sits in industrial places like China and the importance of it in building everything from solar panels and other industrial inputs. This thing could go well above 200. Some are arguing as high as 300. So is it going to be a slow, steady? No, it's going to spike as you go through these periods. And I want to also emphasize that the buyer at the margin, those retail buyers you're referring to, were not so much Western, they were Chinese. Which they're much faster moving and they're much, I'd say, hotter, quicker money.
Okay, Jeff, thank you very much. Really good to get you with us. Jeff Curry, Chief Strategy Officer at Altis Partners. Still to come on the show, we're going to speak to Ian James, the team principal for Formula E's Jaguar TCS Racing, on how its technology for motorsport is now feeding into its road cars.
Now I'm just trying to make it through another yesterday. Promised her the moon, the stars.
Real Money, Real Debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC+.
Yeah, I promised her.
I grew up a news junkie. It's really the only thing I ever wanted to do. I like holding people to account. You can't just show up and say, I like XYZ stock, because I'm going to ask you why. And then if you say you sold it, I'm going to say, well, why'd you sell? Get away from talking your book and tell me the real story. Ambition is a fuel and a fire. They call me the judge for a reason. I'm supposed to make people squirm, as long as I get the goods at the end of the day. We're talking about people's money. I feel the weight of that, the responsibility, and I love it. Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
On market-shaping industries, we are watching the sixth little dragon, the first to be listing in the Hong Kong market, supply chains, and global momentum.
Do you feel pressure to create the next Labubu soon?
This really is a business-first pivot, despite the geopolitical strains. The China Connection, weekdays.
The trade heads are gathering against the backdrop of the global energy crisis.
CNBC.com and the app anytime. Let's get to your headlines. Only on CNBC, connecting you with China.
see that boy sometimes when I look into the glass. Said I see that boy sometimes when I look into the glass. He's still making promises
Would you pay 35 times more than the usual price for a car? For everyone else, it would be 40. Just because it's you, it's 35. No, an anonymous buyer did just that. 35 times the price, buying Ferrari's first electric car, the Ferrari Luce, for $40 million in a charity sale. It set a record for new vehicles sold at auction. The car, which was created in collaboration with former Apple designer Johnny Ive, was unveiled in May this year. Sotheby's said all proceeds from the sale will be donated to Ferrari Foundation's educational programs. For more on the Luce's journey from polarizing EV to $40 million collector's item, head to CNBC.com. Staying with all things car, Porsche's Pascal Wehrlein clinched this season's Formula E Drivers' World Championship at London's ExCeL on Sunday. It comes as the sport is enjoying rapid global expansion, recording viewing figures and new commercial partnerships, including a streaming deal with Disney+. However, car makers are also leaning on electric motorsport to feed into their own EV road cars. One such car maker is Jaguar Land Rover. We're joined now by Ian James, Managing Director of JLR Motorsport and Team Principal of Jaguar TCS Racing. Ian, good to have you with us. Just explain what it is and what sort of things are now being integrated into road vehicles that we are seeing for the first time emerge in electric motorsports.
Well, good morning, and firstly, great to join you. The transition's been quite incredible over the last few years. The ABB-FIA Formula E World Championship is now in its 12th season, and the advancement in technology that we've seen over those 12 years has been quite incredible. And of course, it'd be crazy not to use that opportunity to ensure that we've got both knowledge and technology transfer between our racing program and the road cars as well. And at JLR, in particular with the Jaguar brand, that's exactly what we've been doing.
And how quickly does that technology filter through from when you first see it on the track to actually seeing it on the roads?
Well, one of the advantages we've got with racing is that we're not sort of constrained by the homologation requirements that you have with the road cars. It means that we can develop faster, fail faster, and then move on quite quickly as well. So we try to take that learning and make sure that we bring that into the road cars. Now, Jaguar as a brand, we're having a complete reimagination at the moment. We're about to launch our new model, the Type 01, in October of this year, and that really signals the change of the brand going fully electric. So the motorsport program has really been instrumental through that journey and ensuring that through that sort of fail-fast methodology, we can take those learnings and bring it into the road car. And one such example is the way that we actually look to develop the car itself. So the rigs and fixtures that we use back at base to accelerate that development, we've refined the process of the efficiencies, if you like, before that into play, and made sure that we can really capitalise on that knowledge. Now that goes in both directions as well. So one of the things I enjoy is actually learning from the road car program, getting the engineers from that side together with my engineers on the racing program, and learning from each other. And through that, we can accelerate that development.
Yeah, and Ian, look, Ian, it's fair to say it's been a bumpy old ride since the unveiling of the Type 00. Now getting to the actual car, the 01, which I think people are very excited about. You've had to learn really, really quickly, haven't you, how to get a better product on the road that actually the punters are going to like.
I think this is the key thing. At the end of the day, a purchase like this is going to be not only rational but also an emotional one. And I had the privilege of driving an early prototype of the Type 01 back in October when I first joined JLR. And I can say that the DNA of Jaguar is very much intact. Now, I come from a racing background. I love driving. It's what brought me into the sport in the first place. And to be able to get into an EV and really feel that sort of emotional connection right from the outset is a huge thing. And I think once we get people actually into the car and driving it, they're going to feel that exact same thing. And I think that's so important this day and age as a differentiator as well, because at the end of the day, there are a lot of OEMs out there developing a lot of products, and we've got to stand alone and put ourselves in that, I suppose, that different space.
Yeah, and look, Ian, I guess the lessons that you've been able to observe from Porsche and Taycan, I've been fascinated because I've driven a Taycan. I actually loved it, but I'm not a petrol head as well. Can you learn from their mistakes? Because Porsche have made their big mistakes, thinking that all 911 owners are going to want a Taycan as well. What are you learning that you've observed others making mistakes as well about the appetite for the 01?
I think the interesting thing with the 01, and I'm not going to talk to Porsche's strategy. I know Michael Leiters very well, and I think he'd shoot me if I did that. But with Jaguar, I think we've taken a very different approach. We've done something really from the ground up, which is rather than just taking a car which has been driven traditionally by a combustion engine and then make it an EV, we've made this really an EV right from the start, and I think that's what makes the difference. It means that it's incredibly fit for purpose, but it goes back to what I said before, the driving dynamics, the DNA, what makes a car a great car, essentially. You can do that within an EV, and that's the approach we've taken with this. So I think, again, doing it really from a blank sheet of paper, hitting that reset button has been incredibly important for us, and it's going to be fascinating to see when that hits the market later this year, just how it performs.
Genuinely fascinating for all of us as well, Ian. Look, we've got to leave it there. It's the end of the show. We wish you a lot of luck as well. So thank you very much, Ian. Thanks for finding the time to speak to Ben and myself today. Ian James, Managing Director of JLR Motorsport and Team Principal, of course, of Jaguar TCS Racing. That's it for today's show. We'll be back, same time, same place tomorrow. Morning Call is coming up next.
Stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Powerline, streaming on CNBC+.
Ambition doesn't always look like you think it might look. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. That's what drives me. I love being part of this.
Listen to CNBC on the move with the CNBC app.
A lot of strong numbers this morning.
Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
A check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection, Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
NVIDIA working with some of the biggest names on Wall Street to secure financing for its customers.
These partnerships are going to pull together independent long-term capital to fund AI infrastructure build-out.
You're starting to see asset-based financing against this infrastructure.
The first few years, there's no income. Once these are yield-based products, then it's easier to sell them in the public markets.
We need to make sure that we're broadening participation in AI.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange and it's been awesome. To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/GoPro now.
Yeah, I used to burn so hot. I'd scorch everything I touch. Now I burn low.
I think if I knew how complex was trucking, I think I would have thought again. So the unknown was very helpful.
Gaurav Biswas thought he had landed on a simple idea. Uber, but for trucks. There was just one problem. He had never moved a truck in his life. Then one day at dinner with friends, he saw a problem he had never thought much about.
He was constantly having to walk out of the restaurant and we could see that he's arguing or shouting with somebody. I said, hey, is everything okay? He's like, oh, I have 7 containers. I have to go on the same vessel tomorrow. Then I said, hey, you should have an Uber of trucks.
That idea became Trucker, a digital freight platform that connects companies that need to move cargo with the truck owners and transporters that carry it.
Trucking is extremely important as a sector because whatever you touch and feel, consume, it's all touch the truck. Whether it's a seaport or an airport or a factory, the trucking is not connected.
Smoky days.
I'm Morgan Brennan, and this is your morning call. Good Monday morning. Let's get a check on U.S. stock futures with the S&P 500 and the Nasdaq coming off their third straight weeks of gains. The Dow finished down last week, fractionally lower. All the major averages basically in the red, though, on Friday. You can see S&P is poised for a slight gain this morning, indicated to open up to the tune of 7 points. The Nasdaq poised to open up 180 points, and the Dow under pressure again this morning, down 87 points. Let's get a check on Treasuries as well, with a busy week for housing data on tap. We'll also get some Fed minutes in the middle of the week. And you can see right there, we've got a little bit of pressure on yields across the curve right now. The U.S. 10-year Treasury yielding 4.68%, and the Fed sensitive 2-year Treasury yielding 4.15%. Big story last week was the yield curve steepening, so we'll continue to keep an eye there. We're checking energy as the U.S. and Iran's Memorandum of Understanding technically, officially expires today. No signs of an agreement from either to extend it or to return to negotiations. We're going to have more on all of that in just a moment. But if we get a check on oil prices this morning, you can see a bit of green here on the screen. WTI is up fractionally, trading around $82.50 a barrel. Brent is up 0.7%, trading around $89 a barrel. And a look at the metals complex as well. Gold and copper both coming off their fourth straight weeks of gains. Silver is riding a 2-week win streak as well right now. And you can see across the metals complex, we have some fractional gains here this morning. Let's see how Europe is shaping up in early trading. Right now, a relatively muted start to the new trading week. If we could pull those screens up, yeah, you can see the DAX is basically flat here. The French CAC is basically flat to the downside. It's a similar situation really across the board. And if we check on Asia markets too, and the trading session we saw overnight. Okay, all right. We're going to talk about South Korea here. President Trump announcing yesterday the U.S. will reduce military exercises with key regional ally South Korea. The announcement coming just hours before those drills were due to get underway. The president citing his positive relationship with North Korean leader Kim Jong-un and Seoul's lack of assistance with the war in Iran. So if we take a look at the trading we saw overnight in Asia, we've got those boards for you here now. You can see gains. Japan's Nikkei actually finishing near highs of the session, up 0.7%. That was despite disappointing Q2 GDP reading in Japan, which is injecting perhaps some more question marks about what happens next with the Bank of Japan. And you can see the Hang Seng finishing up 1.3%, and the Shanghai Composite up 1.4%. Let's turn to the war in Iran again, and Washington and Tehran's Memorandum of Understanding. That expired today. This amid a report that Iran is looking to escalate the fighting with the U.S. Dan Murphy is in Abu Dhabi. He has more. Dan.
Morgan, good morning. Washington also preparing to ratchet up economic pressure on Iran, with Treasury Secretary Scott Bessent signaling a new package of measures could come as soon as this week. You'll remember that recent interview that when Bessent said the US is preparing for economic steps against Iran that have never been seen before, as Washington basically looks for new ways to target Tehran's oil revenues, its shipping networks, and its financial channels. The timing here really critical. As you say, Morgan, the 60-day US-Iran Memorandum of Understanding expires today with few signs of a new agreement in sight. And here in the region, concerns are also growing. The Washington Post, citing Arab and Western officials, reports today that Gulf leaders are increasingly worried about whether President Trump can manage the diplomacy needed to secure peace with Iran. And then separately, there's a Wall Street Journal report today citing Iranian and Arab officials that reports Tehran's hardline leaders have used these past 2 months not to wind down the conflict, but to prepare for a bigger fight. The journal says that includes giving the Revolutionary Guard more control over the regular army, ramping up missile and drone production, and expanding coordination with militia allies in Yemen and in Iraq. Interestingly, this report also says that Iran has basically used attacks on shipping to tighten its grip on the Strait of Hormuz, where an ADNOC vessel was also attacked on Friday. ADNOC, of course, being the state oil giant here in the UAE. President Trump, at the same time, stepping up his own claims over Hormuz, saying the US could declare the strait American territory. Iran also rejecting that, saying the waterway cannot be taken by tweet. Morgan?
All right. Dan Murphy, thank you. And of course, we get all this as we continue to focus on things like U.S. aircraft carriers and dynamics there. The U.S. Admiral overseeing the war with Iran visited the USS Abraham Lincoln amid reports of poor living conditions on that aircraft carrier. And also reports that we're going to see the only U.S. aircraft carrier in Asia pulled and redirected to the Middle East, so that one can be serviced. So we continue to focus on all of that. But let's get a little bit more specifically on the action we've seen in Asia with JP Yong. JP.
Yeah, good morning to you guys, Morgan. And it was a tale of two economies. Here in Asia, this Monday to kick off the trading weekend, we'll start off with the biggest one, China, which released what we call the monthly indicators, or the trifecta data that indicates how healthy China might look. And across the board, across the scorecard, that is, from retail sales to industrial production and all the way to fixed asset investment, we saw them actually coming well below expectations. In fact, fixed asset investments for the entire year contracting by a bigger than expected margin, and thus pointing at signs of a slowdown once again and raising to slowdown period in the world's second largest economy. Interestingly enough, it did not impact how markets traded across the Greater China did today. We saw the likes of the Hang Seng and the CSI 300 both pull solidly into the green. Chinese officials saying they are going to employ counter-cyclical measures to help arrest some of the slowdown fears that we're seeing there. But on the very touch and go, just showing how difficult it's going to be to try and solve some of the economic challenges that China is facing internally. Over in Japan, we saw second quarter GDP coming at 1.1%, again well below what economists are expecting of growth of about 2% on a year-on-year basis. Interesting also here to see that private consumption was flat and capital spending from businesses actually contracted by more than 1%. And there was one clear suspect as to why. We've indicated and talked about the weakness of the Japanese yen, and this was highlighted by businesses making it difficult for them to actually spend because of rising energy costs and also the rising cost of investing in their capex expansions and also reinvesting in their business, and thus also indicating why the Japanese yen is one of those things that they're going to watch out for, and also starting to weigh broadly across the world's fourth largest economy, not impacting Japan's Nikkei 225 though today, which closed in the green. Morgan, good morning to you guys.
Good morning to you, or good afternoon, I should say, evening. JP Yong, thank you. Let's tie all of this together as we kick off the new trading week. Bring in Allie McKnight, Chief Investment Officer at Regions Wealth Management. Great to have you here back on set. I mean, we basically just took a trip around the world and then circled back on certain places as well. But how does this set us up here for trading here in the U.S.? I mean, it does seem like maybe not from a news standpoint, but from a trading standpoint, we are sort of moving into that summer slowdown.
It's that old adage, think global and act local, if you will, because when you think about what's happening this week in the U.S., it's all about the U.S. consumer. We've got Home Depot reporting, Lowe's, Target, Walmart. We're really going to get this lens into what's happening. Are they still spending at the rate that they had been? And fundamentally, are we going to see that type of push as we go into the holiday season later in the winter?
Do you think about this as a bifurcated market and perhaps a bifurcated economy? You have AI and sort of the industrial activity on one side and then the consumer on the other?
We do, and the way we thought about it almost is this CapEx spend, which has been good, and then you have the consumer side, and within the consumer side, it's even more bifurcated. You have these asset owners who are doing really well. If you own investments, you own your own home, you're feeling quite good about the economy. If you're an asset renter, and you are renting your apartment, your car, and a host of other different assets, you're not feeling as good because inflation's been running hotter. So we're seeing it both corporate versus consumer, as well as within the consumer, this bifurcation with owner versus renter.
Yeah, I mean, we hit fresh record highs for both the S&P and the Russell 2000 last week. I mean, can that continue through the rest of the year when you think about how strong? We've got more than 90% of S&P 500 companies have reported earnings so far. I mean, the numbers have been gangbusters, even higher than expectations in June. Best first half potentially since coming out of the pandemic in 2021. But how does that set us up for the second half of the year?
I think it sets us up pretty well. So obviously crushed earnings in the second quarter, up over 50%. We're already seeing this feel of, okay, we can make this through the end of the year, Q3, Q4. But the reality, what we're going to need is a broadening within the earnings perspective. So the Mag 7 has really driven a lot of that, a lot of this AI spend. We've got to see that moving out into other sectors, such as consumer discretionary and healthcare. And so that has to be fostered. And as long as the economy stays on firm footing, we don't get any real shocks, we think that can happen.
Yeah. Healthcare's already had a pretty good run of it. Where else would you be putting money to work then?
Well, when we think about where you want to reallocate capital, it's more on the one small and mid-cap side, because we think even though the Russell 2 has done over 20% year to date, we still think there's room for that to run just based on a relative valuation perspective. Same with mid-caps. We like even looking across sectors when you start thinking about consumer discretionary. Weakest sector year to date. When you think about healthcare, when you think about even on the comm services side, we think all those places can do pretty well in an environment where the economy is stable, inflation continues to grind lower, and unemployment stays relatively stable.
Okay. Alan McKnight, great to have you here back on set.
Always a pleasure.
All right, we got a lot more to come here on Morning Call, including Joe Makers getting new help from President Trump and his tariffs playbook. And we're going to talk to the CEO of one company that is exposed to all of that and what it means for the future of warfare. Plus, more on the new economic concerns around China and whether its growing problems could spread beyond its borders. We are live in Beijing. And later, we've got a busy weekend for some of the biggest names in AI, including NVIDIA, apparently scaling back its funding plans for one major AI startup and one major project. We're going to break that down. A very busy hour still ahead when Morning Call returns.
Feels like borrowing his dignity.
American soccer legend Landon Donovan will explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
This is not just good content, this is good business. It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has a chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
Becky, this is the greatest show on earth.
Squawk Box, streaming on CNBC Plus.
Edge just opened up in Europe with a French government cooperation agreement as well. How significant is that deal for Edge and for our government?
Europe is where the next budget summit. We would like to contribute to the security of Europe. We feel that we have a value. We feel that Europe have recognized this value by accepting us into Europe. These are facts. We have a very nice footprint in Europe, and this would have not been possible if the UAE wasn't accepted in Europe as a partner, knowing and trustworthy with NATO and the way we firewall things. Plus, you need another player in Europe. Even the big players today, we're working with them. There is always these collaborations, but they only start when you put your ego aside. There is always someone better than you. And you need to be on this learning curve forever.
Blow the smoke up slow.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
Said I blow the smoke up slow. And watch it curl above my head. Like the ghost of every word
Welcome back to Morning Call. Let's get a check on shares of SpaceX. Those are higher pre-market to the tune of 1.3%. NVIDIA revealing in its SEC filing on Friday that its stake in the company is worth about $21 billion as of the end of the second quarter. The chip maker says it owns just under 123 million Class A shares of SpaceX, currently its second biggest holding behind Intel. SpaceX shares closing at $140 per share on Friday, down from more than $170 at the end of June, meaning the value of NVIDIA shares have declined to just over $17 billion. Nonetheless, we're still trading above the IPO price. SpaceX has been a bit of a comeback during the last, call it, week and a half, 2 weeks. SpaceX also over the weekend logging a new spaceflight record, 2 back-to-back Falcon 9 launches, 38 minutes apart. It's the shortest time ever between 2 orbital flights. The first from Cape Canaveral in Florida on Saturday night. That carried 8 satellites for Globalstar as part of that company's work to replenish its low Earth orbit communications constellation. Remember, Globalstar is being acquired by Amazon. That also marks SpaceX's 14th mission using a Falcon 9 first stage booster. The second mission for Falcon 9 was from Vandenberg in California. That launched for a classified payload for the U.S. Space Force. Well, if we turn to 13F filings that are out after the close on Friday, we just touched on one, but let's take a look at Berkshire Hathaway, because the conglomerate was buying $17 billion worth of shares in private and open market purchases, making the tech giant Berkshire's third largest holding in its portfolio. Alphabet, that is. Berkshire also increasing its Delta stake by more than 44% and more than doubling its stake in Macy's in Q2 as well. If we turn to David Tepper's Appaloosa, expanding its stake in Amazon by more than 15%. Amazon remains the hedge fund's largest holding. Its position in Meta growing by almost 55%, but it did cut its position in Micron by more than 41%. Still, though, second largest holding. Appaloosa taking a new stake in Goodyear Tire in the second quarter, also discussing a new American Airlines position and new but small stakes in Apple and Boeing. Then there's situational awareness. It's 13F giving us a look at what Leopold Aschenbrenner's fund looks like 1 month before its collapse in late July. Its top public holdings at the end of Q2 include SanDisk, Micron, Bloom Energy, Taiwan Semi, and Nebius. These have been some of the biggest momentum movers in the market this year. New details emerging over the weekend that Jane Street took a $15 billion hit last month, due, at least in part, to its exposure to situational awareness. It was an investor in that hedge fund. Well, straight ahead, energy riding high as the best performing sector so far this year, but not every stock in the space is reaping the rewards. Let's have a look at the haves and have-nots of the energy trade. But first, as we head to break, let's get a check on shares of Alibaba, because that company announcing that it's selling its video game unit, a deal worth at least $1.5 billion. And this, as Baba reveals, its open weight models have accumulated more than 3 billion global downloads in the past 6 months. That surpasses Meta, Alphabet, and domestic peers to become the world's top AI model. Alibaba is going to report earnings later this week on Thursday. Morning Call. We'll be right back.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange, and it's been awesome. To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/GoPro now.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region, covering what you need to know from here and around the world that would shape the business day.
We know there's 2 winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Force of 20 years. Then I'll put the second one back. Trying not to show my tears. pushed up against the wall. Used to be a family here, laughter, fights, and grace. Now it's just a man alone.
A market shaping industries, supply chains, and global momentum. The China Connection, weekdays. This really is a business-first pivot. CNBC.com and the app anytime. Only on CNBC, connecting you with China.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime report, weekdays streaming on CNBC Plus.
Welcome back to Morning Call. We got a big week for shares of drone makers. That's what we're coming off of. Getting a boost Friday after President Trump announced tariffs on imports of drones and components in an effort to boost U.S. manufacturing and protect national security. Names like AeroVironment, Kratos, Unusual Machines, Red Cat, also Carbon Holdings, all closed higher on Friday, anywhere between 2 and 25%. And if we get a check on shares this morning, you can see a bit of a mixed picture here this morning. But for more, let's bring in the CEO of Carbon Holdings, John Rambo. Great to have you here back on set. Welcome.
Great to be back, Morgan. Thank you.
So there's a lot to talk about, and you certainly have momentum at Carbon. But I do want to start with what we're seeing with these tariffs on drones, the drone supply chain, and as we see right now in real time, both in the Middle East and Ukraine, the role that drones are playing in warfare.
It is really an important thing to focus on, Morgan, whether they are designed for military purposes or not. I think as we're seeing in Ukraine, all drones can serve a military purpose. And so with this focus on domestic sources of supply for drones and drone components, it's a big deal for American manufacturers of drones. Carbon supports a number of those companies.
Yeah, I was just going to say, what does this mean for Carbon?
Yes, we produce some of the subcomponents and the launching systems for a number of military drone manufacturers here in the States. So many of the companies that you mentioned are companies that we partner with.
Yeah, we also got news on Friday about an SM3 deal that's coming together. That involves Boeing, it involves RTX. We've seen a number of these multi-year, long-term agreements that have been struck between the Pentagon and the biggest makers, manufacturers of missiles and munitions. We know this is a huge area of focus, and it has been for quite some time. So what does that mean for Carbon as well?
Well, Carbon is a merchant supplier that participates across the breadth of the U.S. missiles and munitions manufacturers. So these 7 Munitions Acceleration Council, or MAC programs, as they're known, are all programs that we're a part of. And so as the primes are negotiating those framework agreements and their long-term contracts, we are also in discussions with the primes to do something similar at the level we support.
How quickly can we ramp production? And we're talking about exponential numbers in some of these, production agreements. But how quickly can it actually happen? Can the supply chain, whether it's Carbon or others, can they actually meet the moment here?
Supply chain can meet the moment, and I think the Department of War has made clear that this is not just a military challenge, it's an industrial-based challenge in the U.S. And industry from the top down is taking this very seriously. Carbon has been out in front making the necessary investments to expand capacity so that we're ready to meet that increase in demand.
Okay. And it's not just a U.S. story when we talk about defense spending and the need for more quickly. It's also a Europe story, too, which I think speaks to the acquisition you recently announced.
Yeah, I'm really excited about this one. We recently announced the acquisition of Walker. It's a company that's based in Scotland in the UK. They have operations outside London and also in Poland. And what Walker represents for Carbon is our first non-U.S. presence and an opportunity for us to access the European defense market at a time when our countries there, our partners there, are increasing their military spending. So it gives us access to new customers, it gives us access to new programs, and I think more importantly, it's a business and a management team that's able to take on more, so it's an opportunity for us over the long term to replicate the Carbon model in Europe.
When we talk about these burgeoning defense budgets, it would seem that is going to be the case, at least over not only the near term, but over the long term. How do you see all of this continuing to, grow and evolve and take shape? And oh, by the way, space is a big part of it, too.
Yeah, we haven't really touched on space, and so certainly we're seeing generational demand on the defense side, particularly in the end markets that Carmen supports, whether that's missiles, munitions, hypersonics, maritime defense. But the space side, we're seeing a resurgence of the space economy as well. A lot of new capital flowing into space, a lot of new partnerships for Carmen there, and so just as we do on the military side, we participate very broadly across the supply chain, particularly the launch side of the business. So as we see that launch cadence increasing over time, Carmen's business in space is going to continue to grow.
Yeah. What are some of those partnerships? What do they entail?
Well, the partnerships, generally speaking, are around advanced materials, advanced subsystems, some of the energetic systems on a launch vehicle. So, for example, the systems that can separate the two stages of flight to move from first stage to second stage boost. Some of those sophisticated systems we build in our facilities out in Seattle, Washington, and also in the Huntington Beach area. So we have operations across the country that support the space launch business, and again, broad participation across all the players in that market.
Yeah, I mean, SpaceX gets so much attention. We actually just talked about the fact that they broke a record over the weekend. 2 launches back-to-back, 38 minutes on 2 different coasts here. But one of the other things that's emerging out of earnings season for the space companies is the fact that the launch demand continues to outpace the capacity that's currently in the market. And that's even if you count Starship coming online into the equation.
Yeah, the demand is significant. It's greater than the supply, and it's expected to be greater than the supply for some number of years. So right now, it's a really good opportunity for everyone who's participating in the market to have an opportunity to play. Now, over time, what we're going to see is the cost per launch or the cost per pound of payload is going to continue to be an increasing focus. But right now, it's really about demand, and it's about the supply to be able to support the launch cadence.
Okay. John Rambo, great to have you here on set.
Great to be here. Thanks, Morgan.
CEO of Carmen Holdings. All right. Well, still on deck. New worries about the stability of China's economy. But could an even bigger crisis be looming for Beijing and beyond? We're live in the Chinese capital with the details when Morning Call returns.
As our country celebrates its 250th anniversary, CNBC spotlights the leaders driving business and the nation forward.
The one word I would use to describe 250 years of America is relentless. American entrepreneurs have always taken risks on some of the biggest problems, starting from railroads to highways to internet, and that's what makes the country so competitive. My name is Ritu Narayan, and I'm founder and CEO of Zoom. We are at Zoom transforming the iconic American school bus system. We work directly with school districts, and we basically overhaul their entire system, right from the fleets to hiring and training drivers to using our AI-based technology. America is the only country, I believe, where I could have started Zoom and brought to this kind of a scale, where investors are willing to bet on a first-generation immigrant. I come from India, and coming from outside, I was very surprised of how welcoming and how easy it was to integrate. On one hand, there are lots of difficulties that you face as immigrants, but as a system, it was very easy to adapt and integrate. I would say America has a deep risk-taking capability and willingness to bet on the technology and dream with the entrepreneur, and that has allowed my company to flourish, and that can only happen in this country.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange, streaming on CNBC+. The day's top stories driving Wall Street. Up-to-the-minute developments, instant analysis, essential business news at the intersections of power and money. Kelly Evans, Brian Sullivan, Power Lunch, streaming on CNBC+.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What do the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli, Closing Bell Overtime, CNBC.
Right inside my
The AI boom is usually told as a Silicon Valley story, but some of the biggest winners are thousands of miles away in South Korea. And their windfall is now spilling into an unexpected place, the housing market.
Before we saw this massive rally this year, people just like to invest in the housing market because there is no alternative for savings and investment.
From January to April 2026, home buyers used about 3.7 trillion won, or roughly $2.4 billion US dollars, from stocks and bond sales to fund purchases.
The government wanted to boost the stock market so that people could move away from homes into the stock market, but people are coming back to the property market with the money that they earned in the stock market, and it's also sort of this vicious cycle.
The danger is not that one stock market sell-off would immediately crash home prices, it's that the same wealth channel pushing stock gains into housing depends on confidence.
I'm a quiet kind of shadow, keeping watch upon your light. My hidden passion keeps me warm throughout the longest
Morgan Brennan, welcome back to Morning Call. Let's get a check on U.S. stock futures with the S&P and NASDAQ coming off their third straight week of gains. You can see it's a bit of a mixed picture here this morning. NASDAQ poised to open up 158 points, Dow down 73 points, and the S&P basically just above the flat line, open higher to the tune of 6 points. This after a down day, albeit fractionally, on Friday, but both the S&P 500 and the Russell 2000 hitting new records in trading overall last week. Let's get a check on the Treasury market, too. A busy week for housing data on tap. We get Fed minutes on Wednesday, too. You can see yields are a bit lower here across the curve. U.S. 10-year Treasury yielding 4.68%, and Fed Center 2-year Treasury yielding 4.15%. For the 30-year Treasury, 5.25%. Been very focused on the long end of the curve. Let's check on energy as the U.S. and Iran's Memorandum of Understanding technically, officially expires today with no signs of an agreement for either to extend it or to return to negotiations. You can see oil is a bit higher here this morning. WTI is up fractionally, $82.50 a barrel. Brent is up 0.6%, trading around $89 a barrel. RBOB gasoline is also fractionally higher. Let's get a check on some of the morning's latest headlines. Ahead of its expected IPO this fall, Anthropic is reportedly projecting 2028 revenue between $190 and $200 billion. That's according to Reuters. Compare that to the recently reported $47 billion run rate that reflects the current pace of business. Projections heading into the IPO predict strong growth, and the company just posted a 14-fold increase in quarterly revenue of more than $11 billion. Some reports peg the company could be valued at about $2 trillion at the IPO. Think about this valuation-wise as potentially commanding valuations similar to a SpaceX or a Palantir in this market. Now to the other AI behemoth that's getting ready to go public, OpenAI. A recent rash of top executives leaving has some in the industry sending up warning signals. Kevin McCormick, founder of AI startup SignAudit.ai, said on X, quote, "The executives leaving OpenAI ahead of their IPO is a huge red flag." Now, on the flip side, OpenAI CFO Sarah Friar told investors on Friday that its enterprise business is now bigger than its consumer division. And we could see an OpenAI IPO as soon as Q4. We'll see. Separately, NVIDIA is scaling back its planned $250 billion financing of OpenAI's massive data center in Ohio. The Wall Street Journal says that NVIDIA will cut the amount to $120 billion in orders to address investor concerns about risk exposure. There's a lot more to that story as well. The White House is urging Apple not to turn to China as a way to alleviate the global shortage of memory chips. When discussing the possibility of Apple buying Chinese memory chips, Commerce Secretary Howard Lutnick told the Wall Street Journal that the, quote, Trump administration is not in favor of that, and that great American companies using Chinese memory is not the solution. Lutnick said he had relayed that message to Apple, quote, plainly. And Spider-Man Brand New Day remained #1 at the ticket counter this weekend and topped $2 billion at the global box office, becoming Sony Pictures' highest-grossing film ever. Now, it took Webslinger just 3 weeks to break through the $2 billion mark. Universal's Odyssey came in second and has pulled in more than $1.25 billion so far. So all good news for Hollywood as domestic box office sales are closing in on $7 billion so far this year. That's up nearly 20% from a year ago. And turning to China, fresh data out this morning showing further signs the economy there is facing challenges. Let's get to Eunice Yoon in Beijing with the latest. Eunice.
When I was 21.
Thanks, Morgan. Well, the July data revealed a stubborn slowdown with a broad-based miss. The retail sales came in at 0.6% versus an estimated 1.5%. The household spending has been flat and continued to be flat in July, in part because of some extreme weather, so some seasonal factors such as heavy rainfall, but also because of a persistent problem here, which is that consumer confidence remains weak. And why is that? Part of that is because the property sector, where a lot of people have their money tied up, continues to be in a slump. The property investment number declined 19.2%, contributing to the fixed asset investment miss. Urban unemployment ticked up from 5% in June to 5.2% in July. And then even factory output, which continues to be driven by the AI build-out overseas, missed. A lot of that was because of the fact that the front-loading that factories had been doing has been tapering off. This was ahead of new U.S. tariffs. So expectations are now growing that the authorities here are going to be considering making good on a promise that they made last month at a very important meeting where they said that they would consider to boost their fiscal expenditure. People, though, still aren't 100% sure or convinced just because up until now they have been very reluctant to do so. And that meeting, the next meeting, Morgan, that people are eyeing is one that's going to be in the next 2 weeks.
Okay, we'll be watching it. Eunice Yoon, it's great to have you on. Good to see you. Thanks for giving us the latest here with the data we did get overnight. Well, if we stick with China's economy and a potential new crisis that's brewing there, in a recent foreign affairs piece, former U.S. Trade Rep Michael Froman, who is also the head of Council on Foreign Relations, suggesting that China's industrial overcapacity is putting growing pressure on economies worldwide and that the world may be nearing its breaking point. So for more, let's bring in Dwarjik McNeil, Senior Policy Analyst at Longview Global, also a CNBC contributor. Dwarjik, it's great to have you back on the show. They started to have this conversation on Squawk Box on Friday, and so we're bouncing off of that to dig a little deeper here, especially since we did just get this data that Eunice broke down for us. I guess top line here, state of China's economy, your thoughts?
Well, I think in the numbers, Morgan, we certainly see a real problem for its domestic economy. Now, I don't believe that the government, the party, has yet moved in a direction that shows the urgency in the data. But coming back to the Froman article, I think there's a lot there to unpack. First and foremost, let me just say it would be fair to note that the Chinese have pushed back on this narrative that has set in overcapacity. What they said in a Ministry of Commerce report just last month is that this is not at all overcapacity. What it is innovation, their ability to have industrial clusters, high productivity growth among workers, and a real comparative advantage. However, the numbers do not suggest this, Morgan. So I think the Chinese are going to have to really decide whether or not they're going to sit through a system of China Shock 2.0 happening in the global south, really where this is happening, and what that means for them politically. And right now, the numbers suggest that the Froman framing is the correct framing, not the Ministry of Commerce framing.
I'm just looking at these notes here and make the point. The deeper problem is that China became the world's factory, rapidly moved up the value chain, but never completed the corresponding transition toward becoming one of the world's great consumer economies. Is that necessary, or is a paradigm shift underway here? And does that then, in turn to your point about what this means with the global South, does that change the economic framing and how we need to think about interactions across the world moving forward?
Well, I think to that point, if China really became one of the world's great consumer economies, I think it would do a lot for their global standing. And I think it would take the pressure off of some of their geopolitical relations around the world. Most of this export capacity, as you know, Morgan, has gone to Southeast Asia. It has gone to Latin America. Europe is being hit extremely hard. And the Chinese and the Europeans right now are in a trade spat over capacity issues, with a crescendo moment happening in October. But I just don't see the Chinese moving in that direction. Consumers are not confident, as Eunice said. We have a household savings rate at 20% of GDP, Morgan. That's 2 times greater than the OECD average. So consumers are not feeling very confident and not spending. Therefore, China is exporting that capacity to other places around the world.
Yeah, and of course it gets right at the heart of what we've seen in terms of U.S. trade policy when you think about things like transshipment dynamics as well.
Yeah, you know, last month, the U.S. began to really hammer home on this issue. Just last week, they introduced something called the Detective Borders AI-enabled software to get at what people like Peter Navarro is calling the great transshipment scam. So this is China finding a way to move their products through the global supply chain in, according to this report, 40 plus other countries. So it is becoming a real challenge. I hope this becomes an issue at the Trump-Xi summit in September and at the G20 trade ministerial that Ambassador Greer will be hosting in Milwaukee. But so far, Morgan, I don't see this on the agenda at all, and I think that's a miss.
Okay. Yeah, it's certainly something we're going to be watching come September. We got a very busy September for all of these foreign policy relations. Dwarchuk McNeil, it's great to have you on. Thank you.
Thank you, Morgan.
A lot more to come here on Morning Call, including not all things are created equal, especially when it comes to energy. Chris Stevens is here to tell us about the splits in energy stocks that investors need to know about. Morning Call, we'll be right back.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC+.
American soccer legend Landon Donovan will explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
My ambition is just to be the best that we can possibly be. If you're watching CNBC, it's because you want to get an edge, you want to get ahead. It's our job to deliver that. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
My jacket holes are close enough. And I did when I called her. Funny how the clothes remember. The man just gets small. They say that smells the strongest since tied closest to the brain.
is reshuffling the global equity market rankings. With Taiwan and South Korea leapfrogging past long-established markets, Taiwan has climbed past Canada and India to become the world's fifth largest equity market, while South Korea has moved into sixth place.
All this happened within the span of just a few months, because last December, they were in the 9th and 11th places respectively. Now, such a shift is not unprecedented, but what is unusual is the speed at which these two have been climbing.
But this reordering isn't necessarily being driven by broad economic growth. Instead, it's about three companies at the heart of the AI hardware supply chain.
It's the AI theme which is driving things. So we have this kind of perfect positive storm of industry fundamentals which are resulting in very, very rapid profit growth.
So what does this reshuffle tell us about how AI is changing global stock markets? And what are the risks?
Welcome back. Oil coming off its first positive week in the last three, with WTI, she said, up nearly 5% and Brent up nearly 6%. But despite recent volatility, energy remains the top performing sector this year in the S&P 500. It's up nearly 38%, but not all names in the sector are reaping the rewards of those gains. So Pippa Stevens is here. She's got to look at the biggest winners and losers. Pippa, it's great to have you on set.
Thanks, Morgan. So it really is, though, a tale of two energy sectors here, though, because we've seen a big divergence between the gas-focused equities, which have lagged relative to the oil-focused drillers. Now, at the start of the year, it was all about gas, thanks to the two clear tailwinds of LNG growth and power demand from AI. And so that's where the bull case within hydrocarbons was focused, while oil was seen as, past the peak. But the Iran war has flipped that on its head, with WTI up more than 40% on the year, while natural gas is down nearly 30%. About 1/3 of U.S. nat gas production is associated gas, meaning it's produced alongside oil. And with oil prices holding above 80, drillers are making more than enough on oil to offset losses from gas, which is why gas production has stayed high despite the fall in price. The EIA now forecasts U.S. production jumping to a record 122.5 billion cubic feet per day this year. So that's all pressured gas drillers like EQT, Expand Energy, Range Resources, and Antero Resources, all of which have lagged the broader energy sector this year. On the flip side, drillers with more exposure to oil like Oxy, EOG, and APA are all up at least 35%, while Exxon and Chevron have advanced 30%. But it's the refiners that have been the standout performers this year, with Marathon Petroleum and Valero Morgan more than doubling, thanks to the tightness that we're seeing worldwide in fuel markets.
I mean, one of the debates we're seeing for the broader market right now, and I think part of the reason that equity strategists haven't raised, their price target expectations or, the price targets for the S&P through the end of the year, despite the strong earnings we've had, has been this debate that have we peaked here? And when you look at something like the refiners, can that debate carry water?
I mean, the refiners are doing very well in this environment, and it goes to show that even though oil has come down and really been in this range of, call it $80 to $90 per barrel, which doesn't have the same impact that price would have had, say, 20 years ago, but the fuel products is where it's so tight, and that's what we're actually paying. And so when you look at the inflationary cost, I mean, diesel today is at $5.45. That is just a little bit below its record high back from 2022, and that feeds into everything. And so when you look at the inflation numbers, yes, they've moderated, but we haven't seen the end of this, particularly given refiners have now delayed some of their maintenance. And so if there happens to be a big hurricane in the Atlantic, say, and some refinery capacity is taken offline, that will have a really big impact, as well as that maintenance. We can't stay at above 95% utilization for forever, which indicates higher fuel prices, or at least, steady fuel prices ahead, and that does start to have an impact.
Okay, sounds good. A 1-2 punch. War and weather. Okay, Pippa Stevens, thank you.
Thanks.
Well, straight ahead, the Morning Call crew teeing up the trading day ahead, including the good signs that one of our crew members is seeing right now.
there were definitely a few times when there was no money in the bank.
Before Careem became one of the defining startup stories of the Middle East, Mudassir Sheikha was trying to keep it alive from one funding round to the next. He'd left a safe consulting job, and he and his co-founder had each invested $50,000 US of their own money into the company. In the early days, Careem wasn't an app that magically matched riders and drivers. It was the founders calling drivers themselves in the early hours of the morning.
It was radically basic. All we had was a website.
And 7 years later, Uber, the rival Careem spent years fighting, agreed to buy the company in a landmark deal for the region.
To do a deal with our biggest rival, the company that we thought was trying to kill us, was just very, very difficult for the organization.
American soccer legend Landon Donovan. He'll explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box streaming on CNBC Plus.
From the markets to the calls. Kick back and relax while we serve up the highlights.
Stubborn love and broken pride.
Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of it.
The hardest thing to hold. But I kept pulling at the rope until it burned a hole.
Welcome back. It's time for your call sheet where we look at the topics driving the trading day ahead. Crew members today, Mike O'Rourke, Jones Trading Chief Market Strategist, Lee Baker, Claris Financial Advisors owner and president, and Henrietta Trey's Beta partner, co-founder and director of economic policy. It's great to have you all here. Mike, I'm going to kick this conversation off with you because it really seems to me that we have something of a bifurcation in the market here. You have AI and arguably the economy.
Yeah.
So you have AI and the industrial side of the economy, which is at least in part tied to that. And then you have the consumer side of the economy. Your thoughts?
Yeah, the K-shaped economy exists. It exists in the economy, it exists in the stock market, right? Everyone's focused on AA stocks. Everyone's focused on the AI build out. We do have big earnings from retailers this week, so we'll be watching Walmart, Target, see how the consumer's doing, see how back to school is doing. Obviously, we have midterm elections coming up, so these are all going to be big issues. But I think the problem is it feels like we're flying, a plane flying on one engine, and that engine's AI, and that could be a concern.
Yeah, Henrietta, I want to get your thoughts on all of this.
Yeah, that's exactly what the read from the economic data sets would tell you. If it weren't for this AI investment or capital expenditures around data centers, the U.S. consumer is absolutely struggling. And so much of the S&P or the Dow is actually not on the rise with Mag 7 is in the adjacent companies. So when the U.S. consumer, as Mike mentions, goes to the polls, they are feeling very pessimistic about the state of the U.S. economy. We saw it in the University of Michigan data last Friday. And what's so fascinating is that you're starting to see it amongst the very K-shape that Mike references. The lower income, non-college educated, older voter that's struggled basically since the pandemic. And they are feeling even more pessimistic now than they were before, largely because of gas prices and inflation.
Yeah, and of course, I think gas prices, average price for a gallon of gas right now is at the highest level it's ever been for this time of year. Lee, I want to have you weigh in on this as well, especially since We've had some softer data here, right? We had a weaker than expected jobs report. We had cooler inflation readings last week. We had a weaker retail sales number on Friday. And yet, when you look at the bond market, the long end continues to climb here.
So, the bond markets are troubling, and it seems as though the bond markets are warning us about something, but the equity markets just aren't listening. The things you talked about, the weaker jobs number in July, but we've also had downward revisions when we take a look back at May and June. And so I'm going to be singing from the same hymnal as it relates to this K-shaped economy and what consumers are feeling. It's troubling for the lower leg of that K, if you will.
Yeah, Mike, you laughed a little bit.
Yeah, no, Lee's right there. It's the stock market is ignoring the bond market. The spread between the 10-year Treasury yield and the S&P 500 earnings yield is hitting records it hasn't seen in 20 plus years. So the equity market still is very optimistic, but again, it's that single engine that we're relying on. So there's still so much risk that if there's any type of slowdown in the AI trade, the AI economy, it's a risk to everything. I think AI is a bubble. That's my point of view, or at least the value, not AI itself. It's funny, AI is fantastic. It's the valuations of these stocks right now. So that's where the real risk is in this economy, because if we see those stocks turn lower, it's going to hurt. It's going to hurt spending. It's going to hurt everything. It's going to hurt the consumer, and investors are going to be. It's going to be a painful experience.
Yeah, the circular financing conversation and how NVIDIA is kind of central. I'm hearing phrases, central bank of AI for NVIDIA. We got more of those headlines over the weekend, but here are the other headlines we got, Mike. I want to have you weigh in on this week. A number of reports regarding Anthropic as we await a potential S1 ahead of an IPO as soon as this fall, and then reports about OpenAI. And in terms of both of those companies' growth trajectories, very, very strong here. But this specifically, the Reuters article over the weekend, Anthropic's IPO valuation ambitions are based on 2028 sales projection of $190 to $200 billion and a Palantir/Cloudflare/SpaceX-like revenue multiple of 40 to 50 times. I bet you have thoughts on this.
First of all, I think Anthropic's incredible. I think they're a great company. I think Claude's incredible. That said, again, the multiple you want to pay for assets is where the risk is, right? If you want to overpay, it's going to be dangerous. It is going to be an interesting year if 2026 turns out to be, which it looks like it will be, that we got the SpaceX, Anthropic, and OpenAI IPOs, because that is tremendous amounts of supply coming on the market. Again, you go back to the Ray Dalio type of thinking, where when people try to turn their wealth into cash, that's where you run into problems in markets, and that's exactly what we're seeing in 2026.
Lee, your thoughts?
So I'm in agreement. This circular financing is really a problem, and it concerns me. I won't say it keeps me up at night, but we've often heard the phrase of robbing Peter to pay Paul. This circular financing is a dynamic of borrowing from Paul to pay Paul. It works for a while, but then at some point it just doesn't work anymore.
I'm going to shift gears. Henrietta, I know you've followed this very, very closely. Where we're at in terms of trade dynamics and tariffs as we look to Wednesday and the possibility of 50% tariffs on some Canadian goods.
I'm not expecting the 50% tariffs to go into effect. It's very wonky, but the statute that the president has decided to pursue here, Section 338, is one that has been overrun by Section 232 or the more familiar Section 301 tariff. So I think just the mechanism tells us a lot, which is that the tariffs are unlikely to go into effect on Canada. Not to mention the extraordinary economic toll that will have across the manufacturing, the farming sector, even entertainment and travel and tourism. It's just an untenable situation.
Okay, so we're going to see what we get with retail earnings this week, possibility of tariffs and gas prices being mentioned on calls. That's going to do it for us here. Thank you to our call crew. Squawk Box starts now.
Good morning. Futures are mixed. The S&P 500 and NASDAQ currently riding 3-week winning streaks. On tap for investors this week, retail earnings. We're going to get a read on the state of the consumer when Walmart, Target, and other big names report. And Berkshire Hathaway bulking up its stake in Google's parent company. It is Monday, August 17th, 2026. Squawk Box begins right now.
Who's gonna keep my father living? Story bit by bit.
everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross-Sork, and Joe is off today. As Andrew mentioned, we're watching the U.S. equity futures, and they are presenting a mixed picture at this point. Dow futures off by about 90 points. S&P futures, though, are indicated up by just over 6 points. The NASDAQ indicated up by about 165. It has been a real run for the markets. Mike Santoli has a new note that goes out on Sunday nights. He was pointing out that what we've been watching with the S&P 500 has been pretty remarkable over the last 12 trading days. It's up by about 6%. If you're watching the S&P right now, it closed Friday less than a tenth or just at a 0.1% away from a new all-time high. You've got the Dow and the NASDAQ, which are each off by less than 2% from an all-time high. And then the Russell 2000 closed at a new high on Friday. So we'll be watching the market very closely. Earnings have been stronger than anticipated, and that's been a big part of the run-up. But as Mike was pointing out, he's a little skeptical as to whether you can continue to see an increase in valuations from here, just in terms of where the markets come back from. Energy prices have been something to watch. They were up by more than 5% last week. This morning, WTI is up by about 0.6% to 82.92. Brent is sitting at 89.40, and then you've got Treasury yields. The 10-year yield has been a little bit higher than where we had been over the course of the last week. The 2-year's been a little lower. This morning, the entire complex is slightly lower in terms of yields. You've got the yield of the 10-year sitting just at 4.68. The 2-year is sitting at 4.15. As Andrew mentioned, Berkshire Hathaway bulking up on Alphabet shares. According to Berkshire's latest 13F filing, it bought $17 billion worth of Alphabet stock in the second quarter. That made Google, the Google parent, the third largest holding in Berkshire's equity portfolio, which is worth more than $36 billion, that holding. Berkshire's biggest stakes are in Apple and American Express. About 60% of the more than 48 million Alphabet shares that Berkshire added came in a private placement sale that the companies announced back in early June, but was buying in the open market as well. And in other moves, Berkshire added to its position in Delta Airlines and in Macy's. It also added to its stake in the home builder Lennar, and it bought back shares of Berkshire too.
It's going to be interesting to see. I mean, Google, for better or worse, has not been as loved as so many of the other big tech companies. And the question is, from an AI perspective, will they be able to make it work?
Yeah.
And I actually think, that, they may not be the most advanced at this point. Like Gemini is not where Anthropic is or OpenAI is. But given the surface area of just what they capture, feels like the use case. I find myself more and more, even just on Google, I'm now putting in prompts just straight into Google.
I do too.
Almost by habit.
Right, because we've all used Google for so long. And in fact, that was Warren Buffett's point when we spoke to him last month. I talked a little bit about this push into Alphabet, which, by the way, he was behind that move. He said, look, they're going to be a winner. He just thinks that that's his expectation, at least, that they will be a winner. He doesn't know how it's all going to play out, but they have the money, they have the capability, and the smarts to do it. And it's his thesis and why they are plowing so much money into this. By the way, Greg Abel's on board with that. They talked about all of it, but it was initiated from Buffett.
We will see. Apple, it's funny because on the tech side, he's had this sort of mix. He's had an amazing record with Apple, killer. IBM, if you remember, was one of his picks years ago. That was a miss.
Under Jenny Rometty.
So it's going to be, we'll see.
Yeah, and by the way, he's always said that he's not really a tech investor, but when I pushed him on that last month, he was like, I've been buying technology stocks for 40 years or so. So, his reason behind Apple was that it was consumer stock, and I understand the consumer aspects to it. I asked him if that was the Google point, and he said, look, he just really thinks that they are going to end up being one of the companies that thrives in what's going on with AI.
Meantime, President Trump ordering the U.S. military to scale back annual exercises with South Korea. In a social media post, the president called cited, what he called a very good relationship with North Korea's Kim Jong-un, and said the exercises, in his words, quote, send a signal that is totally inappropriate and hostile to a country that, as long as Donald J. Trump has been president, has been unthreatening and respectful. The president went on to say, quote, while somewhat unrelated, question mark, I recently asked the president of South Korea if they would like to join us in the denuclearization of the Islamic Republic of Iran, and they said, no thanks. Maybe we can understand where some of this is coming from. The drills involve 18,000 South Korean soldiers and are designed to increase readiness against North Korean threats. Back in May, Defense Secretary Pete Hegseth praised South Korea for its security leadership on the Korean Peninsula. So, a bit of a head scratcher this morning.
Yeah, look, President Trump likes to kind of combine politics, geopolitics, what he's doing economically and beyond, and there could be some pressure coming from that because they're also kind of pushing South Korea to come up with some of the investments that they had been talking about on the economic front too. But yeah, it is an interesting and change in perspective on something that's been planned for a very long time, and I think it would be hard, because right now they're in the process of going through these drills, it would be hard to take much away from that at this point.
Well, I think there's a couple of things. There's the sovereignty of South Korea, which you think they're our ally, we would want to protect.
Well, we fought the Korean War there.
North Korea, we have typically put in the same category as Putin.
Axis of evil.
Though
the Bush terminology.
This president has not always put Putin in that category. So that's why I said, I put it in the head-scratching category. That's the polite way to put it. I think a lot of people would say there's something very amiss here.
George W. Bush put Putin and North Korea and Iran in that axis of evil, and we shall see. All right, let's get to the latest on the Iran war. Speaking of, the Wall Street Journal says that Iran has spent the past 2 months getting ready for a bigger fight and into a stance to raise U.S. costs if the conflict goes on. A report says that since a memorandum of understanding was signed with the United States in June, Iran's hardline leaders have ramped up missile and drone production and shifted more power to the country's Revolutionary Guard Corps. Separately, Iran's deputy foreign minister doubling down on the country's position that the Strait of Hormuz is under its control. That followed comments from President Trump on Friday that he may declare the Strait U.S. property. Here's a little bit of what the president said on higher gas prices stemming from that war.
So, for you to pay a tiny little bit more for your gasoline, just remember, you're doing it so that a very evil country cannot have a country. Really, it's the #1 state sponsor of terror in the world. We don't want to have them have a nuclear weapon. So remember that when you have to pay a little bit more, you're at $4. It's okay.
According to AAA, a gallon of regular currently averages $4.06 across the United States.
When we come back, a lot more on Squawk Box this morning. Investors set to get a look into Fed members' latest thinking when the central bank releases its latest set of minutes. That will come a little later this week. After a break, what the fixed income market is actually telling us, the chances of a rate move ahead. Don't go anywhere. Squawk Box will be right back after this.
Slow smile.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
And so will this whole body.
Edge just opened up in Europe with a French government cooperation agreement as well. How significant is that deal for Edge and for Abu Dhabi?
Europe is where the next budget cycle. We would like to contribute to the security of Europe. We feel that we have a value. We feel that Europe have recognized this value by accepting us into Europe. These are facts. We have a very nice footprint in Europe, and this would have not been possible if the UAE wasn't accepted in Europe as a partner, knowing and trustworthy with NATO and the way we firewall things. Plus, you need another player in Europe. Even the big players today, we're working with them. There is always these collaborations, but they only start when you put your ego aside. There is always someone better than you. And you need to be on this learning curve forever.
The day's top stories driving Wall Street. Up to the minute developments. Kelly Evans, Brian Sullivan, Power Lunch, streaming on CNBC Plus.
There's a weather vane out on my roof that never points my way. There's a weather vane out on my roof.
Welcome back to Squawk Box, everybody. We've been watching Treasury yields this morning. For the most part, those yields are a little bit lower this morning. The 10-year is sitting at 4.69. The 2-year is at 4.16. Joining us right now to talk fixed income, the markets, a lot of what he's seeing is Bill Eigen. He is the Chief Investment Officer of the Absolute Return Fixed Income Group at JP Morgan Asset Management. And Bill, thanks for coming in. It's been a little while since we've gotten to talk.
Yeah, no, thanks for having me. Always like to.
As you were sitting down, you were saying the markets are keeping you up. You've never seen anything like what we've been watching when it comes to AI and what that has meant to fixed income. Explain.
Yeah, well, just in terms of the capital market flows and what we're seeing in fixed income, this deluge of issuance, particularly on the long end, where I think there's kind of a duration mismatch. The more I look at the AI cycle, the more I'm starting to become convinced it's less of a tech cycle and more of a real estate cycle. Partially because of what's going on with the sheer amount of money going into data centers. And the thing I'm most concerned about is not the first derivative. Like everyone's focused on level, like things like revenue, token prices, etc. And they're also focused on the first derivative, which is growth, right? I'm focused on the second derivative, which is the acceleration of that growth, because what I'm terrified of is when that starts to slow, and it looks like it is slowing in terms of CapEx, in terms of private market valuations of the AI labs, etc. That once that starts to roll over, that's very similar to what happened in the real estate cycle back in 08, where it wasn't the fact that home prices stopped appreciating, it was the rate of acceleration started to slow, and that's when delinquencies started to really pick up. So not to make a total corollary to 08, because that's inconsistent, but these are things that keep me up at night, especially when you look at the sheer amount of debt and what I call the duration mismatch, because I don't really want to buy 30-year debt on a data center that's going to depreciate over a 3 to 6 year cycle. Right? Because already today you're seeing stranded data centers that were only built 5 to 6 years ago for like 6 to 10 kilowatt racks.
Here's a question. Becky had this great interview.
This is what I was just going to jump to.
Okay, so with this great interview with Jensen Huang and a whole number of private equity and financiers who are behind the next wave of these data centers, $500 billion worth of them.
Some staggering amounts, right?
And so much. But you said that there are data centers that have been in existence for 5 years that are now
5 to 7 years
that are now stranded.
That's going to be my point. Is Jensen Huang is saying this is now an investable asset. Are you saying it's not? Because their point is that the life cycle of these things has been longer than they anticipated on the chip front. Are you
on the
saying?
Chip front, yes.
You're saying on the data center, though.
And what does the chip manufacturing business do? To constantly make faster and better chips, right? Which increase the obsolescence of the data centers that were built relative to the old chip.
Their point was that things are not, these are being used and they're not going obsolete as quickly because there is demand. You think that's going to run out?
I think, yeah. Just because of the sheer amount.
But so here's the question that I've been trying to figure out, actually, since that great conversation that she had, which is, you look at a Google, you look at an Alphabet, or rather an Apple, you look at some of the other companies that have looked into this, and they are depreciating these chips at 5 to 6 year cycles. That is what they're actually marketing them as today. there's a market for used cars.
Oh,
there is. Like people
at a certain price point, there's a market for everything.
And by the way, when there's a shortage of new cars,
That's the real issue.
Used cars go up in value.
Right? Used cars go up in value. The question is how long you believe there's going to be a shortage of new cars that's going to give the value to the used cars. This is sort of the math equation that I think we're all trying to grapple with.
Well, and as a fixed income manager, my job is to make sure I get paid back, right? It's different from an equity investor. And when I look at a 30-year bond on a data center, yeah, the bricks are going to be there in 30 years, yeah, but the insides are going to have to completely change over time, right, because of the obsolescence factor. And I just think that's something that not everyone is factoring in, is the obsolescence factor. Because when you look at, what's been holding up.
But you work with these guys.
Yeah.
You work with all of these financiers who are around that table.
Yeah.
What do you think that they what?
I also remember the financiers in the late 90s, as do you, who were telling me that there's an endless demand for fiber. You can't put enough fiber in the ground. There's endless demand for telecom. I remember, meeting with Global Crossing, Quest, 360 Networks. These guys were talking about endless supplies of revenue growth into the, forever into the future. And I'm not saying AI is the same thing. What I'm saying is it seems to me we're getting to the point where, like I said, this is looking more and more like a real estate cycle as opposed to a tech cycle.
So what do you do as a result? Do you short any of these things?
No. That's the you don't know when it's going to end. No,
right.
I just.
Could this continue for years before something happens?
At the right price, I'll buy anything, right? But right now is not the right price. Like, for instance, when you look at, in private credit, I'll get into it in a minute. When you look at spreads across public markets, they're the tightest they've ever been, right? High yield spreads are 270 over, right? IG spreads are incredibly tight. In fact, the credit default swap index on investment grade is at 50 basis points. And it's about the cheapest you've ever been able to buy insurance on a portfolio of credit protection in history. So that's what I'm doing. That's a very cheap way, incredibly cheap way to take the other side of this market, saying, hey, I think things are getting a little overdone here on the fixed income.
You're not the only one who's doing that. Credit default swaps have risen pretty substantially on a number of these stocks, on a number of these.
Oh, the hyperscalers especially.
The hyperscalers,
yes.
Even NVIDIA.
And that's, by the way, is a warning sign. When the top of the cap structure is telling you, hey, not everything's right here, and spreads continue to widen on these hyperscalers. Some of them never even had a credit default swap, but now they do, and they keep blowing out.
Well, and the credit default swaps do not match the balance sheets of a lot of these companies.
No, they don't.
What is that telling you?
They don't, with the exception of maybe one or two of them, where it just tells you that there's some fear building into the marketplace about the sheer amount of debt and the leverage associated with that debt among the hyperscalers. For instance, when you look at the two main AI labs, when you look across all the AI labs, there's like $2 trillion in RPOs, performance obligations owed to the hyperscalers. Among the big two, it's over $1 trillion. How's that going to get paid? How's that? I just look and I look at and I know Anthropic's revenue was this, but that rate of acceleration of revenue is slowing, right? As well as the private valuation.
You're probably not the only one who noticed this. I think Jensen Huang did this and brought all of these Wall Street financiers together because they are looking for ways. Like, he's always looking for bottlenecks, and if the next bottleneck is going to be how do you finance it, he's got to make sure that he finds some of those solutions. Doesn't seem to be any shortage of people who are lining up saying, okay, we'll take a piece of it.
Oh, well, there never is when you're at the top part of the cycle. That's when everyone's all excited. I mean, right now, everything looks perfect. When everything looks perfect, that's when I start to get a little cautious and really dig below the surface. Because again, at the end of the day, I focus on the top of the cap structure. I need to get paid back. I can't, people want to, equities come with known risks, right? You can lose everything when you make an equity investment. But at the top of the cap structure, you have to be really careful. And as an absolute return manager, I got to make sure that whatever I buy, I'm going to get paid back. I'm going to get that coupon. I'm going to get that
premium. I know you're a bond guy, but let me ask you a related equity question.
Sure.
So there's a story today in the Wall Street Journal called "Why Big Tech's AI Spending is $3 trillion higher than it seems," and it goes into at great length. Meta uses Meta as one of the big examples, but just how much off-balance sheet risk there is that doesn't sit on the balance sheet. And then there's been a number of stories over the weekend that actually get a little bit more into some of what you might describe as the circular financing of some of the NVIDIA transactions that have happened in the past. Now,
also with the hyperscalers too,
right? And therefore the valuations on the equity side of those hyperscalers, because they're all capturing a piece and a multiple on the new valuation. So I say that NVIDIA owns now a piece of SpaceX, for example. And the question is, are they getting a multiple on that or not? So, for example, Berkshire Hathaway typically doesn't get a multiple on its investments in different stocks that it invests in.
Understood. And you make a very good point. I think last I checked, there was like $1.3 trillion off-balance sheet obligations through SPVs and synthetic risk transfers. That's a big number, right? And that's off-balance sheet, but it has to get paid. That's the thing that people forget about. Just because it's off-balance sheet doesn't mean it doesn't have to get paid. And that's not to mention the trillions of dollars in debt that have been racked up as well. And all I'm saying, and the funny thing is, when I bring any of this stuff, people get angry with me. And that tells me something also. Like, that there's, like, when you bring up a counterpoint to the bullish thesis, people get getting angry. Last time I saw that was the late 90s, where people would get angry with me when I brought up a counterpoint. And the other thing is, it also tells me something about a cycle when, I walk into a 7-Eleven and, I go in to get a coffee and a bagel, and I walk out with a coffee, a bagel, and three microcap semiconductor stock tips. It also tells me about something about where we are in the cycle. So again, I'm not trying to be a bear here. I'm not trying to be this doomsday. That's not it at all. I'm just saying when I try to make the numbers work, and I look at the fact that this does look like very much like a real estate cycle, and the second derivative, which I pay attention to very carefully, which seems to be rolling over, which is the rate of acceleration of everything, whether it's revenue, the rate of acceleration of CapEx given by the hyperscalers, the rate of acceleration of the private valuations of the AI labs, the rate of acceleration is flattening. And that's the second derivative that not many people are paying attention to, but that always indicates that you're getting toward the end of that cycle is when that starts to roll over.
We're going to have Greg Brockman on later this morning from OpenAI. What would you ask him?
Oh, I have a lot of questions. Again, when are they truly going to be profitable? How are they going to pay off the hundreds of millions of dollars of RPOs that are owed to the hyperscalers, particularly a couple of them, one of which is, spending an awful lot of their revenue on CapEx. The other is the demand really there, and how does it get monetized? The sheer amount of cap and the circular revenue question, which you brought up, Andrew. I mean, there's three things that when I look at the hyperscalers that kind of stick out to me. One is that depreciation schedule we talked about. Is it correct? Two is the constant markups on the private equity stakes that they've all taken in these AI labs, which get marked up every quarter and add to their GAAP EPS a significant amount. And number three is the whole circular revenue question, where revenue flows from the hyperscalers into the AI labs. That revenue is then used to buy compute and also to offer equity stakes and other stakes to these hyperscalers, which then get marked up every quarter, and the circle goes around and around and around. And that's something I haven't seen again since the late 90s. And it doesn't mean we're going to crash. It doesn't mean, like I said, every time I bring this stuff up, people get so upset with me. It's kind of funny because the more emotional people get when I bring up a counterpoint.
Let me just ask one question. I know we got to go.
Yeah.
If NVIDIA lends effectively the money for and/or the value of the chip to said company, right?
And then they buy the chips.
And then they buy the chips
for that revenue.
And then they capture a multiple on that.
Yeah.
Right. So it's your dollar. All of a sudden, you get in some cases a 30 or 40.
More than $1
times multiple on what's happening. What kind of multiple should be put on that? Because either you're teaching, if you're Jensen, you're saying I'm teaching people how to fish.
Right.
I'm teaching somebody how to. I'm not giving them fish. I'm teaching them how to fish. And if they can become really great fishermen, this is going to be good for my business because I'm going to get to sell a lot of fish in the future.
Yep. No.
So is there an appropriate multiple for that? It's a different way of thinking about it.
Yeah, I don't know what the appropriate multiple is. There is a multiple required, obviously, or else you go out of business pretty quickly. The thing I question, especially with the AI labs, is how much do you have to spend for that incremental dollar revenue, right? What's the spend? And I can't really get that number, no matter what I look at. I know it's higher than $1. I know for every dollar revenue you're getting, you're spending more than that, right? Otherwise, they'd be profitable. But what is that number? And when does it actually turn into not operating profit, but when you truly get net profits? Like a lot of people like to talk about EBITDA. EBITDA doesn't pay the bills, right? True profit. When does it convert to true profit that can grow over time exponentially?
Bill, thank you for coming in.
Oh, great. Thank you. Thanks for having me.
Talk to you.
Yeah, you too.
Okay, coming up in just a little bit, we're going to continue talking about AI, but with some people who are in this little debate, which is a different one. An online debate over the weekend that has gone viral over California's proposed billionaire tax, a bunch of AI folks involved in it. This one involves California Congressman Ro Khanna, who, of course, represents Silicon Valley, Mark Cuban, and hedge fund player Bill Ackman, among others. We'll tell you about it after the break. You don't want to miss it.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
In this CNBC Explains, we explore why Asia is leading the global IPO market.
We have a really big year for IPOs with SpaceX, OpenAI, Anthropic, but analysts are pointing out that there's much more volume here in Asia.
And we look at how South Korea's AI chip boom is spilling into the housing market.
In Korea is a reflection of what people consider as their safety net, as well as a symbol of success.
The show that explains the why behind the headlines, only on CNBC.
For me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. You want to learn more about it. And I think CNBC allows our viewers to fulfill their passions. There's no doubt that the people who watch us care. I am very much focused on trying to land interviews where there is something at stake and asking them fair but tough questions in which their answers are important. I could not imagine covering anything else.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange, and it's been awesome. To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/GoPro now.
Closing Bell, weekdays streaming on CNBC Plus.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region covering what you need to know from here and around the world that would shape the business day.
We know there's 2 winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
That's all I'm working with right now. The ring is gone, the house is sold, but this old guitar still keeps me whole.
Welcome back to Squawk Box. California Congressman Ro Khanna earning some new criticism for support of a possible billionaire tax in California. Over the weekend on X, Khanna says the following. The California Democratic Party and the California labor movement just stood with Bernie Sanders and me in supporting a 5% wealth tax on 250 California billionaires. California voters want a Democratic Party that will stand up for the working class over the billionaire class. Now, that prompted all sorts of commotion online, and this reply from Mark Cuban, who said founders of even richly valued startups don't see much personal wealth flowing their way. Cuban asked Khanna how he planned to tax that wealth, even if it looks huge on paper, and said if the billionaire tax passes, he would not bring new companies to California. And in fact, it'd be a prerequisite for them not to be based in California if they were going to invest in a company. So then Khanna replies and says that founders, and this again gets everybody even crazier, says founders without much liquid wealth could pledge their shares with a long-standing loan from the government to pay their taxes. To that, then hedge fund billionaire Bill Ackman jumps into this whole game. It says that under Connor's plan, quote, the penalty for a failed startup is insolvency, and the government garnishes your wages for life. Palmer Luckey also jumping into the fray. There was a whole bunch of FUs involved in this conversation.
I reached out to Mark Cuban.
And Mark and I had emailed yesterday about this, and it's kind of an unbelievable scenario, but I'm surprised actually just at how far Roe, who we've had on the show for so long, has sort of turned the tables. And in particular, given that he does represent Silicon Valley.
He does a lot of trading.
And does trading, but I'm not even putting the trading part into the story.
I think he would understand a little bit more about how this would work out.
I would just think that and this is the political calculus that I feel like I don't understand. Given that I would have thought his constituency would be against this broadly, given that he represents literally Silicon Valley, that is his constituency, he must believe that there's enough people in his district who work at tech companies but are not billionaires themselves, who somehow hold either so much animosity towards their overlords, if you will, or have a very different view of all this. I mean, that's the piece of it that I can't understand.
But he's gotten backing from people like Lisa Su and Jensen Huang, who say that they'd go along with this if it were to happen. So he always uses them as kind of the cover for what he's happening with this. It does make me wonder if Roe is looking for a higher office beyond just Silicon
Valley. But what I don't understand is if he doesn't get the higher office, does he get to stay in the role? Meaning, I would think you would be looking both politically at some kind of higher. I no doubt that he may have higher, bigger ambitions than what he's doing today. But if he doesn't get that, is there some other? I mean, maybe the fallback is his family's quite wealthy, but I would think he would want to at least stay in Congress. And what I can't figure out is this audience that he technically represents.
Beating up billionaires is something that's usually pretty good from a political perspective, because there aren't enough of them to say that they're going to change.
I was going to say a few places in the country. You would have thought New York, as sort of the capital of capitalism, would be one of those places. But especially Silicon Valley, I would have thought would have a very different view of this. And I think so many of the vocal ones, obviously on X and others do.
Look, I think it's something that people who have a lot of money to give towards politics may not be a fan of. But a populist argument generally wins when you're looking at just getting votes.
And that to me, the thing that I'm trying to figure out is if you're an entrepreneur, because Silicon Valley is, I think so, maybe they're not, maybe it's not a group of entrepreneurs, people who want to be entrepreneurs, I would have thought that they would have had such a different perspective on this, that politically it would be difficult, but clearly he's made a different calculus. Coming up, inside the turmoil at hedge fund situational awareness is told through its latest 13F SEC filings. We're going to tell you about it. And then later in the show, a can't miss interview. OpenAI's co-founder Greg Brockman is going to be with us at 8:30 this morning. You do not want to miss that conversation. You're watching Squawk Box, and this is CNBC.
14 seconds of a is enough to lift the
on a $100,000 US margin loan, Interactive Brokers charges just 5.14%. Do you know how much your broker charges? Fidelity and Schwab charge over 2 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,100, or much more if you're trading big bucks.
On CNBC Plus.
A market shaping industries. We are watching the 6 little dragons, the first to be listing in the Hong Kong market, supply chains, and global momentum.
Do you feel pressure to create the next Labubu soon?
This really is a business first pivot despite the geopolitical strains. The China Connection, weekdays.
The trade heads are gathering against the backdrop of the global energy crisis.
CNBC.com and the app anytime. Let's get to your headlines. Only on CNBC, connecting you with China.
People say move on, find someone new, start living for today. But they ain't heard her say my name the way she used to say. Every night I press that button, let a voice fill up the room. 14 seconds of her breathing is enough to lift the gloom. I know it's just a recording. I know she's never coming back, but her voice is all I'm holding, and I'm holding on to that. Press play one more time.
One of the most hotly anticipated 13F filings after the completion of the second quarter was the report from Situational Awareness, which nearly collapsed after bets on AI turned south. Leslie Picker joins us right now. She's been looking through all of this, and she's got the latest on this. Leslie, good morning.
Hey, good morning, Becky. Yeah, this was really interesting. The latest 13F filings, which were due out last Friday, gave us a sense of how Situational Awareness was positioned before its near collapse last month. The firm, run by former OpenAI researcher Leopold Aschenbrenner, was piling into multiple names that ultimately bore the brunt of the AI sell-off in July. For example, he had dramatically increased stakes in Micron and SanDisk during 2Q, those two names representing more than $11 billion in long exposure as of June 30th. Over the ensuing 29 days before Aschenbrenner sold much of his liquid positions to Citadel, SanDisk lost half of its market value, while Micron declined by more than 1/3. The fund may have traded during that time, as 13F filings just show a snapshot at quarter end, and they only reveal long positions and some options, but not short exposure. In addition to SanDisk and Micron, Situational Awareness had more than $1 billion worth of stakes in neocloud provider Nebius, Taiwan Semi, and data center power generator Bloom Energy. They each plummeted as well over the month of July. At its peak, Situational Awareness managed about $45 billion, but then when the market reversed against these trades compounded by leverage, the fund was forced to unwind many of its liquid bets to Citadel at a discount. Situational Awareness's assets plunged to about $10 billion, but include Anthropic among other private holdings, Becky.
Yeah, we've been waiting to get a lot of this information. I guess now what do we do with it?
Yeah, I mean, I think the question here is really just about risk management. We know what the snapshot looked like as of June 30th. It may have changed during the ensuing 29 days or so before everything really kind of came to a head. However, I think it's an interesting lesson in terms of private versus public, especially in what we're seeing with AI, because this was a very clear kind of levered bet toward memory, toward semiconductors, toward the AI trade, which we've seen has kind of ebbed and flowed over the last few years, whereas the private portfolio is now the one that's kind of holding up the fund. It holds about a $5 billion stake in Anthropic, and obviously private companies aren't always as, quick to market as the public markets, and so that's kind of been the saving grace of Situational Awareness at this time.
Yeah, they're not as quick to market, but private companies can swing pretty drastically at times too when they do get marked.
Definitely.
Yeah. Leslie, thank you. We'll see you later.
Okay, coming up, the race to the midterms, the players driving the key storylines less than 3 months before the vote. We're going to get into all of that next. And a reminder, you get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We'll come right back.
She waited by the kitchen sink, watching years
1 hour of added insight every morning doesn't just add up, it compounds. 1 extra hour every morning delivers exponential value and a pure investing advantage. That's the compounding edge. The all-new Morning Call.
I'm Morgan Brennan, and this is your Morning Call.
CNBC.
I personally risk everything to make High Rocks happen for me. For whatever reason, I went all in, literally, and I didn't have a plan B.
Moritz Forstad had already reached the top of his sport. Olympic gold in Beijing, Olympic gold again in London, then bronze in Rio. But after he left field hockey, he was searching for something most athletes never get back, a second arena. The idea became High Rocks, a standardized indoor fitness race built for the millions of people who train in gyms but did not have a sport of their own.
In 2026, we currently sold 1 million tickets, with roughly another 500,000, 600,000 to be sold till the end of the year. And we're operating 34 countries.
The format is simple and unforgiving. The same race, the same order, anywhere in the world.
If we would change the format, it would just not be High Rocks anymore.
Breaking news, market moves. Scott Wapner from the NYSE. Closing Bell. Weekdays streaming on CNBC Plus.
I started investing a little money for my dad, and I got bitten by the bug. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
We're now just 3 weeks away from the Labor Day, which kicks off the final sprint to the midterm elections. Joining us right now, former U.S. Senator Heidi Heitkamp. She is the founder of One Country Project and a CNBC contributor, and former White House Chief of Staff Mick Mulvaney, now co-chair of the Acting Strategic Advisors. Good morning to both of you. We're right in the thick of it. And some real big questions politically about what's going on in the country. We've seen the sort of rise of the DSA in certain parts of the country. Questions about what that means more broadly. I don't know if the question is how much more broadly or what it means in this election, what it means more broadly in 2028. But Heidi, I'll let you sort of start by explaining what you think is happening.
Well, first off, I think it's so interesting because it's caught a lot of media attention. But when you look at the candidates, less than 3% of Democratic candidates on the ballot so far are DSA endorsed, and many of the candidates have not been successful. And certainly the margins that were being predicted both in Michigan and in Wisconsin haven't come forth. And you see now Hakeem Jeffries basically distancing the party from the DSA agenda. I just always remind people, the Democratic Socialists of America are not Democrats. They may be endorsing some Democratic candidates, but it's not the Democratic agenda. And I think the more that we get away from talking about kind of inter-party fights and start focusing on those things that voters care about, which is affordability, which is our foreign policy. I think this morning the president is saying that he's going to scale back on South Korea because he's big friends with the dictator in North Korea. I mean, some of this is wearing thin. And in my part of the world, there's always been this, he really knows what he's doing, so just, go with it. And I think people are starting to have serious doubts about this president and about the party that he's leading. And that's going to, I think, reap huge rewards for the Democrats in the midterms.
So, Mick, that is the central question. On one end, you could say that the DSA or the sort of appearance of the DSA is sort of catnip and maybe actually quite helpful to Republicans on one end. On the other end, Peggy Noonan out with a column on Friday that just eviscerated this administration.
Yeah, well, I think it's fair to say you're probably past peak Trump in terms of his political influence nationwide. He's got tremendous influence within the Republican Party, as is evidenced by the outcome of most of the primary elections. I was interested to hear what Heidi had to say, and I'm fascinated by the fact that some Democrats are running away from the DSA, which I think makes some sense. Keep in mind, this is their Tea Party movement. This is their MAGA movement. This is their, they're 15 years behind us in terms of that arc. I came into Washington, D.C. 2010 with this Tea Party movement. We were against the establishment. We were sort of a little bit more populist right wing. That's what this is happening with the Democrats. But interesting, the end of her answer, and I think you're going to see this more and more, came back to Donald Trump. And that's the real question is, are the Democrats, are they going to run on their own policies, or are they simply going to run against Donald Trump? By the way, I don't know if running against Donald Trump is a bad idea, given his approval ratings. But it will be interesting to see if the Democrats can rally around any policies whatsoever, or if they're simply saying, well, we're not Donald Trump, so vote for us.
So, Heidi, though, that is the question. Do you see the Democratic Party right now? Who is the leader of the Democratic Party? And what does that party stand for besides being against this president, which, as Mick said, maybe a winning approach? I don't know, but I'm curious what you think.
Well, number one, I think that many really smart candidates, especially in places like Ohio, they're running against Donald Trump. They're running against their opponent who supports Donald Trump. And so I think you'll see them not mention the president that much, especially in the red areas of the state, but talk about the policies that have led to economic harm for middle-class families and what they were promised, and then talk about what could happen that would change that. And I think that I've long thought that just running against Donald Trump is not a winning formula. You have to run for something. And that something is going to be focusing tax policy on the middle class, focusing investments on the middle class. You take healthcare. I mean, we're just now starting to see the cuts in Medicaid. Those are going to hit families very, very hard, the loss of subsidies.
Sure.
And so healthcare is a sleeping issue. And so you got to bring that back, Andrew.
Before we did this segment, we were talking about this brouhaha online with Ro Khanna over the weekend about wealth taxes. And you can say that's a California issue, but it's become a national issue. You could say it's a populist issue. And so when you say, what does the party stand for? The question is what Ro's doing what the party stands for?
I mean, I don't think so, but my position on this is exactly Mark Cuban's. How do you tax it? But then I go back to the incredible growth of wealth and disparity in this country, and people are frustrated, and that they look at tax policy, it seems to favor rich people. They look at policy as it relates to healthcare, it favors large insurance companies and pharmaceutical companies. And you see it a little bit, Andrew, I think, in the backlash in rural America against AI centers. It's not just, we don't want the noise. It's why should we take the noise when it's just making people richer? And so I think that the Democratic Party has to run on affordability, on change, but not going back to where they were before. And that means that they're going to have to be creative.
Nick, what does the Republican Party have to run on right now? If you're saying that the president's popularity has crested, is it something else that they run on?
They've got some good things. You saw them try to do it a little bit last week, Andrew. The president came out to talk about crime. They made some real significant improvements there. They made real significant improvements in immigration. Here's the problem they have, though, is that crime and immigration, those types of things, are only really an issue for voters when they're broken. And once you fix them, you don't really get that much credit for it. People go back to the ultimate issue in every single election, which is the economy. That's what this election is going to be about. And while the Republicans have got some good news there, it looks like inflation is trending in the right way, still higher than a lot of folks, including myself, want to see, but the trend is the right way. The job market looks okay, although we've got some labor participation rate softness. There's some good news there that they can sell. But at the end of the day, maybe they come back to their original sort of, you go back to your base and talk about taxes, because what Heidi just said is very insightful. Whenever a politician says, we just haven't figured out how to tax it yet, what that means is they've already decided they want to tax it. So the conversation that Ro is having is not should we tax these folks, it's how do we tax these folks? And this whole thing of soaking the rich, maybe it works. And here's the big risk Republicans run, is that you get what you ask for. I remember when the Democrats were all excited about Donald Trump's ascendancy in the Republican Party because they thought his rise would make it easier for them to win elections. They were wrong about that. And my concern right now is Republicans are going around saying, we'll take all the Democrat socialists we can get because it's easy to beat them, but maybe it won't be as easy as we think.
Heidi and Mick, want to thank you for the conversation. I'm sure we'll be talking with both of you a lot between now and the election.
When we come back, Alibaba's AI models exploding in popularity over the last 6 months. We're talking about billions of downloads. We've got the details on that next. But first, the AccuWeather forecast with meteorologist Bernie Rayno.
Sweltering from Texas toward Florida on your Monday. High temperatures near 100 degrees. AccuWeather says from Dallas toward Atlanta. A few isolated thunderstorms in the southeast. Gusty thunderstorms from Washington, D.C. toward Nashville. New York City turns out partly sunny but steamy. Nice day Chicago and in Kansas City. If you're doing any traveling, watch Boston and New York City this morning. Other than that, I don't have any delays. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
Every single story that we pick is a tie back to the markets.
Those sort of revenue streams don't trade at a great multiple.
We want to arm people with the information to make great decisions.
Stock got whacked. I get it. People say they overpaid. I get that.
Fast Money is all about the chemistry. We've been successful for this long because we're a team.
Fast Money, CNBC, streaming on CNBC Plus. Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
NVIDIA working with some of the biggest names on Wall Street to secure financing for its customers.
These partnerships are going to pull together independent long-term capital to fund AI infrastructure build-out.
You're starting to see asset-based financing against this infrastructure.
The first few years, there's no income. Once these are yield-based products, then it's easier to sell them in the public market.
We need to make sure that we're broadening participation in AI.
If you're watching CNBC, it's because you want to get an edge. You want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I'm thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
China is the world's second largest consumer market behind the US. In 2025, the country's total retail sales of consumer goods exceeded about 50 trillion yen, or about 7.2 trillion US dollars, up by 3.7% year-on-year. With a population of 1.4 billion people, the market has long been a cash cow for global brands. But today, success is no longer a given, with some Western brands struggling and even scaling back operations in the country.
When you think about live streaming and social media, the hottest new thing is going to bubble up overnight, and you have to have it the next day.
The number one thing that you will see is how little loyalty Chinese consumers are because of the brands and how fast they innovate and how quickly they push things out. Consumers are very used to being hit by new concepts, new designs.
So what does it take to win in China?
From China's Alibaba has recently blown past technology from Meta and Alphabet in terms of popularity. Global downloads of Alibaba's Qwen in the last 6 months have passed 3 billion, making it the most popular model in the world. Google had about 400 million downloads in the same time period, and Meta had about 200 million. That's according to a report from software development platform Hugging Face. It shows Alibaba's technology is also eclipsing popularity of other Chinese models, including those from DeepSeek and from Moonshot.
Coming up, what to expect from retail giants when they report this week. We got a lot to tell you about that and so much more. And Squawk Box returns right after this.
See that boy sometimes when I look into the glass. Said I see that boy sometimes.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
Ambition doesn't always look like you think it might look. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. That's what drives me. I love being part of this.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange. Streaming on CNBC+.
American soccer legend Landon Donovan. He'll explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the record.
Listen to CNBC on the move with the CNBC app. A lot of strong numbers this morning. Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
I check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe. Welcome to the China Connection. Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
When I was 21, I swore I'd change the world someday.
Back, everybody. Target and Walmart among the retailers set to report second quarter results this week. Joining us right now with a preview is Corey Tarlow. He is Jefferies equity analyst. And Corey, thanks for coming.
Someday.
For having me. We're going to look at these two companies. We always put the big boxes together, Walmart and Target, and figure that they're the same. But when you run the numbers on it, they're actually very different companies. Walmart's got a $917 billion market cap. Target's is $70 billion. PE for Walmart, 40.6. The PE for Target is 20.4. Now, Target's made a lot of progress. That stock is actually up about 47% over the last year versus up 14% for Walmart. But these are companies that you probably have to measure pretty differently when you're looking at them, too.
Yeah, I'd agree with that. And I think one of the foundational differences is really in the mix. So Walmart is 2/3 food. Target's about 50% what they call need-based, but only 25% is actually food and beverage. And so I think in today's environment where you have tax refunds that were up but are now exhausted, you have fuel prices that are now above $4 a gallon nationally, you're starting to see a little bit of stress on the consumer.
How does that show up in terms of what you see in the stores, in terms of traffic, in terms of spending?
So right now, traffic is up at a lot of the value-oriented retailers like Walmart, like Target. We published our preview last week, and we highlighted traffic growth at Target up almost 4%. So clearly people are going to places like Walmart and Target deliberately for the high quality products at the affordable prices. But the question becomes, to what extent do they then decide to rotate into those categories away from discretionary? Because inflation is biting, and especially among like lower income households, they've seen a lot of stress year to date. Higher income consumers have been relatively resilient, but the question I think becomes ultimately, how does this affect trends for the remainder of the year?
And what would you tell people to do with these stocks? Obviously, both of them have been up over the year. Target's seen faster growth in some of these arenas. But again, you go back to that PE ratio. Walmart's got a 40 times earnings. That's not a company that trades like a retailer. They've got advertising, they've got digital, they've got a lot of other things. Is that a fair valuation for that? And where do you think Target is headed after the big growth it's seen to this point?
So despite Target's substantial run, we actually think that there's more opportunity. We think there's more opportunity at both, but I'm highlighting Target specifically in light of the cheaper valuation and the quotient or the ability for change. Because you have new management, and you have new product, you have new processes that they're implementing, and guess what? It's working. For years, Target was kind of slowly bleeding, if you will, and we're starting to see a bit of a resurgence. For example, 50% of their assortment's going to be new this year for back to school. They've added 1,500 new beauty items. They've added 3,000 new food and beverage items. This type of newness is actually translating into traffic. They're not going to beat Walmart on price. Nobody beats Walmart on price. But you have to be different, and you have to be unique, and you have to be new. And for Target, that's working.
So they weren't investing before, and now they are?
That's a great point. So I think the answer is yes. This year specifically, they've actually called out up to $2 billion of incremental investment. And this is a business that they're in a penny profit business. Their margins are razor thin. Today they're about 4%, which is on trough. And you're putting 20 times multiple on trough margins. We like to buy stocks when companies are at trough margin. Historically, they've averaged close to 6. So there's about 200 basis points of margin opportunity. And they're going to recapture a lot of that as the comps come back. You see that flow through better traffic, as shrink declines, as markdowns come down. All of these things, I think, create a very attractive story from an investment perspective.
Okay. Corey, thank you for joining us today.
Thank you so much for having me.
It is just past 7 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Sorkin along with Becky Quick. We're taking a quick look at the futures right now. Dow down just a bit, about 82 points. NASDAQ up close to 200 points, about 196 points higher. The S&P 500 looking to open about 7.5, close to 8 points higher. Let's show you treasuries right now. The 10-year note sitting just at about 4.69, under 4.7 there. The 2-year sitting at 4.16. And then energy prices, of course, we've been talking about the energy ecosystem for quite some time as maybe the barometer of where all this is going. WTI crude right now at 82.87, Brent at 89.29. And join us right now with some more on the markets and some individual stock names. Stephanie Wing, Hightower Chief Investment Strategist and a CNBC contributor. Good morning to you. We've been talking about some of the geopolitical issues this morning, some of the things coming out of the administration as well from over the weekend. And then we've also been talking about some of the earnings we're going to hear later this week. How are you positioning yourself in this particular moment?
Yeah, and it's great to be here, Andrew. I think that even though we took a breather last week in the markets, the economy is still chugging along. The Atlanta Fed tracker for the quarter is running at 5.8% for GDP. I don't think we're growing that fast, Andrew, but I do think directionally we're accelerating from last quarter. And it is because of AI and the food chain. We heard from Cisco and Applied Materials and CoreWeave and Supermicro last week. So that's still working. And the consumer is still actually consuming. And I think you're going to get some really good reports, minus the housing cycle and stocks. But I think you're going to see very good numbers from Walmart and from Target, as you guys were just talking about. But when I listen to what the banks have said, they are talking about a very strong consumer, and that even the low end is starting to do a little bit better. They're lending at about 8 to 10% growth. That's very healthy. We have ISM services that are up 20 consecutive months in a row. Retail sales, if you average the last 2 months, because we did have the pull in from Prime Day at Amazon, you're running like 5 to 6%. So I feel good. Earnings are really growing rapidly. I don't think we're going to see 50% growth forever, but we are seeing a lot of momentum. I am encouraged with not only revenues growing double digits, but also gross margins expanding. And oh, by the way, we're on pace to do $4 trillion in M&A this year, which would be a new record.
So, it's funny. We constantly talk about all these big geopolitical headlines. This morning, North Korea being one of them. We talk about wealth taxes in California. We talk about what's happening in the Middle East with Iran and oil prices. And yet things continue apace. Is there an argument to say that things are so strong that we just should look away from the other stuff?
Well, I think the fundamentals are really strong. And I think not only are earnings good, but they're very broad-based. 10 out of 11 sectors saw growth this past quarter. 7 out of 11 saw double-digit growth. So I don't think you want to fight the economic momentum. And I know, there are a lot of things to worry about in terms of all the things that you mentioned. It's never perfect. And I worry when I don't worry, because that means we're all complacent. But the underlying fundamentals are so strong. I think you want to continue to be fully invested. I think you want to be diversified. I love that we're broadening out, not just seeing it in technology. And I think we grind higher into the end of the year, because I think earnings may not grow at 50%, but they're still going to grow. I think 20.
What do you think on the tech side? We were talking in the last hour about Berkshire Hathaway's investment in Alphabet. We're going to have Greg Brockman, who's one of the founders of OpenAI, on the broadcast at about 8:30 this morning. Obviously, we got into a whole, I don't know if you were watching a debate or interesting conversation about what's going on in the bond market as it relates to some of the financing for some of these data centers. But if you already owned, this is a big question for a lot of people who have owned the Magnificent Seven, do you stay in them?
Yeah. I like some of the Magnificent Seven. I think Amazon is the best position because I think they can win in very, very many ways. Obviously, AWS, and seeing an acceleration to 38% growth from 27% growth the quarter before. That's really good. I think retail sales are running, the businesses are running about 9% comps. Margins are expanding. So I like Amazon. I do like some of the tech set, like some of the newer Mag 7s, if you want to call Micron in there. I've recently bought that down 20% from its highs with $100 billion of bookings between now and the end of the year. I recently bought NVIDIA for the first time. I've been a big fan of Broadcom, but NVIDIA is the cheapest it's been since 2019, and they're growing like gangbusters, like 85% revenue growth. Margins are 75%. They're going to double free cash flow. And I also bought SpaceX, and I have been buying SpaceX. I bought it during the IPO, and it's pulled back about 30%. They had a great quarter. And I think given the CapEx numbers are going higher, but the company talked about seeing monetization within a year. So I'm all right with them spending 65% growth in CapEx. So I think there's plenty to do in technology, but I also like other areas as well. Financials, industrials, we've talked about a lot of the food chain names in AI as well.
Stephanie, I want to thank you, and your mention of SpaceX is a nice segue to our next piece of news. Thanks.
Okay.
SpaceX, in fact, logging a new spaceflight record during the weekend. Back-to-back Falcon 9 launches just 38 minutes apart. That is the shortest time ever between two orbital flights. The first was from Cape Canaveral in Florida on Saturday night. It carried 8 satellites for Globalstar. The second Falcon 9 mission was from Vandenberg, California, with a classified payload for the U.S. Space Force. SpaceX shares are on the rebound since hitting a post-IPO low of $108 a share at the end of July. You can see the stock is up about 30% so far this month. It's now trading above $141. Coming up, we will speak with an analyst about the prospects when Squawk Box returns. The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
This is not just good content, this is good business. It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
This is the greatest show on earth.
Squawk Box, streaming on CNBC Plus. The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Power Lunch, streaming on CNBC Plus.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
From the markets to the cause. Kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
Fast Money is America's post-game show.
Near all-time highs against the S&P.
We want to arm people with the information to make great decisions.
Valuations matter in a higher interest rate environment.
Fast Money, CNBC, streaming on CNBC Plus.
In the kind of blues that rocks you off to sleep. In the whiskey that you sip and never leave. In the promises a quiet man can keep. Burning low and steady through the night. Burning low and steady. Barely any light.
NVIDIA reporting its stake in SpaceX was worth about $21 billion at the end of the second quarter. The chipmaker says that it owns just less than 123 million Class A shares of SpaceX. Currently, its second biggest holding behind Intel. Joining us right now with more on SpaceX is Doug Harned. He is Bernstein's aerospace and defense senior analyst. And Doug, we were just talking with Stephanie Link. She sees something she likes in this stock and has been buying it. You see something you like too. You've got an overweight rating on this stock, an outperform rating, and you raised your price target to $248 after the conference call for the second quarter earnings. What's happening here? What about the bounce that we've seen in these shares? Why don't you just kind of sum up everything you're seeing right now?
Yeah, well, yes, first, thank you. We're definitely also very positive on the outlook for SpaceX. And I think what is so important here is that if they can get the orbital AI, basically orbital data centers to work, we think this is still a very exciting opportunity. And when you look at what happened in Q2, the stock actually declined some in Q2. And I think it was concerns over the amount of CapEx and possibly some to do with lockup expirations. But our view was that Q2 report was actually quite positive. And you mentioned just before about they just completed 2 launches. Those are Falcon 9 launches. What we're really looking for are the Starship launches. But I think what's significant here is that they have even pulled up the time frame in which they think they can get large numbers of Starship launches out there. In fact, if you look at their plan now, it is to be able to have essentially pretty close to 1 Starship launch a day when we get to the end of 2027. And that would be on, say, 5 launch pads. That would be the hope. We've taken a much more conservative view, sort of in our whole ramp rate forward out to 2031. But even with that conservative view, where we get out to around $600 billion in revenues in 2031, which is significantly below what they were talking about, we think this is still a really powerful opportunity here.
Doug, the company's own reason that they say that they're going to be hitting $1 trillion in revenue in 2030 instead of in 2031 was really based on something else. It was based on the pricing for compute power. How do you kind of factor where compute comes in? How important is that relative to the other areas of the business?
Absolutely right. And there are two parts to that. So our assumption had been, first, that the revenues, if you think of the AI revenues as a mix of intelligence and compute, we've been making the assumption that it's predominantly compute. And I think that's still the right thing to do going forward. But what they're finding, and if you look at the recent Anthropic and Google deals, they've been pretty clear that this is not the pricing they've seen in these deals, which are between $30 and $50 to $55 a watt. That pricing is not really a surge price. I mean, they're out in the market and they're seeing pretty attractive pricing opportunities. That led us to take up, actually two things. One is their plan now is to build out more terrestrial capacity, which is more CapEx. And then in addition, they're expecting pretty attractive pricing here. And we've pushed up our pricing expectations some over the next couple of years to reflect that. But I should add, there's one other factor here. And for us, it's a little bit of a wild card because depending how Grok does, and Grok 4.6 is out there, you've got the Cursor deal, you may be able to see a more attractive intelligence product as well, which that's not something we've incorporated, but could provide some more upside here.
What is one thing that would worry you? You mentioned that you're not overly concerned about the CapEx worries. Obviously, you're not very concerned about the expiration of the lockup period for some of these shares. What do you worry about?
Oh, I think our concern is all the way back where we started. It's all the way back to this launch cadence. Because to get to the numbers we were talking about for 2031, which granted are significantly less than the company's, we're looking on the order of 3,500 Starship launches in 2031. So what you need to see is you need to see success on reuse of Starship. We haven't seen it yet. There is the intent on launch 14, which should be, we think, the next few weeks, that launch 14 can go to orbit, can demonstrate that, and that you also may be able to demonstrate the capture of the second stage, which that's what you need to be able to do to have reuse. So this path toward full reusability, that is absolutely central to the AI play here long term and to the kinds of valuations that we're seeing right now and that we expect.
So we've mentioned AI, we've mentioned the launch piece. We haven't talked about Starlink, which is actually where most of the real money is coming from at this moment. And the question, which we keep hearing about Starlink becoming sort of a broad national cell phone carrier, global, carrier direct to the phone. How much of that is in your equation? What do you think the cost of the true build out of that is? How big a market do you think that is? A lot of people have had questions about, obviously, using satellites to get to the phone. Obviously, in big cities, it doesn't work, but maybe if every Starlink antenna all of a sudden also becomes a transmitter nearby, I don't know. I'm just trying to understand how you get there.
Yeah. So I will say the starting point, the Starlink business is fantastic, and this is already a hugely successful business, and likely will continue to be that. We still do see the AI portion as what drives the value. That said, I think you've got to look at Starlink in three pieces. And the first part is consumer broadband. And that market is a huge global market by itself. And one of the things that's exciting here is that you're seeing Starlink as a broadband service. Once you're established with the constellation that's close to 10,000 satellites, you can essentially add customers in underserved areas for almost any price you want. The fixed cost is already there. That market, the enterprise market, which includes government, we've already seen two very important defense contracts go to Starlink.
I think everyone understands that piece of it. I think the big question mark is the consumer wireless.
The D2D, right? The D2D portion, and the D2D one, I will tell you, we are more skeptical on that. They have projected some very high growth rates. You're going to see these new V2 satellites put up. They're more attractive. They have larger antennas, and they're lower Earth orbit than the current Starlink. However, from our standpoint, it still appears there are really big technical hurdles here, and ultimately, we see that the path should be to become an MVNO and to have worked deals with, well, certainly in the U.S. with at least one of the.
Doug, because we got to let you go. What happens if they buy Tesla? Would you advocate for that? Not? And what does that do to the price?
We lost his audio. He was talking, but we couldn't hear him.
Well, we'll have to have him back to find out the answer.
That we will.
Deep cut of a tease.
Yeah.
Coming up, AI video creation platform Higgsfield seeing its valuation pop after Goldman Sachs and Intel-backed that startup company. We're going to speak with its CEO about the latest funding round and what's next in the AI arena. Don't go anywhere. Squawk Box, come right back.
Put it on. That's the honest truth. I put it on for funerals mostly.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
All right, let me tell you about ambition. To me, too much is not enough. You have only one life, so go all out. The only way you're going to accomplish all the big goals is if you have a vision. Find out what you want to do, set the goal really high, and go all out. And then you create another vision, and another vision, another vision. That's being ambitious, be useful. That's what my father always said. Don't just waste this life away, be useful, help other people. This is what this is all about.
Breaking news, market moves. Scott Wapner from the NYSE. Closing Bell. Weekdays streaming on CNBC Plus.
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
Every single story that we pick is a tie back to the markets.
Those sort of revenue streams don't trade at a great multiple.
We want to arm people with the information to make great decisions.
Stock got whacked. I get it. People say that overpaid. I get that.
Fast Money is all about the chemistry. We've been successful for this long because we're a team.
Fast Money, CNBC. Streaming on CNBC Plus.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Smoke up slow and watch it curl above my head.
Welcome back to Squawk Box. So artificial intelligence video creation platform Higgsfield announcing a new funding round that includes Goldman Sachs and Intel. The company received $400 million, pushing its valuation to $5.4 billion. Company's CEO, Alex Marshall. Am I pronouncing that correctly? Is here. It's nice to see you. For those uninitiated, now I have not used the service, but how does it work and what does it do? Because it's a remarkable evaluation for a startup.
Thank you for having me here. So Higgsfield AI is a leading video AI platform, which defines a new way how content, video content, can be made at a fraction of a cost, where the timelines now can be measured in days, what typically took months. And what's also important about the company is that it sits at the intersection of three enormous industries, like creator economy, advertising, and entertainment.
So who are the big clients for this? Who are your customers?
We as a business evolve very quickly. Just a year ago, Higgsfield was primarily used by individual creators. Now most of the revenue actually come from businesses. The most popular use case on the platform is actually social media marketing, and entertainment is the second most popular use case on the platform.
And do you see it continuing that way? I mean, do you believe that marketers will be the biggest users of this, or are we talking about Hollywood?
Absolutely, we see enormous opportunity to grow in the marketing space. Today, Higgsfield is seen as a new platform just to make content more efficiently with AI, but also to drive hyper-personalization. That's what marketers need a lot, because look, I mean, everyone wants to be able to go and tailor their messaging across 100 different ICPs, across 100 different user groups. Now this becomes possible with AI. But what's more important is that direct-to-consumer brands today can go on Higgsfield, use our agentic product like Supercomputer, and essentially use AI to drive more sales with AI-generated video ads.
We were talking during the commercial break about the models that are underneath your model. So explain what your model's doing and then how you're using other models on top of it.
That's a good question. Fundamentally, marketers want to get out compelling content, which drives more sales, more brand awareness. And our goal is to build a layer on top of all other models to democratize access to all of them. Just earlier today, we were talking that Qwen, for example, overcame many other labs by just by usage. And there are probably 25 competitive models out there. We absorb this complexity of using various models and build a layer on top of that. So, and you know, like when we look into like 5-second long video, it can take a prompt of 5,000 words to describe it, and we absorb all this complexity by our agentic layer.
I think it's really interesting that you're working with all these models and you are seeing the horse race up close and personally, kind of watching what happens with this. You said 3 months ago, Qwen wasn't really even on the radar screen. Now it had more than 3 billion downloads that it put there. There's not a lot of loyalty. There's a lot of switching around. Why do companies, why do people switch models so rapidly?
Absolutely. I think in every industry, every professional is essentially looking how they can supercharge their productivity. And this trade-off between cost and level of intelligence the model provides, I think is very loosely defined today. That's why at Higgsfield it's so important for us to actually deliver business outcomes. Today it's mostly used to make commercial quality ads like for Super Bowl or for Olympic Games with AI within a matter of days. But going forward, we are actually envisioning direct-to-consumer companies to be able to sell more products through hyper-personalized video ads.
So here's to me the fundamental question underneath AI. We've been talking about it all morning on the chip side, but the chip side is very dependent on some of the frontier closed models and the valuations of an Anthropic or an OpenAI based on the idea that services like yours and customers like us will end up paying for those services at those rates. Given these other models that you're now using, what do you see happening to an OpenAI or an Anthropic long term?
Personally, we are really excited about the partnership with both OpenAI and with Anthropic. And looking specifically at the image generation space, OpenAI has state-of-the-art model over the last maybe 6 months. And this model is perfect specifically for marketing use cases. For certain other use cases, like for example, image editing and so on, there could be different models used. And that's essentially our job, to pick the best model for each use case. And we definitely also are seeing that like OpenAI models specifically are very good in creativity, which is quite important for creative edge use cases.
But when you look at a complicate 3 or just any of these other models that are much cheaper, do you see that breaking the economic models of these other companies or not? I mean, that's the, if you said they're not going to break it, that's like a all go ahead kind of signal. If you said, yeah, it's going to bring the price of these things down, it just has to, then the question is there so much more volume that makes up on it on the other end? How does this all work?
I wish I could give you a firm projection, but that's maybe a $10 trillion question, right? But looking at just at our data, we're seeing that there are 6 models on the platform which has usage of at least 5%, meaning that the usage of the models on the platform is quite evenly distributed, and there is no model which just wins all of it.
I know we got to run. I have one last question though, and this is the big piece of it, I think. So Anthropic arguably is at least a couple of months ahead of everybody else, I think. You may disagree, but there's an argument to be made that whoever sort of gets to recursive learning, meaning it starts to learn on its own, that all of a sudden it becomes a hockey stick. And instead of being 3 months ahead of the next guy, you can all of a sudden become 2 years ahead of the next guy, in which case that the whole game basically ends and that there's one winner. Do you buy that argument, or is there, you see the whole world very differently?
This is the whole thesis behind Higgsfield. The core challenge with all these LLMs is that they get stale very, very quickly. I mean, the knowledge cutoff is like March 31st or December 31st and so on. Social media and marketing is run on trends. And essentially, we run this harness layer to also ingest a lot of external information about the trends. We run a lot of parallel web searches on behalf of the user to help them to do market analysis and ingest all the trends to the video generation. So that's the whole premise, and I think there is no model which actually provide this level of freshness today. That's why we have to build our own agentic layer on top of other models.
It's a longer conversation. Alex, thank you. Appreciate it. Thank you. We got another AI conversation on the way this morning. OpenAI's co-founder and president, Greg Brockman, is going to join us for a live and exclusive conversation at 8:30 a.m. Eastern Time. So much to cover with him, from cybersecurity to the latest high-profile departures from the company. Squawk Box coming right back after this.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC Plus.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What do the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli, Closing Bell Overtime, CNBC.
In this CNBC Explains, we explore why Asia is leading the global IPO market.
We have a really big year for IPOs with SpaceX, OpenAI, and Anthropic, but analysts are pointing out that there's much more volume here in Asia.
And we look at how South Korea's AI chip boom is spilling into the housing market.
In Korea is a reflection of what people consider as their safety net, as well as a symbol of success.
The show that explains the why behind the headlines, only on CNBC.
I built a legacy on the court, and now it's the moment to build a legacy outside of the court. My main investments are in hospitality, in education, and sports. So I believe that's the future. I see my brand as in a growing perspective, and in some way building this new chapter.
You'd been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it's very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. I knew since a long time ago that I wanted to keep doing things and learning after my tennis career. I have 2 small kids, and that's the most important thing of my life, without a doubt. But I like to work. That's how I understand this life.
I hear that screen door slam somewhere deep inside my mind. I hear that screen door slam somewhere deep inside my mind. Didn't have
Welcome back, everybody. President Trump speaking to Fox News, saying that he is in no hurry on Iran and that they should wave the white flag. He said that there is a back channel with Iran's Revolutionary Guard, and he threatened to bomb Oman if it gets in America's way. That is likely in response to Iran's claim that it is working with Oman on a plan to manage the transit of ships through the Strait of Hormuz. He also said Israel should not be striking in Gaza and that he may endorse someone else or someone in Israel's election. Taking a look at WTI, we are slightly higher this morning, up by about 9 cents to 82.49. We were up by about 5% over the course of the last week. When we come back, former St. Louis Fed President Jim Bullard will join us on the central bank's inflation battle, the future of rates, and the state of the economy. He will join us next. Squawk Box comes right back. If you're watching CNBC, it's because you want to get an edge, you want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I'm thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
Streaming on CNBC Plus.
American soccer legend Landon Donovan. He'll explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
I'd give anything to hear that door slam. One more summer morning. Every sound from back then it goes louder as I age. Screen door slam.
All right, welcome back to Squawk Box, everybody. Check this out. This is a live shot of the National Debt Clock. It's just down the street from our studio. It's about half a block from here. If you see that number, it rises incredibly rapidly. It is very quickly approaching the $40 trillion mark. It was just $2.7 trillion when that clock was turned on back in 1989, but you can see how quickly it is racking up. This clock points out your family's share is more than $683,000 at this point. Concerns about the debt have been something that we have heard from pretty storied investors, people like Paul Tudor Jones, who just said a couple of years ago he wouldn't own fixed income because of his concerns about rising U.S. deficits and debt. Stan Druckenmiller has very publicly talked about some of his concerns about some of these things, too. Jim Grant, who comes on. But we're watching this closely. Ben Emmons points out that since 1970, nominal GDP has expanded by an average of $470 billion a year, which is phenomenal. Unfortunately, the federal debt has climbed even faster, rising at about $760 billion annually over that same period.
I'd love to recommend to our audience, if you get a chance, there's a piece called When America's Budget Will Break Disastrously. It came in the Washington Post late last week. It is possibly the smartest thing that I've read that actually lays out the numbers in detail. 2030 is basically when the inflection point for all of this, because we will move back to basically an economy that was like World War II. I mean, literally, the federal outlays on defense will be at that level. Everything sort of starts to look basically like the 30s and 40s then. And then most importantly, if demographics are destiny, 1 in 5 people will be 65 or older in 2030, and there'll be fewer working age people for every senior American, and 2030 is the year when deaths will exceed births at the current rate, which raises all sorts of questions, by the way, about immigration in this country in terms of what you may need if you want to grow. So it's a fantastic piece because it really gets at what's underneath that number that we're going to be watching.
Joining us right now to talk about this, weigh in on inflation, the Fed's rate path, and much more is former St. Louis Fed President Jim Bullard. He is business school dean at Purdue University. And Jim, I'll just use that debt clock as maybe a jumping off point. $40 trillion is a huge number, hard to get your head around that. But people who have warned about this for decades have been wrong. And in fact, we've actually seen Treasury yields come down pretty substantially over that arc of history from the 1970s until now. What do you think about it? How, as someone who was on the FOMC, do you kind of look at this and say, what are our roles, our responsibilities, what are the levels that would concern you?
Yeah, well, this is Mitch Daniels, School of Business, and Mitch was the director of OMB at one point in his career. He's been a harsh critic of U.S. federal budget policies. So it's all right on. I think one thing that has happened in the last year is that you've got 6% federal deficits, 6.5% maybe projected out. As Andrew was saying, out till 2030 and beyond, and that's a lot. those are really big. And usually, you would say, steady state would be 3%. We'd like to be lower than that. So we've got a long way to go. And if you think divided government is coming up with this election, I think markets are worried about this. That you've really entrenched very high fiscal deficits for as far as the eye can see. And there seems to be no end in sight. There don't seem to be politicians today that want to take this problem seriously and make relatively small adjustments today that would put us on a good track for the future.
I mean, part of the reason that we've been able to get away with this so long has been our GDP growth. I think nominal GDP growth of 9% is a big part of what's been fueling this. How do you kind of measure our GDP growth, what we've been able to accomplish, and whether those deficits can be maintained?
Well, maybe a silver lining of the inflation in 2021, 2022 is it did get the debt to GDP ratio to fall. that isn't a happy way to do it. You're basically partially defaulting on those that purchase securities. So I don't recommend that approach. And the projections are now that the debt to GDP will rise all the way out till 2050. You'll get to numbers like 140, 150% of GDP. And unfortunately, I think for us, the world is willing to lend the U.S. a lot, and so that takes some of the edge off this. But the problem is, if you get into a crisis at some point in the future, then it can be very bad for the U.S.
Let's talk about yields, where they stand right now. The 10-year now sitting just below 4.7%, the 2 years at 4.16. There are a lot of questions about what the Fed will do next, although I guess the weakness in the jobs market and the slightly lower inflation data that we've gotten recently have taken the edge off of some of that.
Yeah, the market probability of a move at the September meeting has now fallen to maybe 25 to 30%. I didn't see it this morning, but certainly lower than it was. It was over 50%. That's based on softer data. Somewhat ironically, Chairman Warsh has not wanted to have policy so sensitively dependent on recent data movements, but that's the way the market operates. I think the September meeting is very interesting here because Chairman Warsh has said he doesn't want to give forward guidance, but the September meeting is the meeting that gives the most forward guidance of the entire year, because the dot plot is, the one dot is for the end of 2026, which is only, 100 days away at the time of the meeting. And so you're giving a lot of guidance about the 2 meetings remaining in the year after the September meeting. And this has been a problem for the committee in the past. It's now looking like the committee might say, stay on hold for the, at least via the dot plot, they will say no change at the median for the rest of the year. And does Chairman Warsh really want to be locked into that or not? I think that's a good question. And there's just one other thing I wanted to say about this, which is the core PCE inflation rate on a 12-month basis is still projected by the committee to come in over 3% at the end of the year. So it was, 3% or higher at the end of 2023, at the end of 2024, at the end of 2025. Now you're coming into 2026, again, over 3%, and you're saying it's kind of okay. Via the dot plot, because the committee's probably going to say they're not going to do anything for the rest of the year. So I think this is really the conundrum for Chairman Warsh. He said we are going to stick with the 2% inflation target. We are going to get back to 2%. How's he going to do that if the committee's not going to make a move?
Yeah, and I guess the whole reason for him not wanting to give forward guidance is to not be locked into anything.
Exactly. And so actually, Jackson Hole, if you wanted to, you could use that to water down the dot plot or eliminate the dot plot. So that's maybe something to look for here. I don't know. It seems a little abrupt to me. I don't know if he would actually go ahead and do that. But this flaw in the way the thing was designed, where you give this heavy amount of forward guidance right at the September meeting, you're basically saying what you're going to do over the next 90 to 100 days. That has been exactly the sort of thing that Chairman Warsh has said the committee should not do. And so we'll see what he says.
Jim, how do you feel overall about the economy, about where we're headed?
Yeah, I think the economy is doing very well. I think the labor market is, certainly solid, in equilibrium, I would say. And so it's really the inflation side of the equation. I actually think it's a good time to fight inflation while the economy's booming. You've got the AI boom.
You mean a good time to raise rates?
Yeah, I mean, why not do it now? You don't want to wait till the economy's suffering and then have to make an agonizing decision. So it would be a good time, I think, for the committee to signal that they want to get inflation down to 2% a little more rapidly than what markets are projecting now. And they don't want it to continue to hang up at 3% on their preferred measure, all the way out to 2027, 2028. If they do that, markets will say that they've abandoned the 2% inflation target, and that's really a problem for the committee.
Okay. Jim Bullard. Jim, thank you.
Sure.
Coming up, we're going to get into all things around the media industry, from Hollywood studio dramas to power players, deal making, and so much more. LightJet Partners founder Rich Greenfield joins us next. Squawk Box will be right back.
One hour of added insight every morning doesn't just add up, it compounds. One extra hour every morning delivers exponential value and a pure investing advantage. That's the compounding edge. The all-new Morning Call.
I'm Morgan Brennan, and this is your Morning Call.
CNBC.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC Plus.
China is the world's second largest consumer market behind the US. In 2025, the country's total retail sales of consumer goods exceeded about 50 trillion yuan, or about $7.2 trillion, up by 3.7% year-on-year. With a population of 1.4 billion people, the market has long been a cash cow for global brands. But today, success is no longer a given, with some Western brands struggling and even scaling back operations in the country.
When you think about live streaming and social media, the hottest new thing is going to bubble up overnight, and you have to have it the next day.
The number one thing that you will see is how little loyalty Chinese consumers are because of the brands and how fast they innovate and how quickly they push things out. Consumers are very used to being hit by new concepts, new designs.
So what does it take to win in China?
Like a ghost dressed up in white. Open every window, but the scent won't take its flight. I found a bottle in the bathroom, half an inch of amber left.
Last week saw a lot of major media headlines, including David Ellison's battle to get the Paramount Warner Brothers deal done. I want to start with that. Doing this right now is Rich Greenfield. He's the co-founder of LightJet Partners. Rich, good morning to you. Let's talk about the state of the state. What happens to this deal, since so much seems to be revolving around it, and whether you think Paramount is going to ultimately be based in California?
Well, Andrew, I think the real thing to think about here is you're at an impasse. Paramount wants this deal done sooner than later. The government is obviously in no rush, or I should say the governments. You have 12 states suing to block this transaction. Paramount, not just, the ticking fee, obviously, is something to think about. But I think the bigger thing is Paramount wants to get this deal done because they want to integrate. They sort of have started, obviously, making changes at Paramount. But if your plan is to buy Paramount and Warner Brothers, there's a tremendous amount of cost cutting and duplication that you have to deal with. And so you're sort of in this limbo phase. And I think the problem is you've heard from the AG of California. They want structural remedies. Paramount keeps sort of talking about behavioral remedies. It's almost like they're talking over each other. And I don't know, I don't see what changes this until Paramount, most likely, because they're the one in the rush, until Paramount comes to the table with some meaningful structural remedies.
So, Rich, let's talk about what those structural remedies could be. One of the ideas that's been bandied about is, could they stand up effectively a competitor on the studio side? Are there assets with which they could contribute to, or effectively sell rather, to somebody else? Maybe a Sony, maybe an A24. Could you get some private equity firm involved? And is that something that would be attractive enough? What do you have to do on the cable side? Are there channels that you'd be willing to sell? They've said CNN is not on the table.
So here's the problem. The fundamental problem of this deal is there's sort of three major assets that you're buying, right? You're buying HBO Max, which is their streaming platform. You're buying a major film and TV studio, and you're buying a large group of cable networks. There is no easy way to not buy another studio and still get a lot of the benefits. So could you peel off some of the properties you mentioned to private equity or an A24? Could you take something like the DC Comics franchise or the Harry Potter franchise, or the biggest movie, one of the biggest movies of the year coming out in December is going to be Dune? Could you take the Dune franchise? So maybe you could take a chunk of IP and literally sell it to someone along with one of the two lots, both Paramount and Warner Brothers. Now, there's a tremendous amount of the cost savings disappear if you do that, Andrew. And so would Paramount even be willing to do that? I don't know. And the challenge here is going to court with you already have a judge that did not seem terribly friendly to Paramount. The danger is you get a negative ruling and you don't have enough time before this deal drops dead in June 4th. And so do you propose something that's painful, like getting rid of some of that IP? Could you take a group of cable networks? Forget about just selling CNN. Could you take the Turner networks, which include CNN, but TBS, TNT, and just basically take a whole batch of cable networks? But therein, Andrew, lies one of the bigger problems.
Those are cash machines at the moment, which I always thought were required effectively to pay down the debt. Meaning the reason you were taking these linear channels to begin with was not a strategic rationale, it was a financial rationale. If you don't have them,
it gets worse than that, Andrew. Andrew, first of all, you're 100% right. Wait, you're 100% right. But let's just take it one step forward. Let's just say Larry Ellison could cure that by putting in more cash, right? Like, there's always a way to cure leverage by putting in more cash. But the problem you would run into is you'd be buying these things for, 10 times, if you think about the blended multiple of this transaction. And look at the Hearst transaction. Hearst just bought Disney's half of A&E. Or sorry, they just bought out Disney's half of A&E. And they did it, at 3.5 times EBITDA? So, this would be a very, very dilutive transaction. Not to mention what you're talking about, Andrew, which is you sort of need the cash flow to pay down the debt of this combined transaction. So this is the problem. This is why Paramount wants behavioral remedies, because they need all of these assets to make the math work.
Walk us through. I know we only got 2 minutes. What would you do if David Ellison was sitting here at the table with us, and you could say, David, I have an idea for you. This is what you got to do. What would that be?
You take all of the Turner nets. So you take TBS, TNT, and CNN, and you put them into a separate company and you spin them off. Maybe you put it up for sale and you take the dilution. Probably just try to replicate the split of the company, sort of in the way that the Warner Brothers was trying to do even before this. And so you're basically buying, you're not buying as many of the assets that you thought you were buying. And then you have to take a group of IP, as painful as it is, but take a group of IP. I don't care whether it's Mission Impossible and Transformers, or whether it's, Harry Potter and the DC franchise, but you have to find some meaningful studio assets. Otherwise, you're going to end up in court.
It sounds like a pipe dream. I just don't know if they'd be willing to do that.
What's the alternative?
I don't know. The question is, do you think that they would be willing to walk away? That's my final question for you.
With they have $7 billion or 7 billion reasons not to walk away, Andrew. to pay a break fee of $7 billion after you've already paid a $2.8 billion break fee to Netflix seems crazy. Now, are there many other things that Paramount could do in terms of investing in themselves to get to scale? For sure, it'll take longer. Ellison always thought this was the only way to scale up quickly. And so I think they will, when push comes to shove, if they can't get the governments to engage in a behavioral remedy settlement, I do believe sometime between now and March, I don't know when, but some point, they're going to come up with some meaningful structural remedies, because I think going to court feels like suicide.
Rich, thank you. Appreciate it. Talk to you soon.
Thank you.
All right, it is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Andrew Ross Sorkin. Among our top stories this morning, President Trump threatening to bomb Oman if it gets in the way of the U.S. blockade of Iranian ships in the Strait of Hormuz. The president making those comments on Fox News. He also said he's in no hurry on Iran and that the country should wave the white flag. China's economy slowing in July. Consumer spending stalled and urban investment contracted at a faster pace while unemployment ticked higher. And we're watching shares of L3Harris. The company's chairman and CEO, Chris Kubasik, is out after the board said it became aware of certain conduct that was not consistent with the values of the company. It did not elaborate on what that conduct was. The company has appointed insider Sam Mehta as CEO effective immediately. You can see that stock is off by about 3.33%. Let's get a check on the oil markets right now. We've been watching this morning, and right now it looks actually flat for WTI. It's trading at $82.36. Brent is up by about 28 cents to $88.80 a barrel. Joining us right now with more on the energy prices is Clearview Energy's Kevin Book. Kevin, good morning. Good to see you this morning.
Good morning.
So what do you make of oil prices? We're up about 5% over the course of the last week, and it does not look like there is any resolution on Iran in sight.
It does not. Last time I was here, we saw risk to the upside, so I don't want to sound like a broken record. However, we'd expect a slow upward creep, even if there isn't more kinetic engagement as inventories thin. This would be, I guess, the day 60 of the Memorandum of Understanding if it were still intact or functioning. But it's closing in on day 180 pretty soon of active kinetic and economic conflict. And last week we had a big rhetorical back and forth over who controlled the strait. I think the real question isn't necessarily more important who controls it, but how much oil is going through it. And it still doesn't appear to be flowing as it was.
I'm actually surprised that oil prices aren't higher, given all of that. What keeps things at bay? What keeps prices down, relatively speaking, from where they could be?
Well, I think we could get them higher with kinetic engagement. Obviously, that's happened in the past. And they might not stay there because when we look at the oil price, we're not really looking at the overall scale of the shortage. A lot of that's borne out in the products prices. So if you look at the gas oil price in Europe or even the diesel price on the road here in the United States, you can see that it's finished fuels in short supply where we're really feeling the shortage. The irony, of course, is that if oil isn't going to refineries to be refined, then you get that skew. You get more rise in the refined products and fuels prices and not as much increase in the crude price because it's not all being consumed as it was.
Where are we just in terms of diesel prices, in terms of jet fuel prices, both in terms of how far we've risen, but also what the inventory situation looks like?
I mean, we're $1.50, $1.75 diesel price versus pre-war and a year ago, sort of comparables. And, that's a pretty significant inflationary concern as we look out at both the harvest and the agricultural use of diesel fuel, as well as the transit and transportation of freight going into the holiday season and other aspects of a consumption-based economy. So pretty significant and not obviously going to abate until there's more access to the refined product, more operating refineries in Russia, more exports from the Middle East.
So you're pointing out Russia. It's not just the Middle East that's the problem here. It's the increased activity between Ukraine and Russia that has taken out some of those very refineries that you're referring to. Is that something that can be fixed? Or, look, that's a situation where a lot of that is outside our control.
Yeah, there's another energy war going on in Eastern Europe, and there's two aspects to what's going on with regard to those refineries. The first, obviously, is that Ukraine has become more effective in targeting them with drones and has now struck a lot of them, particularly the ones in near range. But the second is, if you go back to the Biden administration, the sanctions put in place were designed to slowly degrade Russian petroleum production and revenues. But that slow degradation means that it's difficult for Russia to source the materials to repair some of these refinery components, particularly when the high complexity features of the refineries are being more effectively targeted by Ukraine. So that prolongs outages.
You know, Kevin, I'll come back to this question. With all of these concerns, this wall of worry, markets have maintained some composure, I would say, the energy markets, given everything that's happening. We have talked recently about how China has been not buying as much energy, and that's been a big part of it. What else is happening that kind of describes why this isn't a bigger flashpoint from a supply-demand scenario?
Well, there are two principal shock absorbers that have been taking some of the risk out of the market. The first, as you mentioned, is China, and the net reduction in imports on the order of 4 to 5 million barrels a day from pre-war levels has been a very big part of balancing things. But the second is also the strategic reserve draw that was coordinated by the International Energy Agency in March. That coordinated action of more than 400 million barrels is now, by the IEA's own reckoning, more than 75% just allocated into the market, distributed into the market. And so for that reason, as you get closer to the end, you also tend to see a flow slowing down. The US SPR, for example, over the 4 weeks through August 7th, the most recent data point on record, is averaging about 600,000 and change barrels per day of outflow, which is about half of where it was at the end of May. So we're petering out on strategic reserves, and there's questions of whether China will continue to be the shock absorber it was.
Kevin, I want to thank you for joining us today.
Thanks for having me.
Coming up, stocks on the move, including a couple of names in the chip sector. Squawk Box coming right back after this.
So faded.
Asia trading day begins. Join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region, covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Powerline streaming on CNBC+.
From the markets to the cause. Kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues.
My father's name.
Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
Poured his whiskey neat for 30 years. Said we cut from the sea. He looks at me sometimes and calls me by my daddy's name. He looks at me sometimes and calls me by my daddy's name.
Squawk Box. Here are some of the stocks on the move this morning. Let's start off here with shares of Micron. That stock up nearly 3% pre-market following a Wall Street Journal report that Commerce Secretary Howard Lutnick urged Apple not to buy memory chips from China. Apple has been testing Chinese memory chips to help alleviate the supply crunch. Micron shares up some 250% this year amid continued demand for memory. Shares of Intel up 1% after CEO Lip-Bu Tan disclosed purchasing 105,000 shares at $95 apiece. NVIDIA also disclosing Friday that it has a $30 billion stake in the company. Intel also likely getting a boost from Lutnick's comments as the broader chip and AI trade moves higher this morning. Finally, shares of Argentex jumping after its phase 3 study evaluating its experimental drug Vyvgart met its main goal. Vyvgart treats adults with an autoimmune disease that causes muscle inflammation. Patients who took the drug showed statistically significant improvement over a year versus those who took the placebo. That stock up 11%. Andrew?
Okay, thank you for that. Coming up in just a moment, we're going to get you ready for the trading week ahead. And then later, we're going to be joined by OpenAI co-founder and president Greg Brockman, a conversation you do not want to miss. Squawk Box, we'll be right back after this.
That bartender finally goes. Who's gonna carry?
You can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170-plus global markets. The best informed investors choose Interactive Brokers.
The Exchange, streaming on CNBC Plus.
You know, for me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. You want to learn more about it. And I think CNBC allows our viewers to fulfill their passions. There's no doubt that the people who watch us care. I am very much focused on trying to land interviews where there's something at stake and asking them fair but tough questions in which their answers are important. I could not imagine covering
with
anything
a worn out sound, like a tired man still drifting around. Oh, radio playing from the room inside. Songs about lovers who never survive. And somewhere far beyond the riverbed, another lonely night begins again. Delta moonlight blues rolling through my veins like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like cold scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. cheap motel glowing beside the road. Another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Oh Lord, let me roam till this tired soul feels home. Every road I choose turns into these blues. Cold wind whispers through the motel screen about all the things that could have been. Train tracks shining underneath the storm, like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like a searching for a place this heart can call home. Rain falls gently on a Delta town tonight. Street lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pine wood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Delta night, rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere. keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. Every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside, like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul, like a dark old river, too deep to control. Oh Lord, hear my prayer floating through into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads midnight blues, hold me till the dawn, like the fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight, silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair, southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose gold regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the riverbed, another lonely night begins again. Delta moonlight blues rolling through my veins like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blue, heavy as the rain, like old scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the lane. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Feels home. Every road I choose turns into these blues. Scream about all the things that could have been. Train tracks shining underneath the storm, like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more Neon whiskey road, stretching through the night. gently on a Delta town tonight. Street lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pinewood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with the tide sound, like a lonely soul still wandering around. Every broken memory comes alive tonight, under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Delta night, rusty street lamp barely shining light, old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into Silver reflections dancing in the pale light. Old wooden poles creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Rain clouds gather slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the river bend, another lonely night begins again. Delta moonlight blues rolling through my veins, like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like cold scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Wind blows softly through the southern trees, like ghosts whispering old melodies. And every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Home, every road I choose turns into these blues. Cold wind whispers through the motel screen about all the things that could have been. Train tracks shining underneath the storm, like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon whiskey road, stretching through the night, like a lonely river disappearing out of sight. Every dream I lose, every time this heart can call home. Rain falls gently on the Delta town tonight. Street lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pine wood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. this old blues bar. Streetlights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight, under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Delta night, rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. river keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside, like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul, like a dark old river, too deep to control. Oh Lord, hear my prayer floating the storm, like tide goes trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads, midnight blues, hold me till the dawn, like a fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight, silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair, southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Gather slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the riverbed, another lonely night begins again. Delta moonlight blues, an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like cold scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Oh Lord, track shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon Whiskey Road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Rain falls gently on a Delta town tonight. Streetlights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pine wood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. the Delta night. Rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. Every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside, like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads, midnight blues, hold me till the dawn, like a fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight, silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair, southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. ever slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the riverbed, another lonely night begins again. Delta moonlight blues rolling through my veins, like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like old scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance. into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Feels home. Every road I choose turns into these blues. Scream about all the things that could have been. Train tracks shining underneath the storm, like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more stretching through the night, like a lonely river disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Streetlights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pinewood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Streetlights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering comes alive tonight under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Delta night, rusty street lamp barely shining light, old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender in these midnight blues. Delta moon hanging low above the river tonight. Silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Gather slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the riverbed, another lonely night begins again. Delta moonlight blues, rolling through my veins like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like cold scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the lane. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Oh Lord, train tracks shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon Whiskey Road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Rain falls gently on a Delta town tonight. Street lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pine wood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing in time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. the Delta night. Rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. Every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside, like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads, midnight blues, hold me till the dawn, like a fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight, silver reflections dancing in the pale light. Old wooden poles creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair, southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the riverbed, another lonely night begins again. Delta moonlight blues rolling through my veins, like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts this day. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blue, heavy as the rain, like old scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the lane. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance. every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Feels home. Every road I choose turns into these blues. Streetlights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pinewood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Tonight, slowly washing through, like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Streetlights shimmer from passing cars. Bartender pouring another round slow, as old train whistles echo below. My guitar hums comes with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight, under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Delta night, rusty street lamp barely shining light, old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These cross crossroads after midnight, keep calling out my name through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. understanding in these midnight blues. Delta moon hanging low above the river tonight. Silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Rain clouds gather slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the river bend, another lonely night begins again. Delta moonlight blues, rolling through my veins like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like old scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. across town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, very southern water, where broken dreamers go. Oh Lord, hear me tonight, underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies. And every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Home. rejection.